going to be a bit of a positive day, a spot of green, and a very exciting day for us in terms of the programming we have lined up. So, just to set the premise of what we're doing, today is, of course, the 75th birthday of Prime Minister Modi, and we thought we will mark it by talking to some of the biggest names in corporate India, economists, market gurus, just to talk about the impact that Prime Minister Modi's governance has had over the economic and political landscape. Some great names on the show today, guys.
Yeah, great names on the show today to mark, a very important day per se, and something that we will hear from everybody about what the policies have been. But I dare say, guys, it's a very interesting gift for the market sentiment that has come in on PM Modi's 75th birthday, right? Because you see, quote-unquote, the bromance brewing and strengthening further with Donald Trump giving that wish and calling PM Modi and PM Modi reciprocating warmly. That whole set of the exchange that came in on social media was quite stunning.
Yeah, that post, I think we should actually pull that post up that you're talking about as well, where Prime Minister Modi thanks President Trump for the wish and says that we will work together for the bilateral trade, etc.
Yeah, absolutely. And I think you did see some green shoots that started in yesterday's session in the second half when the rally picked up. Companies, sectors which probably will see a positive impact started seeing that buying interest. And I think not a better gift, not only for Prime Minister Modi, but for India Inc. as a whole.
Yeah, I think the sentiment certainly improved.
Yes.
So keep an eye out for that for sure.
Yeah. I think we should just go through the guest lineup very quickly and just give you a sense of who all we have. We're going to be speaking with Chris Woods today. We have Samir Arora. We have Prashant Khemka. We have a whole set of market voices as well today. We have Amisha Bora, who will come in and give her thoughts. Raveen Kulkarni of Axis Securities PMS will be there as well. On the corporate side, we have Nadir Godrej, Sanjeev Goenka, who will be speaking with us, Sudarshan Venu from TVS Motors. On the policy side, Arvind Panagriya, Sanjeev Sanyal. So you will be hearing a lot of voices as we unpack a decade of change, challenges and opportunity. We're down to business this morning, and let's just take you through what global markets have looked like. It was a weak day of trade in US markets ahead of the crucial Fed meet. And just take a look at the indices, all down in the red at the end of it. I think the S&P 500 came off its highs quite sharply, and the Dow also 0.25% down. Now, all eyes, of course, are on the Fed outcome later today, and that becomes a big story for us tomorrow morning. You will see what the Fed has actually done later tonight, India time. A 25 basis point cut is widely anticipated. In fact, all the polls are talking about, I think there's a 4% chance for a 50 basis point cut, but pretty much everyone else has penciled in a 25 basis point cut by the Fed in this policy. I think what the street will also see is whether there is any dissent in the Fed committee. Remember, in the last round of these meetings, two members of the FOMC, for the first time in decades, had a very different view. That has rarely happened. I think the street will wait to see if that continues. You will also see the dot plot, which is a visual representation, to put it very simply, a visual representation of what all the members of the Fed committee think and where they think interest rates are going to go. So that's an important indicator about what happens next and where the direction is. That will be watched out for. So before all of this information comes in, Treasury yields have shown little movement ahead of that meeting. The 10-year was at 4.03%. Oil prices, though, have inched up as Ukraine is targeting Russian crude supplies. There was one estimate that 300,000 barrels worth of oil were destroyed in the attacks on Russian facilities that Ukraine has been mounting over the last couple of days. So Brent was above $68 a barrel. Let's pull up Asia very quickly and show you how Asian markets are performing this morning. Pretty mixed. Hang Seng up in the green, nearly 1% up. Shanghai about 0.25% down. Nikkei also mildly up in the green. The implied open for India, let's see where we're starting there, because bulls seem to be inching their way back. 60 points up possibly is not half bad with the kind of range-bound markets that we've been seeing here.
Absolutely. And the markets have been range-bound. Yesterday's session, we did open slightly on a flatter note, but the pickup was spectacular. So if you have to look at what's happened in terms of yesterday's session, we've traded higher in terms with Asian peers as well. Investors are taking comfort from progress in the US with regards to trade talks, and markets are awaiting the US Federal Reserve's policy decision for further cues. Now, in terms of Nifty, it's continued to move up with a choppy movement. We closed in the green for a sixth consecutive session, advancing by almost 170 points, ending towards that 25,240 mark. In fact, Sensex nearly added 600 points to yesterday's rally, settling at around 82,380. Broad interest has been seen in terms of Nifty Auto, real estate in the latter end. IT also started to see some interest as well as media. In fact, there is some strong rotation and that's happening across high beta sectors year on. If you talk about FMCG and healthcare, both of these sectors have actually showed relative underperformance. There has been profit booking at higher levels. This is mainly in terms of FMCG and healthcare. If you talk about broader markets as well, a healthy participation is what you've seen. 0.5% up move in terms of the mid-cap index and nearly 1% in terms of the small-cap index is what we saw. You're seeing continued strength that's building up in the mid-cap to the small-cap space as well. Let's quickly look at the Nifty gainers and losers, and then we'll go through the volume buzzers in trade today. Kotak Mahindra Bank, L&T, M&M, strong moves there. L&T did see an order win. Kotak Mahindra Bank, we did give you the bull and bear case scenario. You can watch it on social media yet again. If you talk about the losers as well in terms of yesterday's session, mainly it was Tata Consumers, Shriram Finance and Asian Paints, companies driven from the consumption side as well. And Shriram Finance, as we know, the kind of CV financing portfolio it has. If you talk about the volume buzzers in trade as well, a lot of build-up that did happen in terms of Star Health, TCI, V-Guard. No major moves, but the volumes were pretty healthy on these ones. Reddington was a highlight, 20% up move. Aegis Logistics on the back of two brokerage notes saw some buying interest and a green lamp. If you talk about the FI, DI data as well, DIs have continued the trend, but in terms of yesterday's session, a good number coming in, 1,500 odd crores. FIs, again, were buyers, but a small quantum worth around 300 odd crores is what they've bought. So overall, the setup since where we left off in markets yesterday looks pretty okay. Handover from US, Neera, just slightly on the weakish, stance, but what comes out of the Fed is probably going to give us some bit of a tailwind. And your trade talks is what you're talking about right now.
Most certainly. So actually, just a couple of global pieces as well. I mean, we just briefly spoke about it. I don't know if you put it out on the screen, but we should, if we haven't already, that the bromance is brewing, right? Prime Minister Modi, President Donald Trump saying that I wished him a happy birthday. He's doing a tremendous job. Narendra, thank you for your support on ending the war between Russia and Ukraine. So I think that just kind of stood out. And of course, Prime Minister Modi, as he's done last couple of times, very warmly reciprocating the feelings from President Donald Trump. So I think that is one key thing. The other key thing is taking a leaf out of what Tamanna was saying, that 25 basis points for this policy, yes. But look at the BOFA Fund Manager Survey. This is the Global Fund Manager Survey by Bank of America. And look at what they have said. I think so a couple of points that stood out for me. That one, it's the most bullish fund manager survey since February 2025. Cash levels for global fund managers are lower than 4%, and the equity allocation is at a 7-month high. This is quite something, and this is of course global, not necessarily India, but just shows you the strength that stays in. The key lines are 2 or 3, that there is a big jump in global growth optimism because the recessionary trade war risks have ebbed, part one. And 47% of the respondents expect the Fed to deliver 4 or more rate cuts in the next 12 months. I think that's the other big thing that came out of that survey. Now, very quickly, the trade setup, therefore, for the day today, you expect that this global optimism, because of Fed rate cuts, because of the trade deals or trade tariff-related issues getting resolved or showing signs of resolving, the global sentiment is constructive. But all eyes, as Hiral said rightly, are on the FOMC commentary, not necessarily the decision, unless, of course, the decision is 50 basis points. Then, of course, the tide changes a little bit. I think our markets, because they have, the broader markets, because they have moved up 8 days on a trot, and the rupees recovered for 3 days on a trot as well, I think all of that is a positive. Or for today, one would reckon that the textile companies in particular, but auto anchors, maybe some of the others, could well be in focus as as a further building of the bonhomie, if you will. So keep an eye out for that bucket. It tends to flare up, it tends to cool off a little bit as well, but for a day trader, these are good things. So keep that pocket in mind for sure.
You know, you spoke about, Neeraj, what President Trump has posted. I'm going to highlight what Prime Minister Modi responded as well, so that the whole circle of the bromance is complete. But yeah, I would say all signs point to a resolution on India-US trade talks for various factors. So this is what Prime Minister Modi responded. He said, "Thank you, my friend President Trump, for your phone call and warm greetings on my 75th birthday. Like you, I'm also fully committed to taking the India-US comprehensive and global partnership to new heights. We support your initiatives towards a peaceful resolution of the Ukraine conflict." So I think what was required at this point in that relationship was India to be forceful that we want a resolution to the Ukraine conflict, which we always have, and not have this pitch that we are at any one side of that conflict per se. So that's important. The Commerce Ministry statement last evening is also important, which says we're acknowledging the enduring importance of bilateral trade between India and the US. Discussions were positive and forward-looking, covering various aspects of the trade deal. It was decided to intensify efforts to achieve an early conclusion of a mutually beneficial trade deal. This is, of course, the US trade representative who is in India and has been speaking to his Indian counterpart. So that meeting concluded yesterday. I think that's something that the markets need to factor in, because you're already seeing that come in, because the Nifty did stage a strong rally on Tuesday. Nifty Bank also closed above the psychological 55,000 mark for the first time in over 3 weeks. This indicates that the bulls may be back and are firmly in control. Analysts maintain a buy-on-dip strategy with expectations for the index to continue its upward trend. Immediate resistance, I would say, is near the July highs. Look at the 25,250 band closely. A decisive move above this to 25,300 could clear the path for the next hurdle at the July 9th high of 25,550. Immediate support for the Nifty now at 25,100 with a firmer support level at 25,050. For the Bank Nifty, key upside resistance at 55,300 and 55,700. Immediate support at 54,400 to 54,500 range. So those are some of the levels that you should look at today. But let me take it across to Puneet for the derivative setup this morning.
Well, thank you for that, and very good morning to you as well. We've largely seen, yesterday a very, very interesting session being played out, because over the last 1.5 hour of the Nifty, we saw actually more buying come into trade, and hence we up over the psychological level of 25,200 now, and as you rightly said, 25,000, 25,100 does become the near-term support level for now, but it'll be very important if we can maintain that. A lot of it for the Nifty Bank as well has seen a lot of buying over the last week or so, possibly in anticipation of a Fed rate cut that might happen today. It's a big day to say the least. We've seen that a lot of positions got squared off in the expiry yesterday. We've seen open interest also down for both of these indices because of that. But largely a very important day to say the least. We've seen buying in index as well as Nifty options because of that. The foreign investors index long position, which was roughly around 11.7% yesterday, has increased now to 12.44, while still lower compared to what we've seen in the month of May and June. It's still an improvement from roughly 8% that we were a couple of weeks ago. So that'll be one to watch out for. Could see positive momentum continue from here if we get that rate cut today, which indications are that we will. In terms of open interest distribution, both calls and puts, we've actually seen an increased interest in 25,200 from put investors, which could mean that this could be a near-term support as well, as we highlighted, and with positions largely built between 25,000 as well as 25,200. All three levels become very important for the market in the near term. For the calls, we've actually seen a deceleration in terms of levels at 25,500 and increase at the 25,200 level, which indicates that we're not seeing a lot of positive momentum from here, but that level seems to be one which both call and put investors seem to be liking for now. Finally, in terms of stocks, open interest gainers, we've seen a consistent trend of a depressed open interest change, and hence, there are no indications of a movement which is consistent in a lot of stocks, and that seems to be what's happening right now in the open interest gainers for about a week now. There's a similar picture in open interest losers also, where the OI change is very minuscule to form a trend. So we will be relying on a lot of individual names backed by news flow amongst other corporate action that they might do. But overall, a lot of it hinges what happens tonight as well.
Okay, thank you for that. About 58 points up on the Nifty implied this morning. Let's talk about stocks this morning. And first three on my watch list, I'm starting off with Amber Enterprises. They've opened their QIP issue of about 1,200 crores. And now, why is it a thumbs up? Because this company has been running a hot streak in that sense. The approved floor price is about 7,790 per share. It's at a discount of about 6% to the last current market price. I want to see if we can pull up the 1 month chart for Amber as well, and look at the kind of gains that you have been seeing in Amber in just the last 1 month. So I think this will be well received. Dreamfolks, on the other hand, this is a big blow. So an announcement late last evening by the company to the exchanges saying that they're discontinuing their domestic lounge services. The company's domestic airport lounge service will be discontinued to their clients. Company claims the impact of the same will be material. Yes, it will. Other domestic services and global lounge businesses will continue. But here's the catch. As far as their airport lounge mix is concerned, 77% of it is domestic and the rest is international, and that 77% chunk is what they're shutting. Dependence on lounge services, that's national and international, is 93% of their revenue. The other 7% comes from non-lounge services. So, I mean, if you look at what management commentary was earlier, they were targeting 240 lounges by 2040. Services other than India Airport Lounge has increased from 5.8 in FY24 to 6.7% in FY25. But there is no going away from what this will do to the stock today. TFS, recently listed travel and food services, terminated lounge service agreement with them in July and closed certain programs for Axis Bank and ICICI Bank. So if you're familiar with what this company does, when you go to an airport lounge, they were sort of the intermediary, and technology or the requirement of that kind of service seems to have just evaporated. You're going to see the impact today. Bellrise is the third one that I'm looking at this morning, and this is on the basis of an Investec view on it. They've initiated a buy. This is also a relatively recently listed company. In fact, we should pull up what the gains have been since the listing price. But Investec has initiated a buy with a target price of 185 rupees. So quite a steep uptick from the current market price is what Investec sees. They say they're primed for growth and re-rating. The two-wheeler business is on strong footing, increasing focus on four-wheelers as well, group simplification to drive re-rating. You could see some action on Bellrise. Issue price was 90, already 61% up. And Investec is looking at $185 on this. I mean, this is where, you know, when you go back and look at those IPOs that was good to get in and not move out on listing pop, I think Bellrise is going to make that cut.
Absolutely. And you have seen that uptake over the last couple of sessions, and that buying interest that has come in on a Bellrise as well. In fact, on my list, the first one is Mahindra Lifespace. This is on the back of the redevelopment project that they've won. These are two housing societies in Chembur, spread across 2.6 acres and 1.8 acres respectively. 1,700 odd crores is the potential that these two projects have, and this actually strengthens the company's Mumbai redevelopment pipeline in June. In fact, apart from this, in Mulund, in the month of June, they also won a project, and that had an estimated potential of 1,250 odd crores. Yesterday, real estate was buzzing in trade. Probably that uptick could continue in today's session as well. Secondly, a small company, but Ashapura Minechem. The overseas arm has executed a long-term agreement with China Railway. In fact, they will be jointly developing a Bofa bauxite deposit, and China Railway will support Ashapura in its mining operations, local logistics and port handling and infrastructure services. The company will oversee sales and marketing of bauxite and provide the technical support. Yesterday, the stock ended lower. Probably you'll see some bit of interest coming in on this one. And very lastly, Eureka Forbes. The stock actually saw some good gains in yesterday's session, ended at the day's highest levels. You have Nuvama, which has initiated a buy rating with a target price of 700 on the counter. They are expecting a 14% revenue compounded growth, but if you talk about the EBITDA and the PAT compounded growth, that is 24% and 31% between FY25 to 28. They're expecting a 300 basis point operating leverage, which was around 530 basis points between FY22 to 23. And they're saying that electric water purifiers and vacuum cleaners is where the secular growth story has tailwinds. In fact, the company is going to be the biggest beneficiary. In terms of after sales, deeper engagement is what will open up operating earnings flow for the company. And they're seeing a strong compounding opportunity with a Eureka Forbes. So don't be surprised if that positivity continues there.
Yep, most certainly. So, and you know, brokerage notes are very interesting. There is this Investec on Bellrise. There is the one that you or Eureka Forbes. I think Nomura has initiated coverage on Prestige as well, with some 17-18% upside. There is a Goldman Sachs or BofA on Marico, wherein they have upgraded. So a lot of brokerage notes which come into focus today. But a couple of stocks, just two stocks from my end, and one of them, of course, is Gujarat Fluorochem, wherein promoter Devansh Finmart is going to sell stake, a small block at about 5 or 6% discount. You know, keep an eye out for Gujarat Fluoro today. There might be a bit of a downtick today. This stock is not necessarily also done very well. Remember, chemical companies are not in flavor per se. So that is one on my list. You also, of course, want to watch Prestige Estates, and then right here on your screen, right? About 13 lakh shares at 3,500 rupees per share. So keep an eye out for that. Prestige Estates is the other one, 17% upside on that one. And Vedanta has some optimism around it, so keep an eye out for that stock. Metals per se could look okay. Let's see if Vedanta has some more upsides to itself today. So 2 or 3 names that you want to watch out for, and then 2 or 3 key listings as well.
Absolutely. And I think no better than Tamanna to tell us about Urban Company after the conversation that she's had, because 109 times is the kind of subscription that we've seen on an Urban Company. With that, if you talk about the valuation, I mean, you're talking about almost 12.9 times, and this is the price to sales. And when you talk about platform and internet companies, average valuation is around 8 to 9 times. So it's still on the expensive side.
Yeah.
And a subscription of 109 times.
You know, so just to talk about the response, I actually asked Abhiraj that the response that you got, you know, what did you think? He's like, it's beaten our internal expectations. I don't think they penciled in.
I'm sure 109 times is not
is
something.
not what they penciled in at all.
Yeah,
and
strong.
you know, I think people are underestimating the impact that an Insta Help and that entire space is going to have, because that sort of formalization of domestic help segment is going to be quite different. Now, so simply as that frenzy takes over, just listen in to a bit of that conversation.
Where did the initial capital come from? What was that journey and process like?
The three of us as founders, we committed capital from our personal savings. Lasted us about a year or so. So we started in 2014, and then I think 2015, early 2015, we realized that, okay, the space is heating up, and it's going to take like meaningful investment. So we should raise capital. We met Elevation Capital at that time, and back then it was called SEF Partners. They've changed their name, and so have we. They really liked us, and we really liked them. And I think within a few days, they gave us a term sheet.
So it was easy peasy.
No, it was not very easy, but I would not say it was like super hard either.
Yeah. No, because I've spoken to people who went to 100 meetings, pitch meetings, and get thrown out.
I think we'd done about 10 to 15.
Yeah.
Yeah, up at that point in time. And we had converted a couple, Axel and Elevation. There were 1 or 2 more who were interested, but at lower valuations. So I think these two, Axel and Elevation, I think were sort of very, very keen. And we found, it's very important that your first investors, there is strong chemistry with them. I mean, they've been with us for the last 10 years.
Yeah.
And, it's been an incredible partnership, and I couldn't be more grateful. Ravi Adusumali from Elevation and Abhinav Chaturvedi from Axel have been phenomenal partners too.
So that's a quick conversation that Tamanna had with Abhiraj as well. But other two listings, pretty strong as well. Dev Accelerator, 63 or 64 times is the total subscription that Dev Accelerator saw. Overall, 143 crore was the issue size. In terms of valuations, again, on the expensive side. The other one which is listing today is also a Shringar House of Mangalsutra. Total subscription again stands at around 60 to 61 times. If you talk about the IPO size was around 400 odd crores, and the company is taking a price to earnings of almost 26 times and a post-issue market cap of almost 1,591 odd crores. So all the three, Neeraj, if you have to see, subscription has been very strong. Whether these are going to be listing day gains or a long-term growth story is what we need to watch and see from here on.
Yeah, I personally really like it when there are a listing day gain, which is good, and then the story goes up over the next 12 to 18 months so that everybody who's invested at some point of time makes money. So it'll be really cool to see if any of these or all of these kind of tend to do well.
Absolutely. So good ones to watch out for in terms of IPOs. But as a part of our special coverage on Prime Minister Modi's 75th birthday, let's see how markets have performed during his tenure, and this is more than 11 years in office. Varsha brings us all the insights. Varsha, over to you.
Well, thank you so much for that, and good morning and happy birthday to PM Modi. In the last 11 years, if I were to talk about, Nifty has given almost 241% returns with a CAGR growth of around 11.4%. But, to put a little perspective to it, let's see how markets have performed under different PMs. So talking about, under Atal Bihari Vajpayee, if I were to talk about, the Nifty saw a return of around 41%, while under, Nifty under Manmohan Singh first term, that is from 2004 to 2009, the returns were around 169%, while for the second term, the returns were around 70%. But under PM Modi in the last 11 years, till now, if I were to talk about, the returns have been almost 242%. So that's the highest that we have seen. Now let's see which sectors have performed in the last 11 years. While financial services and auto were the top sectors, now this was also followed by IT, then you have pharma, then you have PSUs, which have done really well. But on the loser side, if I were to talk about, let's see which are the sectors which did not perform well. Not much, because all of the sectors, if you see, have performed really good. But on the stock level, if I were to talk about the top 5 stocks which have done really good in the last 11 years, you have Trend. This is followed by Bajaj Finance and Adani Enterprises. But there are 2 stocks, which have not performed well. Let's see which are those 2 losers. You have Coal India and you have ONGC, wherein the returns were from 0 to -1%. Let's finally look at the broader, economic picture. Foreign direct investment, India attracted almost FDI worth $748 billion in the last, from 2014 to 25, while the startup ecosystem, if I were to talk about, has flourished over 120 unicorns since 2014. SIP flows, if you see, have hit almost 28,625 crore in August 2025. And lastly, retail participation have increased with demat accounts of almost 20 crore as of today.
Keep an eye out for some of these, and keep an eye out for the beneficiaries of the new policies in Modi 3.0. Varsha, thanks for bringing this piece. Time for a short break. On the other side of the break, we will get you the top trading ideas for the day. We don't lose sight of what's happening on the day. Of course, get you a battery of very important corporate and market voices for the next couple of hours as we celebrate PM Modi's 75th birthday.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग। जब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है। बुलाओ।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Welcome back. You're watching NDTV Profit India Market Open, and implied open indicating an uptick of almost 70 points. But marking Prime Minister Narendra Modi's 75th birthday and the lineup that we have today, we're joined by Nadir Godrej, Chairperson and MD at Godrej Industries. Thank you so much for joining us today, Mr. Godrej. Let me first begin by asking you, your views with regards to the reforms that have been undertaken under the Modi era. We're talking about few of them like GST, Jan Dhan, GST 2.0, impact on India Inc. How are you seeing that from here on?
Yes, the GST, the original GST reform was a great one. The industry has been asking for a GST for a long time. I remember my brother was pushing for GST, and when he was CII chairman, he got CII also to follow up on that cause. And I think it was a great reform. There was too many rates and too many complications, but overall it was wonderful. And the GST collections grew from 7 lakh crore in 18 to 20 lakh crores in 24. The Jan Dhan Yojana had over 50 crore bank accounts by 2024, and it is a really enabling program. The entire digital stack is a big achievement of the government of India, and now it is slowly spreading all over the world. And it has been instrumental in the whole world seeing India as a leader. Make in India has had a fair amount of success. The FDI in manufacturing has greatly increased in India, and a lot of employment generation and skill development has happened. However, we need to ensure that MSMEs can avail of all the benefits, and manufacturing is still a very small part of India's GDP. But we have been very successful in services. Now, the GST 2 was an excellent reform. A lot of the problems with GST 1 were corrected. There will be, in the beginning, less revenue because of the lower rates, but the lower rates are likely to give the economy a big boost, and gradually those revenues will come back from higher sales. At the same time, many people who couldn't consume much earlier will be able to consume at these lower GST rates. So I think it's going to be a very important reform for India, and it will help us to tide over the global situation, which is not very good right now. But India is soon going to be the third largest economy, and it is the fastest growing economy.
Got it, sir. So how do you see India's growth story under PM Modi, gone behind and going ahead?
The growth story has fared fairly well. That's not to say that it couldn't be even better. There are many people who feel that it is possible to have double-digit growth in India, but high single-digit growth is not to be sneezed at, especially when very few other countries are doing it now. And certainly no large country is doing it. But we should still strive for double-digit growth, and we need to be a little more inclusive, and we need to drive education and skilling even more. We have made a lot of progress, but we can do more.
We can do more, yes, absolutely, with all the reforms coming in. Thank you, Mr. Godrej, so much for joining us on the show and sharing your views. But coming back to what markets have in store right now, let's get in Somil Mehta, Head Alternate Research at Mirae Asset Sher Khan. Somil, welcome to the show and a very good morning. Pleasure to speak to you as always. With the kind of moves that we've seen in the second half of the trading session yesterday, implied open also indicating a 70 points up move. What are the key levels that you would be tracking in terms of Nifty and Bank Nifty? And would you be a buyer at current levels?
Good morning to everyone. Absolutely, I will be a buyer at these levels. Markets are looking good. See, the medium-term outlook, the medium-term trend has been, up, and we haven't closed below 200 daily exponential moving average, even for a day. So that is a very, very good sign. We've been in this range since May. We've been trading around 25,000 levels since May, and now there is a hope that this range has broken on the upside, and I will be expecting higher targets above 25,750, about 26,000. So this is a medium-term outlook for you. In the very short term, yes, there could be a slight time-wise correction, but I'm not expecting too much very sharp corrections or anything like that. I'm only expecting stock-specific and sector-specific moves on the upside. Right now, defense and pharma sector is looking great. Railway sector is looking great. So I'll be more focused on sector specific and stock specific action. Even in the banks are same. It has just started, and the risk reward ratio is extremely favorable at this levels. ICICI Bank, HDFC, they've just started moving. Axis Bank have already moved, but ICICI and HDFC has just started moving. So risk reward ratio there is very good.
Got it. Okay, Somil, just very quickly, the medium term that you spoke about, how far away, or what's the time frame for the medium term for the 26,000?
A time frame I will be expecting till in the next 6 to 7 months. I'll be expecting to go towards 26,000 levels, but it could be much faster because now we are already in that momentum.
No, but Somil, 7 months out for 600, 700 points, that's not very constructive. That's 100 points a month, which is what? I mean, hardly anything, right? So therefore,
See,
you are not very
absolutely.
bullish. You are just kind of okay.
No, I'm absolutely bullish, and I will be expecting medium-term definition. It says that it is 6 months, 3 to 6 months, but yes, I will be expecting these targets much faster. But as I said, we should be more focused on a sector-specific rotations.
Okay, so you are constructive, but just want to hedge your voice just in case you don't sound too bullish. I can understand that. Okay, I think Mayuresh is also with us, and you know, we'll try and get into the ideas for Saumil as well. But Mayuresh, very quickly, Saumil spoke a very important point that Nifty may do what it does, but there is a sector rotation at play here, right? So, where do you think the largest possibility of gain stands right now, Mayuresh, within themes?
Morning, Neeraj. So I think clearly consumption is one basket which is expected to benefit quite significantly. And consumption is a very huge and wide basket. So within that, again, I think we've been very, very selective in terms of hotels. I think hotels as a space is somewhere we feel that the sectoral rotation is clearly veering to. Expectations of decent results still expected to continue for the sector as a whole. Is our belief, and therefore I think hotel companies will keep on reporting decent set of numbers. FMCG has been very, very volatile in the past few days, but our own sense is that both volume and value-led growth is something that will start coming through as we start Q3, and that might very well continue in the next few quarters as well, with pricing coming back in favor for a lot of FMCG companies, input costs remaining stable. The operating leverage that gets played through in terms of volume plus value-led growth will clearly lead to better operational efficiencies and better cash flows. And therefore, FMCG as a sector is somewhere we feel can still continue going well. The third aspect that within consumers, what we are feeling in terms of the sub-sectoral rotation at Markets with India is domestic apparel makers, a few of the footwear companies as well, which clearly stand to benefit. And our own sense is that as dynamics change, specifically in terms of discretionary spending over the next few quarters, the organized players will clearly benefit because the organized players clearly had a disadvantage as far as the tax arbitrage was concerned in favor of the unorganized sector. And as those gains start coming through, along with discretionary spending coming back, apparently through better volumes, I think these sub-segments might continue to grow. So I think consumption is a huge basket. I think that basket might really do well.
So within consumption, you're talking about apparels, you're talking about footwear, and you're talking about the hotel industry, which could be beneficiaries from here on. But Saumil, let me come to you quickly in terms of the top picks that you would actually give out, taking the sector rotation that you're talking into consideration.
Defense definitely has the momentum. I'll go with more with real estate stocks and the infra stocks. That sector looks really good from here on. My first pick would be Prestige Estates, and Prestige has just taken support at 200 daily moving average and started making high tops, high bottom. The momentum indicator has given a fresh buy signal, so good momentum here. I'll be expecting a good rally. Stop loss would be 1560, and the target would be 1750 for the stock. The second stock which I have chosen is Supreme Industries. Supreme Industries, very similar, taken support at 200 daily moving average, was consolidating in the last couple of months. Now, I think the consolidation has broken on the upside. The stop loss would be around 4450, and targets would be around 4800.
800 with regards to Supreme Industries. You know, one of the aspects that I want to take from what Mayuresh spoke about in terms of apparels, textile stocks yesterday actually showed great momentum. Today as well, there's a possibility there could be some momentum that could continue, and this is because Prime Minister Modi will be launching PM Mitra Park in Indore today. Now, the proposals of over 23,000 crores have come in from 91 companies. Two companies that have committed investments over here, you have Trident and Vardhman Textile. So there could be some positive momentum that could continue with regards to textile companies as well in trade today. Saumil, how are you looking at this? Would you play textile stocks as a momentum bet? And if so, which ones would you pick?
At the moment, if I see, let's say, if I see Arvind is still consolidating. It has seen good bounce back in the last 1 month, but it is still trading below 200 daily moving average. For a short-term play, yes, there was a very good spike and it has given good performance. But now I'll be waiting for Arvind to close about 200 daily moving average, which is around 340 levels. Once it closes above 340, I think that will be a breakout point, and I'll be expecting 370 and the next level will be 385 levels.
Wow. Okay. And watch out for textiles for sure. You know, today we speak about how textiles or some of the others would be in focus. I somehow just believe that textiles could well be the sector of this morning today. Let's keep that in mind. Somil, of course, believes one. I wonder if Somit Sarkar, my colleague, has heard anything about textiles. I will ask him that, because we should right now go to our very special segment, which is Third on the Street, wherein Somit speaks to a clutch of fund managers, dealers, and gets you all the market gup-shup. Somit, good morning. Before we get to what's on your plate today, anything about textiles that is being spoken about because of all the bromance brewing between PM Modi and President Trump?
Well, yes, the sentiments are quite positive given the fact that the sector was beaten down because of these tariffs coming in, and now a trade settlement that is expected anytime soon could be a major booster that could come in for the textile sector going forward. Also, we need to understand that festive season is starting, which could also add up to the sales going forward post the GST rate cut that we have seen. So overall, the sentiment is quite positive for the textile sector currently. But apart from that, multiple stocks that remain in focus. Firstly, it's GMR Airports. Dealers are indicating that there are buy flows on institutional desk. Both foreign and domestic institutions have been buying this counter. Potential value unlocking is on cards, is what dealers are indicating from GMR Airports. The second count on the list is AU Small Finance Bank. Dealers indicate that the selling is largely over. The stock has been under pressure of late. For ABB and Tube Investments, multiple dealing rooms have recommended buy calls on technical charts, so keep an eye out for both the counters. For Stylum, there are buy flows on large prominent HNI desks. Dealers are expecting some kind of positive announcement to come in anytime soon here. For JSW Energy, stock has been gaining off late. Now there's a buzz on the street that the company might announce its QIP soon, but dealers are indicating that the QIP announcement is still some time away, at least 1 month, at least for the next 1 month. Dealers are not expecting the QIP or the fundraise announcement to come in from JSW Energy side. And Amber Enterprises was part of our segment on September 15th, where we did indicate that there are buy flows on PMS DES. The company will be launching their QIP soon, and the company has launched their QIP at around 1200 crore is what they're looking to raise at an indicative price of around 8,000 rupees. For Axis Bank, it was part of our segment on September 10th, where we did indicate that there are buy flows on FI desk, and the stock has been up 6% since then. Ambuja Cement was part of our segment on September 12th, where we did indicate that the selling is largely over, and HSBC yesterday did upgrade its rating on the stock to buy, and I also hiked the target price to around 700 rupees. And DLF was part of our segment on September 12th, where we did indicate that multiple dealing rooms are recommending buy calls on technical charts, and the stock has been gaining since then. It's up over 4% in trade since then. And yesterday, in fact, Nuvama's technical report had also come in, where they indicated a buy on DLF.
Yep, and by the way, the stocks had flared up in the last half an hour to 45 minutes of trade. So keep an eye out for some of those
and
names.
a brokerage note on a Prestige today coming in, right? And
Nuvama.
a Mahindra Life, yes.
And a Mahindra Life filling at 700 crore
correct.
project. Yeah, so lots happening there. Somit, thanks for bringing us all of those covers. Somil, real estate stocks on your radar? I mean, DLF, Phoenix Mills, Mahindra, or any other?
Absolutely. I gave Prestige Estate today morning, and I'm absolutely positive on it. DLF is the second one which I really like. DLF just crossed about 200 daily moving average, breaking a small triangle pattern on the upside. Daily momentum indicators are on the buy side. Great setup here. I'll be expecting a target of around 823 levels, which is a small gap there. So 823 levels would be my target, and the stop loss would be around 770.
Where are you a buyer in this real estate pack? I mean, it's now the fourth year of the up cycle. So it's not like we are at the bottom of the cycle, but the cycle could last for long, and a lot of people are constructive. Where are you guys constructive?
Oh, Neeraj, that's for me?
Yes, Mayuresh.
Sorry, I didn't hear that. No, so again, you're absolutely right. I think we are in the fourth and the fifth year of the cycle, typically a 6 to 7 year cycle that a real estate sector goes through. And therefore, I think with the existing data points, the last 2 months, the data points have been a little bit patchy in terms of new registrations. So if you probably look at new registrations, specifically in a city like Mumbai as an example, I think registrations have been a little bit patchy. You can blame it on the rains as an example, but clearly, I think our own take is that we're being very, very selective here. Certain stocks like DL is something that we continue holding in our global portfolios. But housing finance companies might actually be some actionables out here. Our own sense is you can actually have some focus list created around that. So I think PNB Housing Finance, as an example, it has gone through a lot of upheaval in terms of management changes, so on and so forth. But our own sense in terms of the affordable segment that they're probably getting into, and the emerging segment that they're specifically entering very, very aggressively, where they've got very, very strong internal controls when it comes to disbursals, when it comes to asset quality, when it comes to delinquencies in terms of collection efficiencies as well. I think with better yields, obviously, I think that is one segment that management feels very, very optimistic about. And if that probably comes through on numbers in the next few quarters, even though I think the stock is a tad bit expensive compared to its own historical averages, I think this is one stock that can be a dark horse as an ancillary play to real estate.
Oh, so PNB Housing, interesting ancillary play is what Mayuresh is looking at. But Saumil, Mayuresh, stay with us. We are now joined by Sanjeev Goenka, Chairman at RPSG Group as well. Thank you so much, Dr. Goenka, for joining us today. It's important to talk to you about Prime Minister Narendra Modi's 75th birthday. And to that, I will start off with, taking you back to 2017, where you did describe Prime Minister Modi as almost a human locomotive. Does this change now, or does it still remain the same? Would you have another connotation from here on?
He's somebody who works 24/7, who thinks 24/7, who thinks about India all the time, about what he can do, what he can contribute towards India, India's growth as an economy, as a nation, as a people. And that selfless devotion combined with the awesome intellect and the fantastic vision, I think is unbelievable, great from the India growth story. And to my mind, India will grow like none other.
Okay, so that's with regards to why you call him as a locomotive, for India. Okay, according to you, how has India's landscape actually changed on the world map, the way the world perceives India now in this Modi era?
For sure. And how? It's a different India. It's, you're officially now the fourth largest economy in the world. You are recognized as a superpower. But more importantly, nobody can take India for granted. It's a self-reliant India. It's a confident India. It's an India which will work its way to a better and better position.
Okay, so India probably going to work for a better position. Thank you, Dr. Goenka, so much for joining us on the show. Mayuresh, coming back to you. We spoke about textiles. We've spoken about real estate as a space as well right now. Yesterday's session, you did see the defensives and the rate sensitives such as pharma, healthcare, auto and IT, which did see some bit of profit booking that did come in as well. This was not yesterday's session. In fact, there was some buying interest that was emerging in terms of IT as well in terms of yesterday's session. In the second half, especially the smaller names. Would you be a buyer at current levels in terms of IT, taking into consideration the way valuations are panning out? And are you seeing any bit of tailwinds coming in there?
Good morning, Hiral. No, I think we are still maintaining a neutral call on the sector as a whole. I think the sector will go through a massive element of transition. Obviously, the changes that you're seeing in the global ecosystem as far as AI is concerned, in terms of automation that is probably happening, our companies probably need to gear up a lot faster in the next few quarters, in the next few years, if we have to be hyper competitive with the global peers. Having said that, I think the accelerated investments which might be expected to go through, as well as the learning curve for the bench strength as far as IT companies are concerned, is going to take some element of time and effort. And therefore, my own sense is that the existing model that is carried out by the IT companies, I think we might just carry on over the next few quarters as there is expectations of transition happening globally across sectors as far as the overall dynamics are concerned. But I think the margins might not expand. The margins might still remain at the current levels or a little bit subdued as we speak because of the innovations that are probably happening. And therefore, I think new orders coming through, at what pricing do they come, in what velocity do they come through as well, I think are going to be all important characteristics apart from the base factor that I was just speaking about. So valuations aside, I think it's going to be a huge transition for the sector as a whole. Companies which are going to be adept and adopt probably to these changes faster than the industry might be outliers. So I think out of this entire sector, as I've said time and again, Emphasis is the only stock that we continue holding in our global portfolio.
Okay, time for a short break. Stay on, gentlemen. We'll be right back with the pre-open session in about 5 minutes from now. And of course, the key brokerage call for the morning and some more active stocks on news. Talk about all of them. Stay tuned.
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask.
Back with India Market Open. And remember, amongst all the news flow surrounding us today, the principal one is the birthday wish from US President Donald Trump for Prime Minister Modi and Prime Minister Modi's warm reciprocation. Donald Trump had mentioned that just had a wonderful phone call with my friend Prime Minister Narendra Modi. I wished him a very happy birthday. He's doing a great job, a tremendous job. And he says, Narendra, thank you for your support on ending the war between Russia and Ukraine. Prime Minister Modi, of course, reciprocated warmly, as he has done in the last 2 times, saying that thank you, my friend President Trump, for your phone call and warm greetings on my 75th birthday. And like you, I'm also fully committed to taking the India-US Comprehensive and Global Partnership to new heights. This is what you need for a positive sentiment, and you got it.
You seem very kicked about the use of the first name, Narendra.
Yes.
You emphasized it a couple of times. I'm wondering why. Because it shows that kind of a personal, you think, touch?
After the, after the slightly
Frosty.
not so wanted tweets or Truth Social posts in the last 2 months, for this to turn this way, which is why
But if you realize, even through that whole tirade, there was never anything negative personally.
Yeah.
On the Prime Minister. And it was always that, yes, he's a great guy.
He's a great friend.
But this is the issue. I would say easy come, easy go also. So as exciting as it is,
100%.
It's not that long ago that those tweets also came in.
Yeah, but just that, you remember 4 days ago we put out the timeline, right? From September 9th, things have just taken a bit of a turn. Hopefully this materializes into something.
Yeah, let's keep our
I think the other thing is, the other thing is yesterday, right, if I'm not wrong, that Indian officials put out that the first set of conversations with the US delegation has been positive.
We put it out this morning as one key reason.
Yeah.
But that has just set the stage for the next round of talks.
Yes.
The fact is that there are red
How long
lines.
does this continue is the question.
And no one's going to compromise on those red lines. So let's see. Chandan Taparia joining in this morning. We're talking on the show today, geopolitics, Indian markets, but most important, technical levels. Chandan, very good morning to you. What are you seeing on the Nifty? Are you seeing that strength coming in, implied open looking fairly positive?
Good morning, Tamanna. Thanks for having me. So yes, the sentiment seems quite positive. Chart and the news outcome suggests the same. We have noticed that market already started to form higher top, higher bottom. It formed the bottom at 24,400, 24,442 just 3 weeks back. And after that, supports are gradually shifting high. And the good part is that yesterday it rallied well, formed a strong bullish belt kind of hold pattern. And before that, it took a pause from the higher base at 25,000. Surpassed an immediate hurdle of 25,150. So I believe till now, Nifty holds above 25,000, 25,050. Ongoing rally can extend to us 25,500 to 25,700 kind of level. If I look at the data setup, 4 data internals are very important for Indian market. First, put call ratio moved to 1.29, which clearly indicates that sustained put writing started to happen at even at 25,000 or 25,100 or even higher strike. India VIX is continuously falling down. VIX is now near 10.25. FI is bought after a long time. At least they are not selling. And FI's long short ratio has recovered to 12.5%. So all 4 positive data internal indicate that short covering could take place until Nifty holds about 25,050. We are expecting this rally to extend to us 25,500, 25,700 kind of levels.
Chandan, what are the picks this morning?
Yeah, so I'll focus on a selective name from a different set of segment. So first trading idea is likely to be from the counter like Havels. We have seen a positive setup in the counter. In fact, it has given a consolidation breakout on the daily chart. It has surpassed an immediate hurdle of 1600 marks and heading upwards after the consolidation breakout of last 18 weeks. So recommending to buy with support of 1585, and this counter has potential to rally to a 1700 kind of level. Second trading area that will be buy on Hyundai. One of the strongest counter has been consolidating in a range, but now the breakout is happening after the consolidative move of last 20 days. So one can buy with support of 2550, and Hyundai Motors has potential to rally to us 2700 level. So both the counters are witnessing positive price pattern. One is giving the consolidation breakout and second is giving ascending triangle breakout on the daily chart.
So interesting names, Chandan, but a couple of other stocks that are in focus on the back of news as well. In fact, we have Puneet who's joining us to tell us which are the 3 stocks that he's tracking. Puneet, over to you.
Well, thank you for that. So Amber Enterprises is definitely one, and now we've discussed this during the show as well. But 1,200 crore QIP the company is raising at 7,790, and it's the stock's not cheap by any means. So if it is able to do that, that'll be key. It also comes on the back of a 1,200 crore fundraise that the company did for its electronic business Ilgin. So together they are able to monetize a lot of funds in terms of the capex that the company will do, and a huge one of over 4,000 crores is planned. So watch out for this one today. The other one's Bharat Electronics, 712 crore orders what the company has gotten. This is post September 1st, where the last disclosure came in of an order win across the board of IT infra, cybersecurity solutions, ESM systems, amongst others, is included in this particular order. And the company's order book of about 27,000 crore target for FY26 seems to be headed off to a huge start in FY26. So watch out for this one as well. And finally, in terms of SJS Enterprises, now it's largely an auto ancillary company in the accessory space, to say the least. And we spoke to them on KYC. They mentioned about a particular transaction that they're looking to do a tech tie-up essentially for essentially the display systems in India, and now that has come through. This is with Hong Kong's BOE Varitronics. So these are the three ones on my radar. Watch out for all of them.
Okay. Thank you for that. Well, we're giving you ideas this morning, as we do every morning on NDTV Profit. Ideas before the opening bell. What's our top brokerage call? Samit joining us for more. Nomura has initiated a buy on Prestige. Samit, why are they saying that?
Well, yes, Prestige, this bullish note has come in from Nomura, where they have initiated the buy rating with a target price of 1,900 rupees. Now, they are saying that this is the top pick of the brokerage in the real estate space, and they believe and they say that whatever Prestige is doing, it is doing it right. In fact, they are saying that the company is transforming into a pan-India player and is also building a solid annuity plus hotel portfolio. Now, the growth strategy of Prestige is superior compared to its peers as per the brokerage, and it is expected and is expecting a strong scale up going forward, particularly in the Mumbai and the Delhi NCR region, and this will be driven by the mid-income township projects and the luxury projects of Prestige Estates. Now, for FY26, the brokerage is expecting the company's pre-sales to come in at around 29,000 crore rupees, which is 70% higher compared to what the company did last year, and it is also about the company's guidance of 26,000 crore rupees that the company had given at the start of the financial year. Moreover, the brokerage is expecting an upside risk to this 29,000 crore pre-sales number that they have assumed at this moment. Apart from that, the brokerage also says that the superior execution capabilities should help up the company's annuity and the hotel EBITDA by around 4 to 5 times over the next 4 to 5 years. In the hotel segment, the management expects to expand the scope from 1,200 rooms in FY25 to close to 2,400 rooms in FY27 as its high-profile assets in the Delhi Aerocity goes on stream. Apart from that, when it comes to net debt to equity, it expects that to remain stable. So a strong growth potential that Nomura is seeing from Prestige going forward.
Thank you for that. Samit Sarkar, they're 2% up in the pre-open session, which is just about started. Actually, no, you're going to see the end of the pre-open session very soon. Prestige is buzzing. Vardhaman Textiles is buzzing. I wonder if it is some of those tariff pressures easing that you're seeing play out. Apollo Tyres, interestingly, is buzzing. They are now going to be the prime sponsors for the IPL. And that's something which is not always very, very lucky for companies. The last ones then of course had the big GST hit coming in. So you have that issue, but for Apollo Tyres, it's looking positive today. They've bagged that sponsorship for BCCI from BCCI as well. ABFRL, one of the top gainers this morning. Suzlon doing fairly well as we speak. What is not? Gujarat Fluoro, there's going to be a promoter stake sale, so that's seeing some pressure. Lupin has had a US FDA visit at one of its facilities and observations at the end of it. You're seeing some pressure there. But Mayuresh, I wanted to come to you on Prestige. And of course, Nomura is quite positive on it, but how do you look at Prestige? Do you think enough of the run-up has already come in? Are you seeing comfort in valuations?
I think fair valuations, Tamanna, to speak for Prestige particular. And the expectations in terms of both their businesses, the residential part as well as their commercial stroke annuity part of the business, expected to continue doing well. is something that the management feels very optimistic about. Again, I think outside their core areas in the south, specifically areas around Bangalore, they are now moving out. You've seen a few projects in Mumbai as well, which are coming up for Prestige. And that's a good positive sign because I think the average rates start moving higher with better projects that they do, specifically in the western parts of the country where the rates are significantly higher. And therefore, I think if they're able to execute well, I think the residential part of their business might actually sustain and contribute significantly to numbers going forward. So yeah, we maintain a positive view of this.
Okay, so that's with regards to Prestige, 1.8% up move coming in there. Let's just quickly look at the pharma universe as well, because you have the US FDA, which has actually given out a warning letter for Novo Nordisk, and all the companies which are into weight loss stock probably could see some bit of pressure today from the likes of a Glenmark to a Dr. Reddy's, but no major moves coming in, at least in terms of pre-open rates. Overall, how are you looking at the pharma universe, Mayuresh? Currently, no major moves, pretty silent that sector has been right now. What would you advise?
So largely, I think within the space, if you differentiate between generics and the branded specialty players, what Trump really does is something that might create a sentimental effect. But I don't think there is going to be any long-term pressure as far as pharma is concerned. It's going to be very, very critical, even for the US healthcare industry as a whole. And therefore, I think leadership stocks is somewhere that we've always believed in. They've created a very strong specialty pipeline. DRL has created a very strong pipeline as far as biosimilars are concerned. And therefore, our own sense is that leadership stocks like a DRL or a Sun Pharma, if somebody holding, can continue to hold. Strides Pharma is something within the mid-cap space which can continue delivering on numbers. Biocon can be a dark horse in terms of the developments that they're doing at their end. So as far as the healthcare space is concerned, I think a few of these pharma stocks, if somebody's holding, can hold on. But hospitals as a space is something that we continue remaining optimistic.
Hospitals, there is some optimism over there. Eureka Forbes, I want to see what Eureka Forbes is doing this morning after that initiation of buy from Nuvama. You're seeing a bit of an uptick there. Bellrise, very, very enthusiastic note from Investec, which has also initiated a buy. Not much happening there. I'm wondering what Dreamfolks is looking like after they've said that they're pretty much suspending 77% of all their airport lounges. It's a 5% circuit, I suppose, there, and it's going to continue as well. Mayuresh, if you're in Dreamfolks for some reason as an investor, what are you going to do?
No, not there, and won't be, because I think whatever has happened.
No, I mean for our viewers who are watching, if someone is in there, someone's there, what should they do?
I think this has been in the news, Tamanna, for a long period of time. I think it just doesn't make sense to probably stick around with this.
Okay, so I mean, maybe I think run for the hills as soon as you can. Chandan, anything interesting that you're spotting after the pre-open session? We've spoken about a whole lot of stocks. Anything on your radar?
Yes, so I believe the market could continue to cheer the bullish sentiment, the way things are improving, and also the data setup is quite interesting. And I want to highlight one important part is that whenever the FI long short ratio goes below 8% and turns higher, market has tendency to auto rally by 1,000 to 1,500 points. But in last 3.5 years, first time the market took so much time at the lower long short ratio. So I think that trigger is very important. And in this scenario, the most of sector could do well. Positive on selective auto name. I believe Maruti could be on the top gear, looking at GST reform as well as the festive mood. So I believe with support of 15,200, it can go to the top gear to a 16,000, 16,200 kind of level. Eicher Motor is also one of the strongest counter, has been consolidating the range for last 5 days. So these are the sectoral stock which are strong, but witness some consolidation, and now fresh leg of rally cannot be ruled out. So positive on the selective auto name. Apart from that, capital goods counter again on focus or on radar. After a long time, L&T has recovered well with support of 35.20 and moved higher with surge in the trading volume. However, the counter is in positive to range-bound mode, but the way it recovered on the last day, I believe further momentum could continue. So with support of 3600, L&T can head towards 37.20 kind of level. So I think selective counter could be in focus. And apart from that, we already discussed about Havells and Hyundai as our top preferred idea for the day.
Let me just take a look at ABFRL. ABFRL seems to be a top gainer as well. They've announced yesterday that they're launching a new brand called OWND, OWND, targeting Gen Z. Typically with Gen Z brands, if you have to spell it, you have to knock out some letters. No, that's just on an aside. So 3.5% up in the pre-open session. Chandan, you like ABFRL?
Yeah, I like ABFRL and especially like the way Gen Z behave nowadays. So yes, one of the
Chandan, I thought you will say I am Gen Z.
Obviously, I'm Gen Z only. Dil se to bachcha hi hai na. After some time, only age increases, your experience. Only experience increases, age remains same. So 18 only. So let's talk about the stock now. So I think the stock has really bottomed out last month with the support of 72 and headed towards 93 marks. But in last 6 days, it witnessed some corrective move. But the good part is the rally which it witnessed on 8th of September is still being respected. On that day, it rallied from 85.5 to 93. And even after the corrective move of last 5 days or 6 days, it has not broken that level. So I believe the major trend remains intact. Until it holds above 85, I believe stock can head towards 93. And above that, a 3-digit number of 100 cannot be ruled out in the counter.
But Havells is the top call from Chandan Taparia. Remember, it's finding favor from a lot of other people as well. Brokerages, and one of the programs, I'm forgetting which one, mentioned that it's good to take a position on any kind of weakness. I think it was BOFA. But Mayuresh, stay on. I would want to take in your top call. We haven't asked that, but the markets are starting, so let's do that first. Here's how the markets are starting today. 0.2% higher, not bad with banks being flat. IT should come up and see what's happening there, about 1/3%. So not a bad start, actually slightly more than 1/3%. And the broader markets continue. 9th day on a trot now that the markets are starting off well. If they end this way, it will be the 9th day on a trot that the broader markets have shown gains. Quite stunning, really. Nifty had a bit of a blip on Monday, right? Or a flat day on Monday. But let's get the heat map up on the screen. There's something for me to talk about this morning as well. It's not all good luck to Tamanna and Hiral. Tata Consumer, 3% higher. Coal India, 1.5%. That's on that mining, rare earth mining block victory for Coal India. Ultratech, the upgrade from CLSA, working there. BEL, order wins, I think 750 or 800 crores. Grasim, presumably benefiting because of Ultratech. Then Tata Motors, Trent, Infi, NTPC, etc. But Tata Consumer, lo and behold, a runaway winner in today morning session. So quite a strong start for that one. A lot of green with HDFC Bank, Reliance Industries and the others doing very well. Maruti is doing well yet again. Not too many losers. I mean, less than 0.5% for an Adani Port, Cipla, Bharti, Eicher. So the losers are not really out there. The day belongs to the winners, even if it's just 0.2%. But clearly, Tata Consumer, really strong start. Let's see how the day progresses for this one.
Yeah, a very sharp move up for Tata Consumer. Actually, Tata stocks up in the top row. Tata Motors and Trent as well, doing pretty decently. I would say it's even a better start than yesterday, and we saw how the build-up took place in the first 1 hour or so. Let's pull up the broader markets for you and tell you what's happening there. We'll start with the mid-cap index, about 0.25%, less than 0.25% up at this point. The small cap also about 0.25% up. So green screens, at least we're seeing green screens all around, and that's one thing to note as well. Let's pull up the sectoral indices and see what's happening there this morning. Nifty Realty boost there, maybe that prestige thumbs up and initiation of buy from Nomura might have been helping. India Defence back up, was down yesterday. CPSE public sector stocks are up. IT is having a decent day. Pharma a little weak with perhaps the Lupin news coming in, and that's weighing down. Dr. Reddy is also not doing too great. Healthcare seems little weak, but very little weak, just 0.25% down. So the range remains overall as we've been seeing for the last few days as well. India VIX, let's just pull up India VIX at a fairly benign rate over there, just a little over 10. And completely flat, so nothing to worry there. I think bulls are waiting to gear up in today's markets. Let's pull up specific stocks and tell you what's happening there. Pulling up Gujarat Fluoro first. There's a promoter stake sale, and that's the buzz happening. So, you know, it was one of the top losers in the pre-open session and is opening down 2.5% down this morning. Vardhaman Textiles in focus. Couple of reasons why textiles would be in focus. Look at Trident as well. One is whether tariff pressures are easing, and the other is that there is going to be a PM Mitra Park launch with 23,000 crore worth of deals over there, which will also help the textile sector. Prestige Estates, an initiation of a buy there coming in 1% up right now. Lupin might see a bit of pressure. US FDA has had observations after its plant visit, about 1.5% down. Belrise is another one that we're tracking, was on our watch list as well. Investec has initiated a buy with quite a hefty upside to the target price that they see taking place at 185, nearly 3% up this morning. Dreamfolks will be suspending all their domestic lounges and those operations, which is 77% of all their lounge operations. 5%, I reckon that's a socket, and it will continue one way or the other. Amber has launched a QIP. So let's take a look at Amber and what's happening there. It should have, maybe we'll see a positive response to the day, but some pressure coming in right now, about 0.5% down. Here also, that's just broadly what I'm saying. No big moves one way or the other.
No big moves. You know, I think Reddington is one that I would want to mark over here. The up move has continued for a second consecutive session right now. I think Mahindra Lifespace already, Tamanna did mention to some extent, but Mahindra Lifespace on the back of the redevelopment project, 4.5% up move coming in on that counter. Apart from that, Thangamal Jewellers is seeing some bit of momentum in today's day of trade. Avantel is another one which is seeing some bit of gains as well right now as we speak. On the losing end, Aegis Logistics has started to see some bit of profit booking today after the kind of gains that we saw in yesterday's session. But overall, absolutely no major moves coming in here. I think we'll have to wait for some bit of momentum to pick up from here on. In fact, let me go to Chandan. Chandan, the kind of up move that you're seeing in terms of textile companies, that's one. And secondly, the up move with regards to Reddington has continued for a second consecutive session. Anything that you would be a buyer of?
Yeah, so first to talk about Reddington, the stock has really had an amazing move in last 2 days. I think really do well from 242 to 300 marks in last few hours. So trend is intact to positive, and the good part is in last 2 months it witnessed a corrective move from 330 to 230 kind of level, and it has almost recovered by 75% of the correction. And the major trend of the counter is positive because I notice here the stock is making a high-top high bottom on the bigger time frame, really do well from 30 rupees to almost 330 in last 5 to 6 years. So major trend is positive, and I believe up move could continue till it holds about 291 can drive the swing towards 315 to 320 kind of level. Talking about textile name, yes, selective counter could be in focus. Positive view on the Bombay dye. However, the major trend is positive to range bound, so slow and steady move could be there till it holds above 181. It can head towards 195 kind of level. Apart from that, I believe other counter like ABFRL, which we discussed, can move higher with support of 86 towards 93 kind of levels. Looking at Gokuldas, Expert, and the Raymond, I think most of the stocks are bottoming out. Slow and steady higher move could be there. Talking about Gokuldas, I believe further 5 to 8% move cannot be ruled out. The way stock has given a consolidation breakout on the daily chart. So with support of 806, it can head towards 848 kind of levels.
Okay, well, 5% higher and counting. So really good going. We spoke about how textile names could be on fire, and boy, are they on fire, or are they weaving gains? Let me rephrase myself. On fire may not necessarily be the right thing for a textile company to be saying, yes, but certainly. Just before I go to Mayuresh, Chandan, the two top calls that you've given, would you say that they are good to buy even now at these prices on open?
Yeah, good to buy because as of now, both the counter are just consolidating at the opening price. Hyundai is just slightly down, but major trend is positive. So I'm expecting fresh leg of rally in the counter. Just a small follow-up is required. If someone is looking for more conviction, buy about 2620. In that scenario, you will get quick move in the counter. So can buy here also, but about 2620 or 2630 must buy for next leg of rally. Looking at Havels, yeah, positive way on entire sector. I believe one can buy here almost flat. So with higher base of 1585, look for immediate surge in the count.
Mayuresh, we are 6 days away from a presumable boom in buying for discretionary items because of GST cuts. Maybe even staples, but discretionary for sure. So a Havels, a Hyundai, etc. I heard you start off the conversation today saying consumption is the key theme. Would you be a buyer into a Havels, into a Hyundai, into a Maruti, M&M at the current levels, at the current valuations?
So Neeraj, again, I think we continue holding stocks like a Hyundai, a Maruti in our portfolios, but they are at way lower levels. So I think they are trying to price in the kind of changes that are expected to come through from the consumption boom. And a lot of managements have indicated that. So from a negative volume growth that they were pegging in at the beginning of Q1 before these announcements were done, to a positive outlook in terms of a 6 to 10% volume growth happening for the remaining of the year, means there is going to be significant amount of growth coming through. However, our own sense is that they are trying to pencil in a large part of the volume growth, though prices will react as volumes start coming through. Therefore, I think we remain constructive on the larger names. Anybody holding should continue holding. But as a space, as I said, I think auto ancillaries is something where our belief is if OEMs start doing well in terms of volumes, the ancillary players will have an advantage, not just from the OEM market, but from the replacement market, which has been very, very supportive for them in terms of pricing. As both these segments start firing up, and firing might be the right word for this sector, I think that might start showing up in numbers, both in terms of revenues with input costs going up. Margins will show some element of an improved uptick, and that will show clearly in terms of bottom line growth. Therefore, auto anchors as a space is something that we remain very, very optimistic about, and that is where a lot of our actionable ideas are.
Yuresh, 2 or 3 actionable ideas from you, because this is the time for astute investors to come in and set their positions in place. A lot is going to unpack in the next few weeks, and if you don't want to feel FOMO at the end of it, what would be the top 2-3 ideas that you would recommend?
So, Taman, I think hotels is something that I said if you're liking at Markets with India, I think Lemon Tree is something that we believe can really do well. Our own sense in terms of the mix that Lemon Tree has in terms of owned properties and managed properties, and the plan that they've kept over the next 2 to 3 years, they're expected to add around 7,500-8,000 rooms with a mix of owned and managed properties. That, in our opinion, is a very appropriate mix. Because that keeps leverage in check, and that also keeps your capex position in check, creating not too much of pressure on the balance sheet. Having said that, I think the properties across entry level to premium properties that Lemon Tree probably has the expectations of not just the residential part of the business in terms of average room rates, with GST rationalization expected to play out, but MICE events, F&B contributing, managed properties contributing as well in terms of margin contribution. I think this is one stock, in our opinion, where earnings should hold up and price action should hopefully hold up as well. The second stock that we are probably liking as an action, even at the current venture, might not have anything to do with GST rationalization, but energy as a space is also coming on to our sector rotation. And therefore, Sarada Energy is something where our belief is that the company is clearly transiting from a pure commoditized play to an energy play. The acquisition of SKS Power, the 2 into 300 megawatt units, which is again backed by Gare for 7 mines, gives it the energy security to run its power operations very, very efficiently. And what we've probably seen in terms of their performance or energy as a vertical in general, margin performance is exceptional. That has actually started showing on numbers. The last quarter's EBITDA numbers, both in absolute and margin terms, were significantly higher. And therefore, our own sense is that as this transition happens, along with stability expected in terms of sponge iron prices, pellet prices, I think that should clearly reflect in terms of positivity on numbers and ratings and rankings as we see it. The last stock within the consumption basket as we see it is Campus Activewear as well. The integration operations that Campus probably has is going to keep it in good stead. The GST rationalization obviously aids and abets the overall growth in terms of expected revenues, which have clearly been on the softer side. But with consumer discretionary expected to come back, and specifically the athleisure market that Campus is having a dominant say in, I think it should probably also do well.
So clearly Bata is not in that list for you. Campus is between the two.
Because I think if you probably look at the footwear, Tamanna, I think athleisure as a space is going to outperform.
Correct. Sneakers over everything else. I agree 100%. Chandan, so there are two plays right now. One is the GST consumption boost and one is the retracing of tariffs fear. So you're seeing a well-spun living, for example, about 5% up now. What would be your 2-3 picks in this rubric?
So yes, I believe we have a couple of events over the next few days. First is FOMC meet. That is going to be an important because in last 9 months, 5 times the rate remained steady, and now there is the time to cut 0.25%. So I think that is the key trigger, and GST reforms are likely to start from 22nd of September. So that is going to boost the sentiment as of now. And then upcoming RBI policy is an important trigger to drive the next leg of rally in the banking index. So yes, positive stance, and I believe selective IT counter could bottom out if we are looking about the global scenario. And if you're looking at the domestic scenario, then entire consumption theme could be in focus. So if you're talking about IT, I believe few name could be on radar. I have positive stance on emphasis. The stock is all set to give a fresh consolidation breakout. So with support of 29.30, it can head towards 31.30 kind of level. When you talk about consumption boost, I believe the name like DMart could be in focus. With support of 46.30, it can head towards 4900 kind of level. And apart from that, selective FMCG name or discretionary expanding kind of name could be in focus. We also cannot forget the new age business. However, most of them rallied well, but now a small follow-up could lead the next leg of rally. So I think we should also keep radar on Eternal with support of 310. The stock has now potential to commence the next leg of rally towards 345, 350 levels.
Thank you so much, Chandan and Mayuresh, for joining us on this leg of the conversation. I think it's going to be an interesting day to watch. So much happening. And of course, a note out to our special coverage. Modi at 75, India rising. That's what we're calling our coverage. And we're taking this opportunity to look at where we are in terms of policy, in terms of outlook. I think the big news trigger today, Neeraj and Hiral, also this exchange of messages that we've been talking about between President Trump and Prime Minister Modi. I'm sure it's matters of usual protocol that world leaders wish each other. That's fine. But right now, and the wordings of what they are saying become very important.
Yeah, most certainly. And just follows the trail of the good messaging that is happening from both sides over the last 6 or 7 days. So let's see.
We were just talking about it, the September of 2025 is the best performing September since 2019. And I think we started off from the 7th or the 8th of September where the positivity has started to come in. So probably, will this be a game changer for the markets or not is the question from here on, with domestic reforms coming at play. And you're talking about any of the international aspect coming in now.
Yeah, well, let's pose that question to Prashant Khemka, founder of White Oak Capital Group. Well, manages oodles of money, has a gem fund, and therefore no better person to talk about both the global and local factors combined than him. Prashant, good morning. Thank you so much for joining in on PM Modi's 75th birthday. And, well, 11 years into his post at the helm of affairs, I think the country's traveled a long way. What is your optimism for the times ahead?
Good morning, Neeraj. Thanks for having me here, particularly on this day. Let me use your platform to wish our Prime Minister a very happy birthday. बहुत बहुत शुभकामनाएं. आप जियो हजारों साल, साल के दिन हो 50,000, and may India continue to rise. The discussion that you're just having, I think it is positive. It is indicating that some kind of a thaw, more than a thaw, progress is being made. And as we discussed before, and given the nature of negotiations that the Trump administration has had with other countries this year, in the preceding months, it seemed, that it was very much a negotiating tactic. As talks were progressing, likes to amp up the pressure, and that's why the additional tariff and whatnot. And it seems like it's de-escalating, and over the coming days, weeks, or months, we should have a deal between the two countries, would be my expectation at this point in time.
Prashant, hi, Tamanna here, and such a pleasure to speak with you today. You know, what we're trying to do is, while we talk about, of course, the birthday celebrations, etc., is to also talk about the impact of governance and policy and what it has done, say, for the capital market. So I want you to talk a little bit about that. The view towards capital markets, the wider participation of Indians in capital markets as a measure for creating wealth, and the change that you have seen.
Absolutely. It's been a accelerated journey, I would say, over the last decade. The journey began obviously many decades ago, but it has picked up pace over the last 10 years. As we've all seen how the asset management industry, which was, I don't even remember what it was exactly. I do remember in 2004, it was just equity AUM of Indian asset management companies total about $4 billion, and it's today over $500 billion, and vast majority of it has been raised over the last decade. There's a long way to go, but it's great to see that retail investors have much greater confidence in the industry, in the asset management or mutual fund funds that are being offered, and in great part the policies that the government and the regulator have encouraged in this regard has helped deepen the penetration of mutual funds in the country and rising participation by retail investors.
Most certainly. Prashant, what's the outlook ahead from a market's perspective? Simply because let's assume that we don't know the effect on the economy, but let's assume that with a 7.8 number in Q1, and even if Q2 were to wilt a bit, hopefully the rate cuts, income tax cuts that have happened, plus the GST measures will bring about a boost to consumption and thereby to the economy. Will the markets follow that, or do the markets need something else for either global capital to work alongside domestic capital for taking the markets higher? And should the markets go higher, or are they well valued right now?
I always believe markets are reasonably valued and fairly valued in aggregate and reflect these near-term macroeconomic developments. I think to the extent that the markets were, rattled, and it wasn't like the markets pulled back big time or anything, but to some extent there was concern in different corners amongst global investors as well. That whereas till 6 months ago, India was thought of as an alternative to China and the China plus one story, and to the extent that that was aiding economic growth, can that take a hit? Can that have a bump in the road with this additional tariffs going from 25 to 50? And that concern should get addressed once we have this hopefully positive outcome from the discussions going on. The positive side of this temporary hiccup is that the government has further, pushed the pedal on and made the resolve, it seems, to push further with reforms. Some of those in form of GST cut we have already seen materialize, and hopefully we'll see many more to come. The next budget, while it's 6 months away or something like that, it's good that it's 6 months away. There'll be a lot of time to work on some significant reforms, and I'm very hopeful that this acted as some form of catalyst and would galvanize further momentum behind reforms.
Prashant, in terms of where we go from here, so now possibly a double support coming in. You have GST, which will give you consumption boost from the 22nd onwards. Frankly, though, that will be maybe a temporary blip, right? Because if everyone's going to buy something new, they're not going to buy an AC and a TV and a fridge and a car. So, and that will also be a postponed decision possibly. Second is the tariff concern easing. Do you see that giving wings to the markets and also easing some concerns that FIIs may have had?
Yes, absolutely, Taman. I think some concerns of FIIs would certainly ameliorate or be mitigated if the tariff situation were to normalize, because that seems to be right now top of mind for most investors globally, even though the impact, as many of the analysis from sell side as well as what we've done shows that the impact is not that huge on the market. At least the direct impact is not so huge on the market. But yet that is a niggling concern, and that should get mitigated. And along with rate cuts, not only in India and globally, that should bode well for equity markets. So, globally markets have done very well this year. India, after many years of superlative performance and outperformance compared to emerging markets and developed markets, has taken a bit of a backseat this year. But if you look at US markets, they're up double-digit dollar terms. Emerging markets are up 25+%. China and other parts of Asia like Korea are up 30 to 40%. So markets globally have done already quite well this year. And hopefully India would do some catching up over the coming few months. But I think the markets are reasonably valued at this time. A double-digit kind of return annualized is reasonable expectation. Maybe a few percentage points stronger in the near term if all these things play out in the positive direction.
Well noted. Okay. Prashant, the telltale signs for near-term optimism seem to be there. I mean, we've seen the broader markets rise for 8 days on a trot. IPOs are now getting subscribed heavily. As we speak, Urban Company, which got subscribed about 108 times, is apparently going to be about 50-55% higher on listing. So some signs of that broader market fervor seem to be back. Is this positive in that maybe the Nifty may consolidate because, as you said, markets at an aggregate reflect fair value, but as long as it stays okay, but the broader markets and specific bottom-up themes do well? Are these signs of that?
This is actually, Neeraj, the biggest positive of a healthy or a positive or a rising market and rising participation. To the first question that Tamanna asked about, increased retail participation, and I was remiss in not adding the biggest positive impact in the real world of a healthy or a rising equity market, which is often underestimated by I would say globally, policymakers globally, is that it channels financial capital towards entrepreneurs. Fundraising, IPO frenzy, and all this. Think of the real world positives of that. So many entrepreneurs are able to raise capital, be it 1,000 crores, few hundred crores, or even SME exchange. Yes, there would be duds during the process, but so many healthy, good, positive outcomes would be delivered because many, fruitful ventures, which eventually go on to become big companies, contributing very healthily to job creation and economy, they all get funded because of this. And that's the best part of a healthy equity market. And when I see all these IPOs getting heavily oversubscribed, it's a very positive outcome, Neeraj, as I see for the real economy. Yes, you'll have booms and busts in the IPO market as well, but net it does a lot more positive good than negative harm.
Prashant, where are the areas where you see more potential coming up? Are you looking at maybe capital goods making a comeback as capex will improve? Are you seeing consumption being the next leg, financials? What are you liking right now?
From a sectoral perspective, I do think sector like financials, which has gone through a fairly difficult time in the real world. Again, this year, I think financials might have done well. But if you look at the non-performing loans, particularly in the unsecured personal loan segment or microfinance, and generally credit quality in that segment has suffered. We think that might have finally, the problems might have peaked out and should see improvement. So financial sector, the operating parameters we should see turning healthier. industrial sectors or capital goods remains to be seen, because they've had a fairly strong 4-5 years. So you have to be very well in every sector. You have to be very selective, but in industrial goods, you'll have to watch out whether the momentum of last few years can sustain over the coming time period, whether the capital expenditure from private sector indeed sustains and picks up further momentum, because after such strong growth, you would need very healthy order flow to sustain revenue and earnings momentum. Another area where I think there's a long way to go, and I don't know when it accelerates and whatnot, but so-called new age economy or new age urban company that you mentioned just now, in a way, is an example of a listing from the new age sector. That is where we see a lot of activity in the coming months and years as well, in terms of new companies coming to the market. And many of these companies are not cyclical in nature, because they're starting from such early stage in their life journey. Then regardless of economy growing at 6% or a percentage point higher or lower, these guys can sustain very strong double-digit growth with hopefully consolidation in the industry, many of them showing very improved profitability as well over the coming many years.
Prashant, one final question from mine. You reckon that export-oriented themes could do well if indeed the tariff tensions ease out, because the valuations out there relative to the domestic space have corrected despite the recent rise?
Yes, Neeraj, to the extent that they've corrected, you may see a relief rally in them once the deal is done and dusted. But to be, candid, you didn't see any massive correction other than few specific, situations, particularly in the most hit sectors like textiles and so on and so on. And there you can see a sharp recovery if the deal finalized is in line with earlier expectations of maybe tariffs on India coming in the 15 to 20% range all in.
Got it. Yeah, I mean, and yeah, maybe you're right, Prashant, that to the extent of the correction, which was also not very high, maybe a pullback, but maybe domestic currently holds center stage. Okay, Prashant Khemka, a special occasion to have you and your thoughts. Thank you so much for taking the time out, and well, lots of luck for the festive season building up.
Thank you, Neeraj. Thank you, Tamanna, for having me here.
Well, the pleasure was ours. It's a large market voice, big market voice, talking about, well, markets in the times to come, and of course reflecting upon the 11 years under PM Modi. But Tamanna, you can't take your eyes when you talk of PM Modi's leadership about what's happened to PSUs, right?
Oh yes, PSUs used to be, I would say, the least loved bucket of equity markets. No one wanted to touch those stocks with a barge pole. There definitely has been a re-rating and a clear governance will which has pushed it. What has the performance been like during the tenure? Swami Sarkar joining us for more.
Well, yes, PSUs have seen a big re-rating, and most part of this re-rating happened since August 2023 when our Prime Minister openly asked investors to bet and invest on PSUs. So the key sectoral outperformers in the PSU space have been defense, railways and telecom equipment companies. Defense and railways have been the major outperformer. Now, if you look at the companies that have seen the highest increase in the market capitalization and growth, firstly, it's Hindustan Aeronautics. At one point of time, the company was unable to pay dues to its employees, but right now the company's market capitalization stands at close to 3.2 lakh crore rupees, and it has increased at a CAGR of nearly 32% over 2018 till now. For Bharat Electronics, the market capitalization is 2.9 lakh, growth of close to 32% CAGR. Mazgaon Dock 1.2 lakh crore market capitalization, a growth of nearly 103%, and that too on a CAGR basis. When it comes to RVNL, Bharat Dynamics and IRCTC, these companies have seen their market capitalization increase at a CAGR of anywhere between 32 to 53% since their listing. For Cochin Shipyard, ITI, which is a telecom equipment company, Ircon and Railtel, their market capitalization rise is anywhere between 13,000 crore to 48,000 crore rupees, and it has increased at a CAGR of nearly 22 to 37% for some of them since 2015 and for some of them since 2017. Apart from that, if you look at the financial performance as well, it has been quite strong for all the PSU companies. For Mazagon Dock, the revenue, EBITDA and net profit has increased at a CAGR of anywhere between 12 to 25% since listing till now. For RBL and IRCTC, we have seen their financials, that is revenue, EBITDA and PAT, grow at a CAGR of anywhere between 16 to 26%. Apart from that, other companies like RailTel, for which we are seeing a 9-year CAGR growth, it has been around 18% revenue, and PAT growth has been 26%. For Bharat Electronics and Hindustan Aeronautics, both the companies in the defense space, they have seen their financials, that is revenue, EBITDA and PAT, grow at a CAGR of anywhere between 7 to 19% over 2014 till now. Apart from that, there are companies like Bharat Dynamics, Cochin Shipyard, ITI and Ercon, and those two have seen at least a double-digit growth. Bharat Dynamics here has seen a slower growth, but that is also because of the fact that their business is cyclical. But other companies have seen a double-digit growth in their financials over 2014 till now.
Thank you for that, Samit. All right, we've been speaking to top corporate and market voices this morning to talk about the impact of policy shift and change. TVS Motors, of course, has been in focus. Company will benefit from PLI schemes, GST rate cut benefits as well. The opportunity to speak with Chairman Sudarshan Venu to understand his outlook for the company's growth. Listen in. Sudarshan Venu will be best placed to talk about what the impact of some of these policy measures has been. Mr. Venu, thank you so much for your time to us here on NDTV Profit today. Any opening thoughts on the context that I've laid out?
Thank you very much. It's really my pleasure to be here with you, Tamanna, particularly on the special occasion of the Prime Minister's 75th birthday. I think it's a unique opportunity to celebrate the progress that India has made, particularly in the last 11 years under his leadership and his stewardship. And it's also an opportunity to rededicate ourselves to the Viksit Bharat 2047 vision, which the Prime Minister has outlined and which we are well on course to achieving.
Yeah. Let's talk a bit about some of those policy measures and the impact they've had. The latest, of course, has been the rationalization of GST. What is the kind of impetus you think that gives the company and helps in terms of sales? We're speaking ahead of the festive season. What's the outcome that you see over the next few weeks?
See, if you look over the last many years, many good and bold moves have happened, which has helped transform India from fragile 5 economy to a top 5 economy, and soon, hopefully, the third largest economy. The first was the introduction of GST itself, which brought one tax across the country and also facilitated, along with UPI, a huge amount of digital payments and made India a leader in financial payments and digital payments and digital financial technology overall. Then we have many other measures like the handling during COVID, the strong recovery that happened after COVID, and also the fiscal deficit being under control and the huge amount of FII and FDI that has come into India as a result. Specifically coming to the recent rationalization of GST, I think the government has rightly focused on many of the sectors which attack the common man's consumption basket and helps middle income families and middle class consumption to really grow. One of the great things about the India growth story has been the emergence of the middle class, growing middle class consumption. And now I think in our sector, you're also seeing many consumers premiumize, buy better products and upgrade as well. And all this points towards the benefits that are happening due to many of the measures taken. I think specifically with the cut in GST, there'll be more consumption of many products, including two-wheelers, which will get a growth. And I also think it's an opportunity for many consumers to upgrade their products to improve their quality of life and buy more premium products.
Of course, but a little more specifically, if possible, what is the kind of up move that you see? Because what a lot of companies have been seeing is people hold off on purchases till the 22nd of September. Of course, a lot of companies have already decided to pass it on. Is there that initial burst that you are observing already of interest coming in?
Yes, we are seeing a lot of bookings, the registrations, and a lot of interest, and a lot of people registering their interest. Of course, a lot of the sales will happen after 22nd when the auspicious period starts and also when the GST pricing transitions. I think the buzz is already there. You can feel the energy in the showrooms, and you can also feel that many customers are now, along with the liquidity easing that has been happened, finance is available, and along with finance and improved GST, I think a lot of people are poised to start consumption, and you see that flowing through from as soon as 22nd or as soon as the new rate kicks in.
I also want to talk a little bit, Mr. Venu, about the EV bikes push. Now, TVS has very quickly gone to the top of the charts in a space which is said to be, the next big push, the next big leg. Talk to me about how government policy has also helped this. There has been a very clear alternate energy push from the government coming in, and what TVS's outlook and plans are here.
I think government has pushed EV. There is a special rate for GST for EV. There's the PM e-drive scheme. There's a PLI. All this has boosted the consumption of EVs significantly to nearly 100,000 vehicles a month from zero a few years ago. We are fully committed to this, and we've launched some exciting products already, and now Orbiter will hit the market as well. In addition, I think government has given many options for sustainable fuel and invested behind them, whether you take CNG. We have CNG in a big way in three-wheelers. It will come in two-wheelers as well. Government has also encouraged ethanol, and ethanol two-wheelers and ethanol three-wheelers. And there is also the push on hybrids. So I think the combination bodes well for a greener and a more sustainable form of mobility as we go ahead. The emission norms in India are already, and safety norms are already cutting edge for two-wheelers. They're ahead of everywhere in the world. So I think India shows how you can have good emissions, exciting products, and safe ones as well.
Are there new product launches in the pipeline for these new blended fuels?
Yes, definitely. We had shown recently a Jupiter on a CNG platform which will launch. Three-wheelers, there's already CNG, there's an ethanol Apache and other ones in the works, and more electrics as well.
Just one more word on the EV space, and especially in the two-wheeler space. As more and more players come in, as this becomes, you see greater adoption, the competition also heats up. How does TVS look at that?
Of course, everybody tries their best, and we have a lot of respect for our competitors. Many of them are doing a very good job. Our goal is to focus, delight consumers, launch exciting products, and grow fast.
Talk to me a little bit about the export scenario. Exports have been a very strong part of your portfolio. There has been some turbulence with these tariff talks as well, though not too much exposure to America really. How do you look at the outlook there in terms of demand coming in on the export front?
The outlook is strong. I think for a couple of years, maybe in 23 and part of 24, demand was a bit slow on the international business side for us. Africa has come back in a stronger way. And we are also seeing the reopening of Sri Lanka, the stability hoping to emerge or emerging rather in Bangladesh, and I think newer markets like Turkey and the Middle East as well. So with this exports, you would have seen the international business of TVS and the industry as a whole has grown well in recent months, and we definitely believe that this will continue. I think also with many of the free trade agreements that have been done under the Prime Minister's leadership to UK, EU is in the works, Australia and other companies have happened, there's an opportunity to sell both premium vehicles and more delivery and entry-level vehicles in many of these industrialized economies as well. And that's another opportunity for us to grow as an industry and, of course, for TVS as well in the coming years.
As we wrap up this conversation, Mr. Venu, you are a young business leader in a regime and a time when policy push really wants to encourage how businesses grow. At the same time, we have this question about where are the animal spirits in private industry? Is there enough capex coming in? What is your promise in that sense to how you feel right now as a young entrepreneur, as a young business leader in this time in India?
I think it's the best time to be a young person in India today, whether an entrepreneur or you're doing from either an entrepreneur or whatever you want to do. India has so much opportunity today. It is a unique and special time in India's history where we are the fastest growing large economy. There's a huge amount of foreign investment. There's a lot of government support. Jobs are getting created. India also today has a unique respect thanks to the progress under PM's vision in the last 10, 11 years and his energy, India has a unique respect on the global stage, which means that you have opportunity for partnerships, you have opportunity to do international business, you have opportunity to attract foreign capital. So all this is leading to huge economic progress in India and a huge progress of India as a society. So whatever you want to do, I think my generation is very lucky to be an Indian right now, to have the opportunity in India to do great things and also to get global support and opportunities.
Thank you so much, Mr. Sudarshan Venu, for speaking with us, Chairman of TVS Motor Company there, talking about how the outlook is strong, and especially, I think, for the two-wheeler space with the GST cuts prompting more consumption boost. Thank you.
And certainly, it's a great market. It's a great voice to have. One of the premier corporate houses in the country talking about multiple things, including, well, the queues at the showrooms, if you will. It'll be interesting to see what happens then. Okay, but speaking of queues and speaking of great things, it couldn't have been better for Urban Company, Shringar House of Mangal Sutra and Dev Accelerator, because the subscriptions were so strong for each of these, and presumably the listing prices will be very, very strong for each of them. And, you know, frankly, yes, I know, Tamanna, that versus 108 times, 60 times pales in comparison in relative terms, but in absolute terms, 60 times oversubscription for both of the others is as good as any company would hope for when they go for an IPO.
Oh, excellent. And, you know, we've seen a time of pretty, I would say, medium and tepid kind of responses to primary markets. So this is showing that that appetite is coming back. Of course, it's very, very specific. It's not that every investor will want to invest the same way in any company. So these are definitely good bets. There are also at least two of the three very clear consumer discretionary spend powered bets. If you look at both what an Urban Company does and a Shringar House of Mangal Sutra, you are going to be seeing this as an outcome of people having more money in their pockets, to put it very simply. So I think that's also a good time which has shown that kind of excitement. It's not necessary that very popular IPOs do well 1 year down the line. So keep that in mind, and keep in mind what you want to do in case you did not get an allotment of either of these. That will also be a question, because if you list at a premium, I think the pre-open rate should have 53% pop as far as an Urban Company is concerned. So do you want to really come in at that point is the question as well.
Well, let's see how the listings happen, and then of course we remember the listings that have happened thus far haven't necessarily set the stage on fire, as we showed you a few days back. But since these listings are happening, so well, versus 165, Shringar House of Mangal Sutra 187.7, which is a premium of about 14.2%. Urban Company is the big one, 162 versus the issue price of 103. So that's the big one, really. And let's get those prices up on the screen. Urban Company 65%, Shringar House 13%, Dev Accelerator, I think we'll get there. Okay, actually mildly lower if you will, but I think Urban Company clearly takes the mantle of the leader in terms of price gains this morning, and not surprising simply because of the quantum of subscription. They've accelerated a bit surprising, really, moving up a bit here and there.
But UC has beaten even grey market premium.
Yes.
And what the pre-open showed, you're looking at, nearly a 70% pop right now on that stock, where the valuations were not the lowest. And, we should relook at what those valuations are going to be looking like after this kind of a premium for a company which is largely powering the gig economy in that sense. All right, exciting times. We'll take a very short break, but, we have a power pack show today. And I know you must be hearing a lot of people saying that all the time on news channels that it's a power pack show, but this is honestly a power pack show. Samir Arora on the other side. You don't want to miss it.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में। फिर 3-3 मैकेनिक, पेंटिंग, पॉलिशिंग। तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द NDTV ऐप। द बेस्ट ऐप टू यूज इज द NDTV ऐप।
Welcome back. You're watching India Market Open, and a quick check on how the markets are doing before we get to our next conversation, which is truly an exciting one. We always love speaking with Samir Arora. He brings a fresh perspective to what is happening right now, and he's, of course, founder and fund manager at Helios Capital. Samir, very good morning to you. Now, a couple of things that we want to unpack. Of course, our special coverage where on the 75th birthday of Prime Minister Modi, we're taking a look at the impact of policy and governance. There is a political and policy moved style to what Prime Minister has brought to the table since the last 11 years. What is the kind of impact you think you have seen on business, on economy and on capital markets?
Well, on the capital markets, it's easy to see because we are beneficiaries of that, which is the fact that so many investors have come into the market. And although you may say that the investors, what specifically was done is was the ease of doing things online or digitalizing things. So you can see in the mutual fund industry where, say, we are one of the recent entrants and suddenly out of nowhere, without having to set up our own infrastructure, people can go online and buy. And all this has been enabled by the fact that it was easier because of Aadhaar, because of bank account, because of people becoming comfortable with digitalization, that they could do these things online on their own. So I can see that as a big picture, immediate or a direct impact on capital markets. Now, if you say on economy, I would think that the biggest one might be, if I think about it, maybe the fact that a fiscal deficit throughout has been kept sort of in control. And the main test of that was the COVID time, where many countries have been put off course. You can see the US having their fiscal deficit go from some, I believe, 3.5% to 7 odd percent right now. And India might be one of the few countries where the deficit is below 2020 March or pre-COVID levels. And that has helped in a recent upgrade. But more than that, given room for private sector and otherwise in general to have a healthier economy where the government is not crowding out everybody else. So big picture, if you say in that sense, although if I think about it, there'll be GST and there'll be a few other things which are there. But for capital market, that would be the biggest. And for economy, I would think in a big picture sense, the fact that private sector has been allowed to grow and not be crowded out might be the biggest.
Samir, you fear that is happening?
Which is?
The private sector crowding out?
No, not private sector being crowded, because it has not. Indian deficit has not increased. So we have been saved from that.
Yeah, okay, fair call. Sorry, I
Otherwise,
misunderstood.
you can see what has happened to the US dollar itself, which has blown up by 12-13%. And Ray Dalio is writing a book on how nations go broke. If our deficit had become 7-8% instead of 4%, which in that 1 or 2 year period that everybody was doing after 20, then it will be very, very difficult to get it back online.
Yeah, which is why I think that the red line, that the GST conclave, the FM reiterated that 4.4 is sacrosanct, nothing doing with that. Everything else can work around it. Okay. Samir, I presume you just came back from the US, right? About a couple of weeks out there. If anything, aside of the GST reforms, the most important thing on everybody's minds is how is it that, the relationship sees a thaw? And what is it that large global investors might think of it as well? You are a large global investor yourself, and you have large global investors in your funds. Give us some insight.
Getting a few more, by the way. The good news is we might get, touch wood, 1 or 2 more in a few months too. So the point is, I met them last week when this thawing was not fully done. Fortunately, yesterday, day before, we can see these tweets which look very nice. But actually, last week also, that first round had happened where I think Mr. Modi had responded to Trump's talk somewhere that, our relationship is good and I like Prime Minister Modi personally and all that kind of thing. So after that, when Mr. Modi had responded, that had happened. So we were telling that story that don't worry, this is the bottom of the relationship or the peak of this harmony or whatever. But in general, because people even otherwise did not believe that the 25% additional tariff, which was only put on India, and then one lady said, no, it's been put on Brazil also, that they are also at 50. But anyway, so that 25% extra everybody thought was sort of temporary. Therefore, that was not the main issue. I think we were only from our point selling that, see, we generally, India as a market has done well over the long term, even 5 years, and last 1 year and year to date difference is too big. This catch up will happen. And even though all these guys claim to be long term, they also want us good sort of entry where you don't wait 1 year to be proved smart. So all these things are working. Plus, in India's case, the thing is, it is easy to say that this slowdown is happening because of one sector, which is IT sector, and either IT sector has to become cheap or it can be ignored forever as far as I'm concerned. So we were saying just look at where the growth is and don't worry in aggregate, because the aggregate one sector has been affected. Plus, many people, not me as much maybe, but many people feel that the AI boom has gone on too long or that it's very speculative. And there'll be some X% people who will want to play the rest of the world. Currently, Korea, Taiwan, and US are doing well, basically because of people betting on AI. And then there'll always be a crowd which says that either it's overdone or they would like to diversify or they want to be more balanced. So India will continue. I've been telling India will get its FII flows. There's nothing to worry on that. It might be less or more, but you will not have negative flows when every other country is getting flows, basically being diverted away a little bit from the US.
So, Samir, I wonder sometimes if we are able to look objectively at what India is seeming like from our lens. Because the fact is that the kind of results that we've seen or corporate growth we've seen so far in the last couple of quarters has been below par. Do you see that changing with this GST push, with tariffs easing, etc.? At the end of the day, corporate performance is also needing to keep up.
It will, because simply if you look at the three pools, one pool is financials. And the financials, which are dominated by the big banks, they have had a below 10% type of growth because of interest rate cut and NIM compression, which they themselves are saying, and everybody agrees that that is a matter of 1 or 2 quarters, that from next year, because this becomes stabilized and the interest rate cuts pass through to the deposits and all, that over time that NIM goes back. And generally the thumb rule is that the financial sector or the banking sector grows about 1.5% to 1.7% of GDP in nominal terms. So you will get back to that 14-15% growth. I'm only worried about the IT sector, but the IT sector today weight is about 10-15% because they are not going to grow 15% like or even higher than they used to grow in the past. Maybe they grow from 3% to 8%. So that compression will be there. But even the consumer sector now, whether it is one-off or it is catch-up or it is pent-up, but you're going to have a massive 1 or 2 months starting on whatever 22nd, and then this thing feeds on itself because then you move on with life and there is a cycle that starts. And my general rule is that these growth rates and slowdowns don't happen for a quarter at a time. Once they start, the positive spiral starts. And similarly, if there is some, or not similarly, but in parallel, if there is some reduction in the pressure on India-US relationship and the 25% extra is removed, the extra tariff, then that also will start. Maybe it'll be a little lower than before, but definitely higher than recent expectations. You have seen that already in the textile stocks, which we used to also own, we still own, which was down some 35%, and now this month is up 22%, but of course still down. So all these things will start again, and the pressure on jobs and salary cuts. I heard today that one company has made 25% salary cut across the board because of US impact on exports and or pressure on exports, and all these things will then normalize if these things get sorted out. So you will have higher growth than this year, I think, for sure. And then we see how it goes. But also please note that if China is up some 60% and we are up 1, and emerging markets are up 25 and we are up 1, then our relative valuations have also a little bit corrected, right? Which is one of the issues in the past.
So people will stop saying expensive market. Okay, I just want to get your view, Samir, of all the excitement in the primary market. And we're talking at a time when there is, I would say, a monster hit of a debut. Of a platform company coming in, mid kind of a response to another consumption-facing company. You think that IPOs could give clear value to investors, or you'd stick to the tried and tested, stay away from IPOs no matter what?
No. IPOs will not give any value. IPOs are doing well because some previous 3 IPOs, after falling 75% from there, have done very well. And therefore, the world feels that, oh my God, this trade is too easy. It is not at all easy. And you can't start and then go up 50%. And if your profits have been there 1 year, you need to see that path. But there is that initial pop that normally happens in a very good market. But after that, to buy it 50% higher, by the way, our mutual funds are anchor in this company that you're showing. But I would say there is no question of anybody buying it from our company today. Or then it has to settle. It has to at least.
No, but you are anchor investors. So let's talk about the merit that you saw.
That's what I'm saying. I'm saying there are 2 elements in that. One is that the anchor is 33% lower than what it is today, I believe.
Okay.
And so and it's up 50% or whatever. So that is one. Second is that you get in a little bit initially to sort of follow it properly. But when you are, because that position, by the way, when you say anchor, it looks like such a big deal. But even for a very small mutual fund and a very small allocation, it will be like 0.1% or something, or 0.2%.
Writing about the size of the allocation, seeing the response right now, and of course we're talking about urban company here, to be clear.
For allocation for everybody, even the big guys, because their AUM is big, even for them the allocation as a proportion of their AUM is 10-15 basis points, right? But when you can buy in the market, you can straight away buy if you want 1.5%, and that needs a little bit different this thing in terms of it's settling down and being at a price which you are comfortable with, for then holding it forever, or for at least next many years or 2-3 years. So that takes time, and that we will see.
Okay, in terms of pockets of value, and we've spoken in the past about platform companies, do you see this as a continuing uptrend as people have more discretionary expenditure and those possibilities? Where does that money get spent?
It has nothing to do with discretionary expenditure, because then they can buy anything. It is to do with the fact that their mode of spending that money has changed. So when you are talking about food delivery and maybe quick commerce, it's not that people have discretionary money, so they are spending more there. It is because they are choosing to use that channel instead of some other channel. It is not that the end growth has gone up a lot. When you are buying insurance online, it's not that you are buying more insurance. You are just buying it through online instead of buying it through an agent. If you are using money and paying, if you are using cash and paying through a phone or a phone app, it's not that you're spending more money. It's just that you're not spending physical cash. This is easier to imagine, easier to understand. The convenience is easy, but you're not still making any assumptions about end demand and people having spending more on these things. No, no, no. That bet would be a different bet. That is the bet which is more confusing, because you may say that the end consumer growth is not there, that new jobs in IT are affected, that, the issue with otherwise the negative part in some sense that there is not enough jobs. So that if you're betting on higher jobs, higher absolute consumption, that maybe GST triggers it, but not the platform companies. Platform companies are just basically proving to you that some things have become more convenient way of using or buying, and that is why people are going there within the same pie.
Sameer, your fund are giving remarkable returns. Now, what is this? Is this a change of strategy? Is it the fill it, shut it, forget it, done for the past, but you're doing more nimble? What is it? Since inception,
By the way, just for information, although our fund is 1 year old, I've been coming on your channel for 20 years and I've been a fund manager for 30 years. And actually, the 30-year information is available publicly.
Yeah.
Our performance in the past, when I was a fund manager or when we were managing or still managing the long short fund, and that's only a long short fund, it is all available publicly. So it is odd to keep talking about 1 year performance. You should look at our 30 years and compare to every fund of India, not just.
Okay, no, Sameer. Okay,
so what I'm saying, I'm not going to answer it because it makes it look that we have just suddenly come and bought one Zomato, and that is the reason.
Sameer, your credentials don't need to be explained.
Okay, fine.
It has been answered for 30 years.
Okay, fine. Fair call. No. So see, Sameer, I remember a year and a half ago when we met in Singapore and then you came on air, we spoke about that idea too. Just because this strategy is new for retail investors, somehow retail could never subscribe to your funds earlier.
We've been basically saying that you don't know exactly whose turn it is next. You buy 30, 40 companies, of which 20 will do plus minus same as market, and 10, 15 should do much better, and some will do much worse, because you cannot totally avoid, and don't be embarrassed about it.
Yeah.
But this strategy has been working in our PMS since 2011 and my long short fund since 2005 and before that in Alliance. And it seems to have worked in every slightly longer or even literally every year. So it depends, not literally every year, but broadly very high frequency of beating, because we are not taking big bets, and we are also different in the sense that we don't believe that you can buy a 20-year or a 10-year story straight away, because not only you don't know, the managements of those companies don't know anything. Just to leave one line, that the Netflix guys went to Blockbuster and tried to sell Netflix to them for $50 million. And the Blockbuster guys refused it. And now that is worth $500 billion. So if the promoter, the owner, the founder of the company did not know how we can buy something for 20 years and say that we have bought it and filled it and shut it. No, we can buy that stock these days. But we used to have this ad.
Yeah, no, having said that, Sameer, the 30-year record shows that, you have a knack for picking those winners. And it's not as random as you're making it out to be.
So, we are making it as an educated guess, or guess is the maybe.
So what is the guesstimate right now, or the educated analysis right now? What are the ideas that you're finding interesting? Leave us with a nugget.
No. See, that portfolio is public in India. Mine will be plus minus similar here. But the point what I'm saying is we don't know exactly, but we know that if you buy a bunch of or 10, 15 stocks, some of them will do very well because the common factors are there. But you can't literally talk about any one stock, because sometimes that stock doesn't work. And therefore, if you see our portfolio, we'll have 2%, 1.5%, 2.5% in maybe 20 names. And out of them, then sometimes they work disproportionately. Like this year, car trade worked, and then Ather worked, and then Ola worked. And Ola also worked a little bit. Paytm worked, and Zomato worked. But sometimes some of them won't work. But you're not, even then, we keep talking about these stocks, but if you see their weights, you can see them in the domestic portfolio, they'll be like 2.5%, 3%. People get very upset that how, if you knew about this stock, why, and you knew this stock was going up 50%, why didn't you buy more? Because we didn't know it will go up this much, but we know as a bunch, enough of them do well, and then some of them don't do well. So don't be embarrassed about it with some, people who commit too much investment to one name, then get sort of tied into that name. We tell everybody that some of them will not work, and we'll be happy to move them to some other name without any embarrassment and any explanation.
I think that's interesting. Don't be embarrassed about what doesn't work, and don't crow too much about what works. I like the Samir Arora formula, the way of thinking. Thank you.
You can see that simply from the weight. You see the noise that is made, say for our Zomato, but if you see its weight in the mutual fund, it will be 3.5%, 4%. Now 3.5% for somebody else might be their tail stock. For us, it is our great, well-publicized stock, which has, at least for the older funds.
What is the one bet which is not so well publicized?
No. Actually, there were many like that which suddenly happened because Ather, we were in the anchor, and that was one of the ones we bought later, and it is up some 70% in less than a year. That way, even car trade is up maybe 150, 200%. But our weights are small. That is the whole game. Yeah. The game is that no one stock should prevent me from watching Netflix in the night.
I don't think anyone prevents Samir from doing anything he wants to at any time of the day.
It's a big position and it falls and you can't watch.
I don't think anything disturbs your peace of mind. Well, to that, thank you so much, Samir Arora, for speaking with us. Always a pleasure. From that conversation, and Samir Arora talked about a lot of platform companies. There's another one which is in focus today with a nearly 60%, a little more than a 60% premium after its debut. We're talking about Urban Company. Let's get the SWOT analysis with Mahima. Good time to go into the details of what's working and what's not for this company.
Absolutely, and stellar listing, I mean, to say the least, with the kind of subscription that we saw for the IPO as well. 109 times it was subscribed for overall. Just to give viewers a brief of idea of what the company does. Everybody knows it's an online marketplace for beautician services as well as home services. Now, in terms of financials, the company has turned EBITDA positive this year. That's an important point to note. And in the past 3 years, the revenue is nearly doubled. They're going to use these funds for new technological development, plus some lease payments and some marketing activities as well. In terms of valuation, this is an interesting one. Now that it has gotten listed over 60% premium, the valuations will be around 16 times price to sales versus that of 8 to 9 times for any platform company. So valuations don't look cheap here for something like an Urban Company. In terms of where the SWOT analysis stands, well, strength, of course, the growing consumer engagement is a big one, is a big strength for them. Plus, training and skill development has always been a moat for Urban Company. But in terms of weakness, of course, they are very much dependent on the particular service professional, and in terms of the secrecy also, they have to make sure that the service professional is happy for them in order for them to stay on the platform. Plus, technological advancements are happening every day in and out. So that is one of the things they need to watch out for. Opportunities, of course, they are tapping into tier 2, tier 3 cities, and there's a huge runway out there. Even in terms of expansion of services that are being offered right now, we recently introduced the InstaHelp also. So there's a big runway out there as well. But threat, of course, there are startups that are coming in the same space with a lot of funding that they are bringing in, something like a Yes Madam coming in. So a threat coming in from competition is also there. So this is the overall view of the SWOT analysis of where Urban Company stands.
It is a rock star debutant, no doubt. All right, let's see where they've ended. Shringar House of Mangalsutra, Urban Company, 3 debuts actually today, and let's see where they are before we wrap up. Okay, 65% premium on the issue price for Urban Company. For Shringar House of Mangalsutra, it's 13% odd and 5% for Dev Accelerator. So not a bad day at all for the primary markets. I think markets also steady as she goes, so not half bad.
Did you say steady as sugar?
As she goes, I'm picking from your
Steady
line.
as she
Your
goes.
your favorite line. Steady as sugar.
I was like, okay, interesting.
We'll take a very short break on India Market Open, but remember that Chris Wood interview that you don't want to miss at 11. In just a short while from now, Neeraj and I will be back to speak with him and so much more.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे कोई मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूँ, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy. Profit. I am Mahima Vachrajani. With me is Puneet Jhaveri, and you are watching Ask Profit. Well, Puneet, good day for the markets for sure, to say the least. We are well above the 25,200 levels today. Yesterday I was happy saying 25,100 level, but today I'm happy saying we're very well above the 25,200 levels. The Nifty 50 up 0.4%. The Bank Nifty also following the same on the same lines, up 0.4% as well. The broader markets also doing fairly well, but let's try to pull up the Nifty 50 heat map, because that will give us a picture as to what are the counters that are actually leading to that gain in the Nifty. And there you go. Those are the counters that are actually contributing to the entire Nifty 50. Tata Consumer, Bharat Electronics, Maruti Suzuki, Grasim, all seeing gains of about 1.4, 1.5 to almost 2.7 odd percent, with Tata Consumer seeing gains of about 2.7 odd percent. Some counters in the red, although include Titan. Titan continues to lose ground, probably third day in a row now. Tata Steel down 0.6%, Power Grid, Cipla, Hindalco, ITC, some counters in the red. The broader markets also doing fairly well. The mid cap 150 almost in line with the benchmarks. The small cap 250 of course doing way better than the mid cap 150 and of course the benchmarks. But specific counters, Puneet, moving in trade, and especially newsmakers. If you take a look at the BSE 500 as well, and that's the texture of the market right now. Very stock specific. There you go. KNR Construction, LG Equipments, PNC Infra, CE Automotive. Some counters in the green, but Borosil Renewables, Britannia, NHPC, Britannia top loser on the BSE 500. Yesterday saw a decent amount of gains, but today seeing profit booking. Gujarat Fluoro on the back of that block deal promoter selling stake. But that's with regards to where the markets stand. Let's welcome in our guests for the day then. Rajesh Agrawal, Head of Research at AOM Capital, and Vaishali Parekh, Vice President Technical Research at Prabhudas Leeladhar, are joining us now. Welcome to both of you, and a very good morning to the both of you. I'll take up the first question, which is from Pakshal, who is joining us from Bellary, asking about PI Industries and wants to know if he can hold for the next 2 years. Though he's asking technically if this is possible, because he's saying that if there is any chance of breaking the range in which it is trading. Vaishali, 2 years, slightly longer term perspective view, if at all you can give on the charts for PI Industries.
Very good morning, Mahima, Rajesh. Yes, so actually PI Industries, technically speaking, currently, it is at a very good support level. Now, if 2 years is the horizon, I'm looking at it, well, it is showing a double bottom formation. It's actually getting into a trend. So I would say, yes, one should hold for 2 years. But having said that, keep a stop loss of 3,500. And I think in all likelihood, we will go step by step. If the stock sustains about 3,900 levels, we are looking at a target of 4,400 to 4,800. So that's how I would trade this stock with a 2-year horizon.
Got the view, Vaishali, and good morning to you. The next question is coming in from Bengaluru. Arjun is writing into us for a long-term view on Kitex Garments. Now, he's asking for a 5-year view, but let me go across to Rajesh for this. Rajesh, very good morning to you. Thank you for joining in. It's Puneet this side. What's your view, if any, on Kitex Garments? Because it's a long-term view that our viewers asking. We've seen the garment space also in focus and textiles post the GST rate, as well as what's happening with tariffs. Any view on this one?
Good morning, Puneet. Good morning, Mahima. Good morning, Vaishali. As far as Kitex is concerned, I think the entire textiles pack as a whole is looking exciting because of various reasons of the GST cut. The FTA is being talked about and all those things. But the thing is, Kitex is not something that can be held for a long period of time, maybe 2-3 years down the line. There are better choices in the textile universe, I would say, like the likes of Vardhaman Textile or Wellspun, or even you have Arvind, Gokul Das. There are better choices than going for Kitex. Kitex, of course, in the short term, it can go up to 240, 250 odd levels. That's the upper side we believe at this point of time. Based on their numbers in coming quarters, we can take a call whether it should be held for 2-3 years time horizon. But at this point of time, at this maximum upside from these levels is to be 250 odd levels.
All right, so that's with regards to where Kitex Garment stands. We've got our next question from Bhaskara, who is writing us from Hyderabad, asking about Som Distilleries. He's got 40 odd shares at the rate of 142, currently trading at 134, and wants to know if he can continue to hold or maybe wait for some time and get back to the green levels at which he's bought in at. Vaishali, your view with regards to where charts are concerned for Som?
Currently, even if I'm looking at a longer term horizon and even on a daily chart, I think it is showing signs it's at a support level. So continue holding, keep a stop loss of 128, and the stock can get into momentum once we see this stock moving above 150. So for now, let's keep a range of 128 to 150 levels.
Got the view. Vaishali, the other questions coming in is from Amchi Mumbai itself. Malika Mehta is writing in for a question on Amber Enterprises. It's a stock that's also in focus today. They've announced a 1,200 crore QIP, and while it's not reacting that much, it is a huge fundraise for the company. Rajesh, let me come to you on this one. Valuations definitely pricey, but your view on Amber Enterprises?
You said it right, Manish. Valuations are priced. And that's the main reason the stock had not reacted to the QIP news. Otherwise, you see the fundamentals are great. They are doing very good in AC business. Lot of PLI, lot of new orders pouring in. But the fact remains, the valuations are on a high side, almost at 3-digit P. I don't believe there are much of upside left in the near future, I would say. Maybe levels of 8,500, 8,600 would be the optimum, unless, of course, the numbers start coming in a dramatic way in the next few quarters. So at this point of time, that would be the levels to watch out.
Okay. Viewers, breaking news coming in your screens right now. IT search on Marico. Mumbai Income Tax Wing has conducted survey action at companies' several offices and factories. That is what sources are suggesting us. Survey operations across Marico offices, manufacturing units, major dealers have happened. And this is linked to scrutiny of certain foreign funding transaction is what sources are telling us. In fact, Shrimi is joining us now to give us more details on that. Shrimi, what are you picking up?
Yeah, so it's a developing story, and what we are picking and as we speak is that it's a full-fledged search action actually, and not survey action. Remember, survey action is just covering premises, but this is full-fledged search action by Income Tax Department Mumbai Wing, and what we are learning at this point that it's across the Marico location, including offices, their manufacturing units, and in fact major dealers which they deal with. And according to initial information, what we are understanding at this time that it is linked to scrutiny of certain foreign funding transaction, and in fact a team of officials have been deployed at several premises to examine Marico's financial records and trying to gather evidences. And what we are also learning here is that department is in recent months intensified its focus on cross-border funding, compliance and disclosure norms. And there are certain, leads department has on the potential irregularities in the capital flows as well. And what we are also learning at this point that the current action at Marico, adding to a series of similar survey and search action across the prominent corporates in FMCG and consumer goods space. But since it's a developing story, we are just hearing that it's just not survey. They are actually having a full-fledged search action on Marico.
Okay, Shrimi, thank you for bringing us those details. Viewers, we'll keep you updated on that story. It's a developing story, as Shrimi mentioned, and we'll have to wait and watch out for as to what is the outcome of this search that's happening. All right, coming back to the queries, Gaurav Baheti is asking the next one. He's writing us from Hyderabad and asking about Bank of Maharashtra. He's buying prices at 56.45 and got 415 in quantity. He wants to know if he can so basically he's saying he wants to exit by this month and wants to know how high can the stock go from the current market price. Vaishali, on the charts, what do you suggest?
So on the chart, so this has already shown a very good bullish candle. Keep a watch at 57, 58 levels, and that's where we are. If it shows resistance, because today's volume is also quite high, if it moves past 57, 58 levels, we can see the stock going towards 60. So short-term basis, 60 should be ideally the level, but keep a trading stop loss and look for the target.
Okay, all right. So that's the with regards to where Bank of Maharashtra is concerned. But the other new listing that is in focus today is Shringar House of Mangal Sutra, and the kind of listing gains that we are seeing right now. It's cooled off a tad bit, but still seeing gains of about 11%. To take us through what are the future plans for the company, we are joined by Chetan N, who's the CMD of Shringar House of Mangal Sutra, and Vraj, CEO, the director and CEO of Shringar House of Mangal Sutra, joining us now. Welcome to both of you, gentlemen. Vraj, I'll take up the first question with you. First of all, congratulations to the both of you on the stellar listing. Just want to understand from here on, I wanted to you understand the trajectory of the total borrowings that you have on your balance sheet. You've not said that any of this fund will be used for reduction of debt. It will majorly be used for working capital requirement. Any idea on debt reduction?
So I would like to emphasize on this that currently company is not planning to have any debt reduction. We are the expansion plans we have. So keeping that in mind, we would like to keep the debt maintained as it is, and also increase the working capital through the medium of the IPO as well.
Okay, Viraj, in terms of the total revenue in the past 3 years, we've seen it grown from a 950 crore to almost 1400, over that 1400 crore. Just want to understand that from here on, what are the targets looking like when it comes to the top line and your bottom line? What is the kind of, let's say, growth CAGR percentage that you're looking at?
So if you see the last 3 years records, there has been a decent substantial amount of growth in terms of the revenue as well as profits. And after this IPO and the growth we are planning, we would be maintaining the same range of growth, and will be thriving and working hard towards increasing it and going in even further. As the customer base we have, the support we have from the industry, our customers, and the growth plans they have in future. So to be with them and to go ahead hand in hand, I'm sure we will be able to maintain the growth as it has been through the years.
Chetan, what is the demand looking like? Just want to understand for your product especially, because from what I understand that because of rising gold prices, we've seen that the buying trend right now is for lightweight jewelry. So even in Mangal Sutra, I believe that people would be moving more towards Mangal Sutras which are lightweight. What is the demand trend looking like? And secondly, your thoughts about the rise of lab-grown diamonds. Will you also be incorporating them in your products?
यस मैम, पहले तो मैं आपको बता दूं कि राइट नाउ मंगलसूत्र मार्केट इज अप्रॉक्सीमेटली 17 to 18,000 crore in India, and research says that in 2032 it may be about 30,000 crores. So again you are very right, gold price is going higher and higher, but the demand of Mangalsutra is remains same,
right?
Because this product is a regional product.
Got it.
के साथ चलता है.
Got it, Chetan. Thank you so much, Viraj and Chetan. Thank you so much for taking out the time and speaking with us at NDTV Profit. Shifting to other listing that is in focus today, up 66%. The listing gains are quite significant for something like an urban company, and Agni is speaking to the management. Listen in.
21, our net revenue from operations was about 248 crores. That rose to 437.6 crores in FY22, then about 636 odd crores, 828, and eventually 1144.5 in FY25. So from 248 crores about 4 years back, it rose to 1144.5 crores in FY25. We had about close to 6.8 million, 68 lakh annual transacting users in FY25. These are users who did at least one transaction. We also disclosed in our DRHP and RHP that nearly 82% of the business in FY25, 82% of the net transaction value came from repeat users who were acquired prior to FY25. And that number in the first quarter of FY26 rose to above 85%. So it's a repeat business. It's a business of trust. We have to be hard at work to train and upskill our service professionals, to give them the right tools, the right technology, the right SOPs, the right processes to really delight our consumers so that those consumers can keep coming back to the Urban Company platform and keep transacting with us.
So when we say recurring usage, recurring means what's the frequency there?
Sorry, no follow-up questions. Thank you. We'll take one question at a time.
Hi, congratulations. This is Shilpa here from CNBC.
Yes.
Stellar listing, so huge congratulations
Thank you.
there. Just quickly touching.
All right, so that was the management of Urban Company. In fact, Puneet, I mean, it's cooled off a bit, but 67% for a new age tech platform. I think that's the way ahead, it seems.
Yeah.
I mean, of course, it's turned EBITDA positive in FY25. Of course, the profits that were shown, the bottom line, of course, did include a large chunk of it coming in from the deferred tax. But let's see as to how 26 shapes up, because that will give us a picture as to whether the company will be able to actually, get into that profitable territory.
Because the valuations are actually not that cheap, right? Because if you take that, and now with that 60% premium, I think you'll put together the numbers of what that looks like as well. But let's actually ask Rajesh also this about it. Rajesh, thank you for patiently waiting by. Your view actually on both the listings, but specifically also on Urban Company. Do you think that right now it's gotten way too expensive because of this listing gains?
Puneet, I think today is a good day for all the new listings. All the three of them have listed on a premium. And Urban Company has gone up to 70-75%, if I'm not wrong, listing gains. The operations has been strong. As the management said, that the repeat business is there, the beauty and cleaning, not only in India, but they're doing into Middle East also. They're selling their own products too. But the thing is, the valuations are too high. If you look at the numbers, the first quarter earnings came to just 5 paisa. So trading at 170 odd rupees, you can imagine the kind of valuation it's commanding. It's almost, if I'm not wrong, around $3 billion odd at this point of time after the listing. So the valuation is huge, I would say. I don't know about the market, it can push up to around 180 or 200 odd levels, but I am very skeptical at these valuations. I would suggest a booking of profit if somebody has got the allotment.
Rajesh, and you're not wrong in saying that the valuations are expensive. I was just telling Puneet that it's 16 times price to sales now at that 60% premium listing. And if you take a look at these other platform companies, they're still trading at 8 to 9 times. I mean, so it's almost double of these platform companies' valuation. So yes, valuation is not looking cheap for sure. But let's take up the next question then, which is from Chanukya, who's writing us from Hyderabad, asking about RVNL. He's got 700 odd shares, bought at 337 a piece, holding since the past 3 months and wants to hold for another few weeks. His target is around 380. Vaishali, do you think that's achievable?
So, the stock has already got into a trend. So, yes, in fact, even we have recommended this as a trading strategy. So, if he's holding, I think keep a stop loss of 345 and 380 is the tough resistance. So, all going well, this is likely to go towards 380, but 345 stop loss is a must.
Got the view, Vaishali. The other question, it's an international query coming from Florida, USA. So thank you, Harin, for writing in to us. He has a question on Adani Green Energy. He's bought it at a price of 1,046 per share, and he's asking for a 4 to 5 year time horizon. So Rajesh, let me come to you. While it's a long-term view that the viewer is looking for, any specific view that you have on Adani Green with the advent of renewable energy as well as the increased order book as well? Any view on the same?
See, the fact remains the government is focusing on renewable energy, reducing the carbon footprints and all. And these kind of companies going forward has huge prospects, I would say. As far as Adani Green is concerned, with the kind of capacity, with the kind of order book, I think long-term looks very bright. By any chance, if it falls to 950, 940 or levels, that would be a good adding point. Somebody holding at this point of time can continue to hold.
Adani Green is also a part of the Adani group of companies, and so is NDTV Profit. We've got our next question from Raghu, who is writing us from Mysore and asking about Max Healthcare. He's got 100 odd shares at the levels of 1174. He wants to hold this from a longer term perspective for the next 5 years. Is that the right thing to do, Rajesh?
Yes, one can continue to hold. Healthcare as an space is looking very exciting. Not only Max but other players too. With the kind of bed to patient ratio in our country, with the kind of focus on medical insurance going forward. Organized players are looking very exciting. They are expanding their capacities, and not to forget the foreign medical tourist arrivals in our country, which are fueling the growth. I think Max is a good choice. One can continue to hold.
Got the view, Rajesh. The other question that's coming in on is a company that's been in focus, Apollo Microsystems from the defense space. And Chandrasekhar is asking us for a long-term view, what could be, what is the recommended price essentially? Because he's looking for a buying recommendation on a stock, so he's not entered the stock yet. Rajesh, do you have any coverage on this one, and what's your view?
See, it's a defense company, no doubt on that, and doing very well. The order book is good, but it's a very small cap company, I would say. And when you're looking at long-term horizon, by long-term I mean something anywhere with more than 18 to 24 months, then you shouldn't be worried about 10, 20 rupees here and there. So if you are planning to buy, you can go ahead, go long in term. If not in a lump sum, go by a staggered manner. 300 would be a good levels to look at.
The next question is from Govind, who's writing us from Hyderabad. He's asking about Action Construction and wants to invest 2 lakh rupees in this particular counter and wants to know if this is the right time to enter or not. Vaishali, do you think this is the right time to make an entry into Action Construction?
Let me just have a look.
Sure.
So I think Action Construction currently at 1114. I think why not? Because stock is showing signs of improvement. And I would observe a range of around 1050 to 1150 for now. And we go step by step. 1250 is an actual resistance level. Once you see the stock moving above this and sustaining above this, then I think it's ready for an upward trajectory. So for now, the risk-reward ratio is pretty favorable to get into a buy trade.
Got the view, Vaishali. The other one is coming again, another international query. So Rajesh Maheshwari, thank you for writing in to us from Singapore. He's asking a question on Tata Steel, roughly holding about 1,000 shares of the company at 125.5. So he's gotten it at a decent price just before we started seeing that uptick on all these metal counters and steel counters. He's asking a short to medium term outlook for this one. So let me come back to you, Vaishali, on this. Do you have any sustained momentum on Tata Steel going forward as well?
I think, the stock can do 177, 180 levels because it's already in a good trend. And after a good consolidation, the levels are still intact. So I would say with 165 as stop loss, this can go towards 180, 182. That's it.
Okay. The next question is from Suman, who is writing us from Kolkata and asking about Reddington. She's got total number of shares, that is 160 at an average price of 269, and wants to know if she can take some profits and maybe shift to some other counter. Vaishali, we saw a significant rally in the counter yesterday. Your view with regards to whether the momentum is still constructive on the charts or whether Suman should book some profits and go to some other counter? If yes, what would that counter be?
In fact, it has just come out of its trading range, and I think continue holding because if bought at lower levels, this stock is likely to do 333.40. So yesterday, of course, it was a very strong up move. We can see some consolidation happening, but 270 should act as a support, and right through this can go towards 330.
All right, Vaishali and Rajesh, thank you so much for taking out the time and giving us those insights. Viewers, time to slip into a very short break, but don't go anywhere. We have a conversation lined up for you, especially with Chris Woods on the other side of the break.
the best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL
that?
for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in that?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hello, Moto.
Thanks for tuning into this very special broadcast. And at the point of time when the India-US relationship seems to be thawing, if I can use that term, and people would want to know about what is it that some of the biggest global voices will be thinking about this, about the reforms, GST reforms and others, and the markets ahead, particularly in a year when the Indian markets, contrary to the past, have moved sideways. You can't think of a bigger and a better voice than Christopher Wood, Global Head of Equity Strategy, Jefferies, Tamanna.
Absolutely, and we're pleased to welcome him on the conversation with us today. Chris, great to have you with us here on NDTV. Thank you so much for your time. You know, I'm recalling your comments, and because we started the conversation in the context of the India-US relationship on your last note, where you talk about, and you call it out quite clearly, that perhaps what President Trump is not too happy about is not getting credit, what he sees as credit, for solving India-Pakistan or the ceasefire. Do you think we've moved some miles away from there?
Well, yes, the sort of vibes suggest we've moved a bit beyond that. So I think it's perfectly understandable why people's expectations that some kind of deal can be agreed have improved. And there's got to be, I would say, a 50% chance that something's agreed in the next few weeks, months.
Wow. Chris, in which case you couldn't have chosen a better time for your conference, right? I mean, what's the mood now? The mood maybe 4 weeks ago would have been different. The mood currently would be palpably positive.
Yeah, but this whole tariff thing has not really hit the stock market that badly, right? So I think because in the first instance, no major listed companies are impacted. But if I'm wrong and we have 50% tariffs still in a year's time, then clearly there's going to be a macroeconomic negative ramifications from these 50% tariffs. And I certainly would never have expected at the start of this year that India would be facing 50% tariffs.
That's actually, you're right, Chris, that's something that took everyone by surprise, which is why are you also seeing this thaw with a bit of a question mark? Let's see where this pans out. Or to your mind, 50% on tariffs on India is not something that's sustainable or feasible at all?
Well, to me, the base case is that it'll be relaxed by the year end. But if the demands from the US remain that India open up agriculture, then I don't believe there's going to be a deal. And if the demands remain that India stop buying Russian oil, then I don't think there's going to be a deal. But there is a potential for India to reduce buying of Russian oil simply because the price differential with world oil reduces. But that's a different thing from being ordered to stop buying Russian oil by the US.
Yeah, I think you hit the nail on the head. Ordered is the key word in that sentence. If I were to ask you very clearly and simply, what is worrying global investors right now when they look at India? Is it the 50% tariffs or is there something more?
No, it's not. I don't think it's the 50% tariffs. This is a year where clearly the FIIs have record low ownership in India. Our base case is that the Indian market is currently trading sideways because we've got a situation where the market's supported by the incredibly impressive continuing domestic inflows into the mutual fund industry. And those inflows are helping to absorb the other feature of the Indian market right now, which is supply from the corporates as corporates take advantage of the high valuations. So this supply is being absorbed by the mutual fund flows, and essentially India has been trading sideways. And I view this year as a year of healthy consolidation in the Indian stock market. And I'm hoping next year we see a pickup in earnings growth driven by a pickup in nominal GDP growth, which will allow the Indian market to do better. But we still have this question of relatively high valuations in the emerging market context, and we have the ongoing issue of equity supply.
So, Chris, maybe in the last 3 months, culminating into this conference, what is the most asked question to you from investors who read your notes or who've come to the conference to hear you?
Well, are you asking about foreign investors or from a foreign investor standpoint? Yeah, India is not being flavor of the month because one reason India's basically been trading sideways, but clearly India's been a big underperformer in the emerging market context, and that's simply because other markets have done well. So a year ago, China put in a major bottom, and definitely foreign investors, fourth quarter last year, first quarter, I'm talking calendar year, first quarter this calendar year, foreign investors were selling India to fund increased investments in China. And that has made sense because China put in a major bottom a year ago at about 7-8 times earnings. More recently, the foreigners have been selling India to fund increased positions in Korea. Korea's done very well this year, and foreigners had to play catch up. And they've also been having to put money back into Taiwan. I'm talking about emerging market investors because Taiwan is the same trade as the US stock market running on the AI capex theme. So to me, the chances of returning to foreigners returning to India grow as we get near to the end of this calendar year, because hopefully we will start to see evidence of a pickup in growth caused by the various policy easing seen this year, be it RBI easing or be it the GST cuts. And clearly, one positive spin-off of this US tariff situation is it accelerated the simplification of GST and the cuts in the GST rates. So in that sense, the US tariff thing will prove a medium-term positive.
Chris, for a lot of people, India is missing the AI theme, a couple of other big themes globally, but India has its own positives, right? So when people talk to you about that, oh, India doesn't have AI, so where is it that you can put big money to work? What is your message to them? Because I know you track India very closely for a number of years, right? Over the next 24, 36 months, what is top of mind for you when it comes to India? Investable themes.
No, the key thing for me is, do we get a pickup in nominal growth? I'm talking macro here. Do we get a pickup in nominal GDP growth? Because when companies report earnings and sales, those are in nominal terms. And nominal growth this year in India has slowed below 9% year on year, between 8.5%. And that slowdown has been reflected in the slowdown in earnings growth in the Indian stock market. Whereas if I'd been here a year ago, I was viewing India as historically in a 10-12% nominal GDP growth range. So a very important point going into next year is, does nominal growth pick up more towards 10%? In which case we will definitely get a pickup in earnings growth in the stock market. And that's what I'm expecting given the monetary easing. However, if this time next year nominal growth is still below 9% in India, then that will raise questions. Are we having a structural slowdown? On the AI issue, clearly there's a very important point where the IT services sector is potentially at risk of disruption on AI, just like the software sector is everywhere. That to me is just an issue for everybody involved in software.
Yeah. Chris, you referenced the GST rationalization. What is the kind of impact you see in boosting consumption? And would that tie in your expectations for nominal GDP growth in terms of India? You also recently, for example, added M&M, exited another stock from your portfolio, from the long portfolio. Do you see autos as a primary beneficiary of the GST rationalization?
Well, they should be, and also two-wheelers. So basically, seems to me that this year the Indian domestic fund managers have been, since actually the budget, when you had the income tax cuts, there's definitely been a switch out of what I would call capex plays to more consumption plays, and that trend was already happening, and it's clearly been further encouraged by the GST cuts. And of course, the monetary easing. We have to recognize the monetary policy and the credit policy last year was basically pretty tight. And that's, I think, one reason we had a bigger fall in inflation. So where everybody's anticipating a pickup in consumption, as I say, so have I. If it doesn't happen, it would be a negative surprise.
Consumption is also a fairly wide basket. Would be interested and curious to know where you think that consumption boost is going to come. Is it in the staples? Is it more discretionary? Where do you think Indians are going to spend that extra money?
No, I think it's both, depending. But I think one big issue is you get a bigger pickup in rural areas, right? But I think it's broad-based because the policies are broad-based.
In terms,
and hopefully the GST cuts will not derail the fiscal because there'll be a corresponding pickup in sales activity.
Now, having said that, in terms of what is exciting you from that consumption space, where is your narrow focus right now?
What do you mean, sort of narrow focus?
In that very broad basket of the consumption beneficiaries, what are you liking better?
No, well, I have investments in the auto-related sector, but then obviously the consumer finance companies are geared to this whole pickup too, or what you call here the NBFCs.
Chris?
But I think this theme is quite well understood. I also believe the property sector, which many people think the property upcycle is over after a 4-year upturn already. Personally, I think the slight slowdown you've had in the property, I'm talking residential property this year, is a pause to refresh, and I think the property cycle will continue in India.
Okay.
So I also have property exposure in my portfolio.
Yeah. To be fair, you were amongst the earliest proponents of the property upcycle well before it started as well. So kudos on that. Just wondering, Chris, because the conversation is tilted so much towards consumption, capex is being kind of forgotten, and save for this year, India's been a capex-driven story. You reckon at some point of time, capex plays might come back into flavor in India?
I know, I definitely think they'll come back. You're absolutely right. This year, the sentiment, particularly amongst domestic investors, based on my conversation, has been to say, get very excited on consumption and to give up on what the private sector capex. So basically, in the last 10 years, the real pickup in capex came from government-funded capex, and there is a sense that the private sector could have done more on the capex. But if we get evidence of a pickup in demand driven by all these easing measures, then I think it's entirely rational to expect a pickup in capex down the road. So personally, I think it's too bearish to assume that, to give up on private sector capex on a 5-10 year view, which is many people. The sentiment now is very bearish. So if you were a contrarian and you had an outlook extending beyond the next 6 months, you might be thinking about adding to capex plays here.
If you weren't contrarian, and of course, if you were looking at what is moving right now, would platform companies make the cut? A lot of businesses that actually have grown because they've gotten consumers used to using them as a platform. Is that a space that you're finding exciting or overvalued from the Indian perspective?
Now, the platform companies, globally, investors want to own the platform companies. And clearly there's some in India too. And equally clearly, the AI technology allows for more personalized advertising in some of these companies. So this is an ongoing thematic.
Got it.
So the problem in India remains what it's always been on a medium-term basis, and that's what not to own.
Chris, India's in the last 2-3 years maybe become a low beta market, right? It underperforms on the downside. It doesn't quite perform as well as some of the other markets on the upside. Because you cited how in the last 6 to 9 months, India's underperformed massively. If the trade deal is reached, is there a case for a strong rally in Indian markets despite the valuations that we currently trade at?
No, I think there'll be a bit of a pop, not a strong rally, because I don't think the market really sold off dramatically on the news flow.
Okay.
I think these 50% tariffs become negative for the market and the economy the longer they're in place. So if they're in place a year, then that is a problem.
But if they get resolved, then we see a pop. Okay, fair call. The
only good thing about them being in place for some time, it will act as an incentive for exporters to look for other markets.
Yeah.
Which is an important point. Because maybe many people were very comfortable with existing relationships, so this will be a healthy wake-up call to diversify your export base. But at the end of the day, the Indian stock market is first and foremost a domestic demand-driven story, as is the Indian economy.
That's true. For the markets, Chris, though, how big a role would any kind of global central banking decision do? We are on the cusp of the Fed decision. What role could the Fed moves play for Indian markets?
Well, all the Fed easing, what it means for India and other emerging markets, it just gives them more room to ease monetary policy. So in my view, my big picture view is that the US stock market has made an all-time peak as a percentage of world market capitalization at 67% on December the 24th last year. And part of that view is driven by my view that the dollar is in a long-term downtrend. And that, if that is indeed true, it's been true so far this year, that's good for all emerging markets.
Chris, we've been talking about tariffs from an Indian perspective, but if I asked you to your view on a broader horizon, and how are you seeing the impact of Trump's tariff policy play out for the American economy? It doesn't seem to have hit too hard so far, but do you think that will continue?
Well, I think the key point is a lot of tariffs have been announced, But in terms of the average effective rate of what people are paying right now, we're still at about 10%. But in terms of what's been reported, we're more like 17, 18%. So my view is very simple. And to begin with, companies will try and I think reduce the impact on the end consumer by making savings elsewhere. But the longer the tariffs are in place, my view is very simple. The more that those increased costs will be paid by US consumers. So the more they're in place, the more likely it is to hit the US economy. But for now, there will be measures to reduce the pain for US consumers. So I'll give you a practical example. I was in Japan last week, and the Japanese car makers have cut significantly the price of their cars exported to the US this year. So that would please Donald Trump, because Donald Trump argues that the exporters will eat the tariffs, whereas most economists, by the way, I'm not an economist, would argue that the American consumer will end up paying the bill.
Chris, where are you on that argument, by the way? Do you reckon that inflation is going to make a headway into the US, or is growth going to triumph over inflationary pressures, and what role would that play for future rate decisions by the Fed?
No, my view is very simple. The Fed's cutting rates today, and that's a clear message that the Fed is basically prioritizing a slowing labor market over inflation, because whatever happens in the future, the practical reality today is inflation remains, well above the Fed's 2% target. So the Fed's cutting rates, so the Fed has fudged the 2% target.
Chris, the other question is around the de-dollarization. Heard it for long. It's never happened. But now increasingly a lot of US investors saying that they want to diversify out of US. What is a possible long-term trajectory of this? Does the dollar depreciate over a period of time against all major currencies, including EM currencies? Have you given some thought to that?
No, I think the base case is that's exactly what happens. The dollar depreciates against most currencies. So we've had a significant revaluation of the euro year to date, despite the fact that the ECB was cutting rates more than the Fed. And the Asian currencies, in my view, have begun long-term appreciation trends. I'm saying the Singapore dollar, which is the equivalent of the Swiss franc in Asia, can get a parity against the US dollar. It's not unrealistic to view the renminbi as going to 5 against the dollar on a medium-term 5-year and more basis. As for the Indian rupee, mentally, I think I'm viewing 89 as the bottom. And I think Asian currencies have begun a long-term appreciation trend against the dollar. To hedge the dollar weakness in my global equity portfolio, I have 10% weighting in gold mining stocks, which are right now rallying dramatically, and I have a long-standing position, currently 6% in the Bitcoin ETF. So I've got 16% of my global equity portfolio hedging dollar weakness.
Wow, that's large.
So, just to bring it back to India, with that very interesting American view. For India right now, we talked about the GST rationalization in the context of tariffs and a buffer to them perhaps. But what more do you think needs to be seen for that comfort of a move towards a nominal GDP growth of 10%? What would you have in the list, in the wish list, if at all?
No, I think the Indian government's basically done what it can do on this one. So to me, it's just a question if the animal spirits pick up a bit. I think the policy measures are in place. The RBI has already eased a lot. I don't think the RBI needs to slash interest rates dramatically more because they've already eased policy a lot, and you don't want to undermine the currency. So I think basically the policies are in place.
Chris, we're also speaking on the occasion of Prime Minister Modi's 75th birthday. And some of the programming that we're doing today is to look at his government's policies and the impact they've had. You've been vocal about what this government has been doing and the impact of its policies. Anything you'd want to add there?
Well, no, there's obviously been dramatic progress in India under this government. That's just obvious. So if I had to cite one obvious area, is the huge pickup in government capex, which has created huge improvements in infrastructure and therefore, created a much better framework for the private sector to operate in.
In terms,
I think another area I'd mention is the bankruptcy reform process, which appears, obviously it takes time, but that is a major change in India. Another major dramatic change has been the Real Estate Regulation Act, which I think creates a much more sustainable property cycle than we saw in the past. So those are three specific areas I'd mention. There are many more though. And obviously GST is another example.
Yeah, in fact, Chris, for a lot of people, GST 2.0 was arguably one of the biggest reforms. So one big bang reform done, RBI cutting rates as well. What else would you want, let's say over the next 12 months from the Indian policymakers?
Yeah, but when you talk to the policymakers in this third term of the Modi government, there's been a lot of talk about addressing what I've heard referred to as regulatory cholesterol, thereby improving the ease of doing business in India. So it's easy to talk like this, but clearly I think the government's extremely focused on this. And that I think is a very healthy focus. And that's something that's can't be done just by pressing a button. But everything I'm hearing makes me think this government's very much focused on this whole issue of ease of doing business, which can only really be implemented at the bottom-up level.
Chris, a lot of our viewers are average retail investors who are now tracking equity markets. They look to our coverage of your notes. They will be looking very closely to all your message on the Indian markets. What would you like to communicate to them? Investors who've seen a big bump up in the last, I think, 2 or 3 years, and then a tepid kind of move on their portfolios in the last year or so. What would you tell them today?
No, I think they should continue to do the average investing, which is how they're operating. Many of people are investing in this country on the SIP program. That seems to me a very rational way for investing in the stock market.
And in terms of what you see as the future of the Indian stock market, where do you see the Nifty perhaps closing 2025 at?
No, I haven't got a benchmark, but I would also add one other thing. I mean, they should obviously own equities, but I also think Indian government bonds at the current level are attractive too.
Okay.
Because I think the fiscal situation in India is in my view being well managed, and in my view the yields are reasonably attractive, and I would certainly much rather own Indian government bonds than US Treasury bonds.
Wow, that's quite a line to wrap up. Thank you so much, Chris Wood, for speaking with us.
Yep. Well, and have a great remainder of the conference, Chris. Really appreciate your time.
Thank you.
All right. And well, with that, viewers, it's a wrap on this very special conference from a very constructive Christopher Wood, Global Head of Equity Strategy at Jefferies. Thanks so much for tuning in.
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
गोल्ड ग्लास, क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द NDTV ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy
CDSL for the long term? Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Hello and welcome. You're watching Know Your Company on NDTV Profit with me, Somit Sarkar. Today, the company on KYC that we're going to discuss is Prudent Corp. And in the next half an hour, I'll try to give you the most important information about this company. But firstly, let's try and understand what are we trying to understand on Prudent Corp today in the show. Firstly, if you look at the company had done a recent acquisition of the mutual fund distribution business of the Indus Capital. So what is the rationale behind this acquisition that the company has done? Is the deal EPS accretive? And what are the synergies? We'll try to get an answer for all that questions. Also, the company had recently achieved all the earlier given targets. So what is the next growth target that the company has internally set for itself is something that we would want to know from the management. Apart from that, what are the key levers that could lead to operating margin improvement going forward for Prudent Corp, and what is the anticipated growth when it comes to the insurance segment, which is the newly started segment of the company. So what is the kind of growth that they are anticipating from this segment going forward is also something that we would want to know, and how Prudent as a company is trying to mitigate the key risks that are present in the company. Firstly, when it comes to reduction of commissions, and the second key risk that comes on board for Prudent Corp at this moment is the fact that there's a big competition that is coming in from fintech. So how is the company mitigating this key risk is also something that we would want to know from Prudent Corp. But firstly, let's understand what does this company do. Now, this company was incorporated back in 2003. It provides wealth management services to retail investors. Now, Prudent is amongst the top few non-bank mutual fund distributors in terms of average AUM and commission that they have received. Now, as of June 2025, if you look at the company's average mutual fund AUM was close to 1.2 lakh crore rupees, with 96.7% of this coming from the equity-oriented schemes. Now, over the years, if you look at, along with growing its mutual fund distribution platform, Prudent has also forayed into the life and general insurance solutions, stockbroking services, SIP with insurance, gold accumulation plans, asset allocation, and trading platforms. So the company has tried to diversify its revenue sources as well. However, in the mutual fund business, if you look at, it has an open-ended source distribution of mutual fund products, where it distributes mutual funds of asset management companies irrespective of their affiliations or size, thus providing their clients a large spectrum to choose. Apart from that, in the insurance segment, it includes distribution of life insurance, which has term, par, non-par, annuity plans as well. And when it comes to general insurance business, it includes primarily health insurance business that the company sells. When it comes to the stockbroking services, it provides these services to retail customers to trade in equities, derivatives, and currencies. And when it comes to other financial products, it also provides PMS, AIF, P2P products, bonds, fixed deposits, small case, unlisted securities, and multi-other loan against securities as well, and sovereign gold bonds as well. So a very big portfolio that the company has. Now, if you look at the revenue model of the company, it's quite simple. It's commission based. The company earns recurring revenue from commissions that it earns on selling various products, and non-recurring from brokerages as well. Now, as I was talking about the revenue mix, it has tried to diversify it, but 83% of the company's revenue still comes from mutual fund products. Insurance product, which is a newly started business in FY25, contributed around 12% to the top line. Stockbroking, again a very small contribution coming in, just at 3% odd, and then the various other segments that we discussed, those segments contribute close to 2% odd to the company's top line. So that's all that we have about the company. Now, if you look at the key parameters on which we are going to rate Prudent Corp today, firstly, it's the income statement. The second one is the balance sheet that we are going to see for Prudent Corp. Now, how good the balance sheet is something that we are going to discuss here on the show. And then apart from that, we are going to also look at cash flows, return ratios, shareholding, how the share price performance has been so far from listing, and valuations, how to stand up at this current share prices, and what is the 12-month forward valuations as well. And lastly, we're also going to see how analysts are currently valuing Prudent Corp at the current juncture. So firstly, to start off with the income statement. If you look at the income statement, the company's revenue over the period, that is over FY22 to FY25, has grown at a compounded annual growth rate of 35%. EBITDA, similar growth of around 32% odd. Net profit, again a 35% growth rate, a quite stable growth that we have seen coming in from the company's financials. Now, if you look at the Q1 financial performance of Prudent Corp, the revenues on a sequential basis were higher 4%, but on a YOY basis, it was up 18%. EBITDA increased by 14%, while the net profit jump was around 17% on a YOY basis. So a steady growth that we have been seeing that has come in from Prudent Corp so far. A 30% plus CAGR growth over the last 3 financial year, which is quite strong, and hence we are giving it a thumbs up at this moment. Even if you look at the margin trajectory over FY25 compared to FY24, if you look at the margins, it has increased to around 24.7%, but FY24 numbers had some kind of one-off, and that's the reason we had seen this kind of a depressed margin. But overall, the margins have remained quite stable level are at around the 25-24% band for Prudent Corp. Now, if you look at the balance sheet of Prudent Corp at this moment, it is a net cash balance sheet, which in itself is a plus point coming in for the company. The book value stands at around 6,680 crore rupees, and if you look at the mutual fund AUM, it has continuously grown over FY23 to FY25. The mutual fund AUM has grown from 56,189 to 1,03,515 crore rupees, which is a quite strong growth that we have seen. And as again I mentioned earlier, it is a net cash balance sheet that Prudent Corp currently has. In fact, they have as of Q1 they had cash of more than 500 crore rupees. So that's also a thumbs up coming in for Prudent Corp on the cash on the balance sheet side. Now, if you look at the cash flow from operations over FY23 to FY25 has increased from 127 crore to 161 crore. EBITDA has seen a jump of 173 to 262, which means that the cash flow from operations to EBITDA continues to remain above the 60% mark, which is very crucial for any company. And this clearly means that whatever income that the company is generating is largely cash. Nearly 60% of the EBITDA that the company generates is cash and is coming into the company's balance sheet. Again, cash flow is a thumbs up at this moment. For return ratios, the return on equity has been continuously increasing. In FY21, the company's return on equity stood at close to 28.7%, which has now increased to 34%. So a steady rise in the company's equity, given the fact that the company's earnings have been increasing. So again, a thumbs up coming in on that front. Now, if you look at the shareholding pattern here, the company's promoter holding from March 2023, yes, the promoter holding has come down from 58.4% to 55.3%, but it is not much of a dilution that we are seeing. Also, given the fact that FIs and DIs have taken a strong interest in the company. In fact, FI holding has increased from 1.2% to 17.5%, while the DI holding has increased from 9.8% to 20.8%. Domestic institution investor interest has nearly doubled when it comes to Prudent Corp, while if you look at the investor interest of foreign investors, it has quadrupled over the last 3 years. So strong FI and DI interest that we are seeing when it comes to Prudent Corp, and hence a thumbs up coming in for Prudent Corp as well on this front as well. Now, if you look at the share price performance, in the last 1 month, the share prices are up 5%, 6 month 48% return, YTD returns of around 10 odd %, and since listing, the share prices have increased nearly 430%. Again, a thumbs up on that front. However, if you look at the valuations, the 12-month forward valuation for Prudent Corp stands at around 47.7 times. This is a bit expensive when you compare with his other peers like Nuvama Wealth and 361, which are trading anywhere between 20 to 30 times. So largely on the valuation front, it's a thumbs down, given the fact that valuations are quite expensive at around 48 times. That is the 12-month forward valuation we are talking about. And lastly, when you look at the analyst recommendation, there are 3 buy ratings on the counter, 3 hold ratings, and the return potential over the next 12 months is largely flat, which means that the valuations are at full as per analysts. So hence we are giving it a neutral rating at this moment, given the fact that as per the consensus target price that has been set by around 6 analysts, the upside potential is quite limited when it comes to Prudent Corp. So to sum it up, if you look at income statement is a thumbs up, balance sheet is a thumbs up, cash flow is a thumbs up, that's 3 points, return ratio thumbs up 4 points, shareholding thumbs up 5 points, street cred again a thumbs up 6 points, valuations are thumbs down, and analyst recommendation is neutral, which means that the total rating for Prudent Corp comes at around 6.5 out of 8. Now let's go across to the management, the chairman and managing director of Prudent Corp, Mr. Sanjay Shah. Well, sir, thank you for giving us time. Firstly, to start off with, can you explain to us what is the rationale behind this recent acquisition that the company has done?
So, I think the acquisition of Indus Capital has been a very perfect fit for what we were looking for. So if I'll tell you, Indus is a company which has been there in the mutual fund distribution business for almost about more than 22 years, and they have roughly about 2,050 crore of mutual fund distribution AUM, which has been serviced to 3,500 families. So the average AUM per family would be roughly about 60 crore, 60 lakhs. So I think it's a very good fit for us, because Prudent is also a pure mutual fund distribution play, and ours is 95% equity in 120,000 crore of AUM. In that case also, it's a 95% of equity AUM. So it was a good fit for us. As you are aware that Prudent is a very strong player in B2B space. However, Prudent started as a B2C. So today, if I am telling you I have 1,20,000 crore of AUM, roughly 10,000 crore of AUM we have from B2C, and we got something which is very quality in the B2C space. So we align the interest with the management of Indus.
Well, if you look at Indus Capital's AUM, it is grown at, it's around 2% of your quarterly average AUM. But the profit before tax margin, that stands at around 70% as against 24% of Prudent Corp. So incrementally, what will this do to, what will this acquisition do to your business? What about your margins and profitability going forward? And with this acquisition, will you also have access to newer geographies, customers?
You are very true. So if you look at the currently Prudent is into a B2B business, and B2B is a business wherein you deal with all the independent, highly motivated, qualified mutual fund distributors, and there it's a pure variable business, and whatever you earn, almost 67 to 70% kind of revenue you share with them, and your margin is roughly about 30%. While this is a B2C business wherein you will have the real estate managers who will be managing the customer's portfolio, and because they are your employees, you will be having the fixed plus variable remuneration payable to them, and then the payout normally is reasonably lower. Definitely Indus has a very good payout for their existing real estate manager. So there you have a very high margin. So you are very right. If you have a top line of 100 rupees in B2C, your margin would be about 70%. If you're into B2B, if you earn 100 rupees, your margin will be 30%. So I think it's a complementary business to each other. Coming to the my capability to work on their customer base, so Indus is a pure mutual fund distribution play, and they have established themselves as a strong player on the mutual fund distribution side. While Prudent is also dealing in the many other retail product like insurance, PMS, AIF, NPS, fixed deposits, even broking also. So we believe that we will be able to provide the additional services to Indus customers. So cross selling is going to be a very strong opportunity for us.
Right, sir. So with this acquisition, what is the kind of debt, employees, etc., that you will be taking as a part of this deal? And how long do you think the integration process between both these companies could take?
So we are acquiring it as a going concern. So whatever is the existing setup which they have in Pune, so they have the office, manpower, rented premises. So everything as it is, including entire manpower, will be on the books of Prudent. So I think we are acquiring as a going concern. From the point of view of their client, from the point of view of their real estate managers, there is no change as far as processes, approaches, and the activities are concerned. As if nothing has happened. Only thing is that the name will change from Indus to probably Prudent and Indus together. As far as the process is concerned, typically we have signed the term sheet with them, and the MFI process is roughly about 15 to 20 days, wherein the letter has to go to all the customers saying that this process is happening, and their negative consent is required by them. If they do not agree, then they have to say that no, I'm not agreeing with this merger. So my belief is that by end of this month, entire Indus AUM should be Prudent by 30th September.
Right, sir. Now, if you look at this acquisition, this is entirely funded by cash, given the fact that you have a cash balance of more than 500 crore, right?
Yeah, absolutely, because Prudent is sitting on roughly about 600 crore of cash, and current payout which we'll have is roughly about 85 crore, and this entire 600 crore is sitting on a liquid book. So yeah, we do not require any kind of money to be borrowed. Another thing is, when we are acquiring Indus also as a going concern, they do not have any kind of liability or debt or so it's a very clean business which we are acquiring without any liability or contingent liability.
Given that you will be left with a strong cash on the books, even post this acquisition, any more acquisitions that you're looking at?
Yeah, so I think with this acquisition, actually we wanted to give a very strong message to entire India's mutual fund distribution community that if you have built a very strong long-term assets, which is managed by a very strong team, and you have somebody who is managing entire show from the front, then we are definitely ready to align the interest with them, because Prudent will be ready to absorb them. And I can tell you in case of Indus, because they have almost 15 to 17 very loyal real estate managers team, which is headed by a very strong industry veteran called Mr. Gaurav, who is handling this business. So it was a very good business where we can acquire and the business can also continue as it is. So if that kind of thing is available, we are sitting on cash and we are regularly exploring these opportunities. So we are definitely open.
Right. Now this acquisition, if you look at, it's coming at around 10 times price to earnings, while Prudent trades at more than 45, 47 times valuation. So this acquisition is happening at a much lower valuations. Why and is this deal EPS accretive also?
If you look at us, independent mutual fund distributors who doesn't have the business continuity in place, and it is not supported by a big institution, I think what we offered as a PE multiple is a very reasonable PE multiple. It's not very high, it's not very low, and at the same price, deals are already happening in the market. May not be very large because ours is the largest all cash deal. Plus, Prudent is offering everything in form of cash. You might have seen some of the deals where it will be an equity swap of one company to another company. Well, it's a pure cash. So my belief is that it's a very reasonably priced deal for us also, for them also.
Right, sir. Now, if you look at earlier, you had aspired to achieve an SIP book of around 1,000 odd crore rupees. Now, you have already crossed that threshold. So, what's the next target internally that Prudent Corp has set for itself?
Yeah, so fortunately, we already crossed the 1,000 crore of SIP book in the month of June. And when I'm talking to you currently, we are at 1,062 crore. So that's a landmark achievement for us. And we celebrated very, very strongly this number because this 1,062 crore of SIP book we have 35 lakh live SIPs. And I can tell you about the Prudent's market share in the SIP book. We are 3.7% in the total SIP book. And if you take out the direct piece, then Prudent is roughly about 6% in the SIP. So it's a very strong contribution to the industry, and we are very happy that we are participating into the India's retail financialization story.
Right, sir. And any internal targets that you have set for your on the market share front? Where do you see our market share to be, say, 3 years down the line?
Market share at in the regular piece about 5.6%, and gradually we want to take it towards 6%. However, internally we believe that today we have 1,060 crore. By March we should reach to 1,200 crore of SIP, and in next 3 to 4 years time, rather 3 years from this year end, we should reach to 2,500 crore. So that's the internally we feel that 2,500 crore is something which is achievable in 3 years post March.
Right, sir. When you look at the operating margins, it was a bit under pressure in the first quarter. But what is the outlook here, and do you see any levers for operating margins going forward?
So I think the operating margin, if you look at Prudent, as I think I explained you that Prudent is purely into a B2B space, and Prudent started the business in the B2C. So what has happened is that last 1 year, 1.5 years, our share of B2B, which is the partner-driven business, has gone up by almost about 200 basis points to 250 basis points. And as I told you, if 100 basis point incremental share comes from the B2B, my payout ratio to them would increase by 67 basis points. So there will be so that is the reason I think probably you would have seen that some amount of pressure came on operating margin side. Second, because of the competition, if you look at in the B2B space, there used to be only 2 players. However, in last couple of years, we have seen a lot of players entered into this segment. So we had some amount of cost pressure till last year, and that's the reason my employee cost has also gone up in the range of 18 to 20% in last 2 years. But probably my belief is that from the beginning of this year, we have been seeing that pressure is receding. And another important thing I can just wanted to communicate that we just got the approval for ESOP plan from exchanges, and in the next quarter, we will roll out the ESOP also, which is not a part of cost now. So probably next year, you might have one additional cost element of ESOP. But then after, we are very fairly under the assumption that operating margins should stabilize, rather start improving from here on.
Right. Now I clearly understand that insurance business is a newly started segment and it contributes around 10% to the top line, but the growth has been quite high on this counter. So how sustainable is this, and what is the kind of incremental contribution that you're expecting from insurance segment to come in going forward?
So I think we believe insurance is also like mutual fund where the penetration is very very low. If you specifically look at the health insurance, we believe there is huge scope for expansion or the growth in this industry. If you look at Prudent, our we are basically a mutual fund distribution house, and what we are doing is that we have 34,000 mutual fund distributors who work with us, and we try to convert them as a point of sales to distribute and advise the insurance product also. Out of 34,000, we could be able to convert almost about 12 to 13,000 people as a point of sales. But we believe that insurance is a huge growth ahead for us, and we are purely focusing, as far as your general is concerned, into our retail health. I'll just give you the numbers. March 23, my retail health book was about 100 crore. Currently, we are at 160 crore, and in next 1.5 years, we are targeting that 160 crore should go to us.
Right. The biggest risk that analysts usually point out is the AMCs given the fact that AMCs could cut commissions going forward. Any risk on that front that you could see going forward that could happen, which will keep your yields under pressure?
So if you look at, I think the entire industry has moved to a new TR structure in 2019. And then after, because of a huge mark-to-market and the huge growth in the AUM, from last year, we have started seeing the repricing of current AUM by the couple of AMCs. If I'll give you the number perspective, let's take an example that in the first quarter, Prudent's AUM revenue was 300 crore. And if I can tell you that the projected impact of all the changes which are started by HDFC, then for example, Kotak, SBI or the Motilal, everybody, a lot of people has done the repricing of assets in their either all schemes or couple of equity schemes. The cumulative impact is not going to be more than 15-17 crores. So it's hardly about 1.5 basis point. That is what the impact is. However, we understand that as you see a more and more growth in the AUM at particular scheme level, some amount of pressure.
Right, sir. And when it comes to fintech, that is the another key risk that is there for the company. So how is Prudent Corp trying to mitigate the same?
I think my belief is that fintech is probably helping to expand the market. Is probably why fintech has grown. I believe only significant reason the growth of fintech was the mutual fund distribution community is very very less. Today, our country has 175,000 people who are working as a mutual fund distribution. So fleet on street is very very less, and there was a huge gap, huge vacuum for people to invest. And I think that gap has been capitalized by the fintech player. However, the business model of fintech and the mutual fund distributors both are different. For fintech, they acquire the customer of a mutual fund through their acquisition route, and then they start offering them either the broking product or the NBFC, while the mutual fund distributors' core revenue comes from the well-being and the wealth of their clients. So my belief is that fintech is growing, but not growing at the cost of MFD. Right. And when the customer on the platform will grow to a size, he will definitely need an advisor some point of time. Right. So normally we tell our business associates and the partners that when it comes to a fintech, please make sure that our tech offering,
Right, sir. Right. Well, thank you, sir. Thank you for joining us and explaining your company in detail. Well, that was the management of Prudent Corp. Well, with that, it's a wrap on this edition of KYC. Stay tuned and keep watching NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Good afternoon, you're tuned into NDTV Profit, and this is special coverage on account of PM Modi's 75th birthday. Tell you what, let's take a look at some very interesting conversations that we had on this occasion. But tell you what, before we do that, let's quickly take a look at what the markets are up to at this point in time. When you take a look at the Nifty, 25,300 is the kind of level that you're seeing coming in for the Nifty. So that's a decent day of trade coming in. Let's also take a look at some of the top gainers from within the sectors, and it's defense largely that is leading this particular rally at this point in time. 1.9% uptick coming in on defense as well. So that's largely the sectoral picture that we have at this point in time. But as we look back at Prime Minister Modi's reign on the occasion of a milestone birthday, let's also go across and listen into a slice of the conversation that NDTV Profit's managing editor Tamanna Inamdar then had with Sanjeev Sanyal, who's a member of EACPM. Let's go across.
We've gone through all of the minutiae and the details of the reforms. Clearly, there has been a big economic boost. Capital markets have also reflected it. But what is the thought process? Is this a vision which is very, very clear from day one?
So I think you have to see what Prime Minister Modi has been doing over the last 11 years in the historical context of how economic policies have been made in India for the last 70, 80 years since independence. So, first of all, I mean, we spent the first 45 odd years till 1991 as effectively a socialist planned economy. Now that system completely broke down in 1991, as you all know. And so then we shifted to a market-based system. However, it didn't happen in one shot. So what you saw is a clump of reforms from 91 to 93 under the then Prime Minister Narasimha Rao and his Finance Minister Manmohan Singh. But then after the initial period of crisis, the reform momentum basically disappeared because the economy recovered, it was growing decently well, and there wasn't so much political consensus to keep doing more reforms. So it was really a response to a crisis. Now, then economy again slowed down. You had the Asian crisis as well. And then you had another round of reforms during Prime Minister Vajpayee's era. So the Vajpayee era reforms, again, market-oriented. You saw some push towards privatization for the first time. And then you saw the first round of attempts to build big infrastructure. And that gave another round of growth momentum into the early 2000s. But again, that too petered out after the the space created by that round of reforms got done. Unfortunately, that reform momentum was not carried forward. And then, of course, you had the great financial crisis of 2007-8. So the economy again slowed down. This time, the response was not to do more reforms, but instead to pump up the economy using the banking system and the fiscal. So you saw a huge amount of loan being given out indiscriminately in the years 2009, 10, 11, 12. And you did get somewhat of a revival in growth, no doubt. But what happened as a result of that, since it was not backed by economic reforms, you effectively led to a huge amount of macroeconomic instability. You will remember by 2013, we were being called the Fragile Five. Our banking system was in deep trouble, inflation spiked up, and so on. So then, this is the context in which in 2014, Prime Minister Modi came to power. The reforms had been stalled by this point for almost a decade. The economy had done well for a period of time in the 2000s, but then had slowed down and then had been artificially pumped up with lending, which had led to this macroeconomic instability problem. So his first problem that he had to face was to anchor the macroeconomy to something. And that is the context in which you got the inflation targeting framework being put in place. You also saw the big effort to create a framework for creative destruction through the Insolvency and Bankruptcy Code, and then that was used to clean up the banks. So that is really what was going on, anchoring India's macroeconomy. So that was the first big thing he attempted to do. The second big thing he then tried to do was to put in place the structural reforms. These are the things like GST and so on. So that is what was being done in the immediate pre-COVID period. And then what happens is that you have, of course, the disruption of the COVID period. And then that period again saw, despite all the problems you saw the Indian approach to managing COVID was much more restrained. Why? Because we had this macroeconomic instability problem. And so we went through the COVID thing. Yes, we provided support to the economy, but it was done by pumping up, for example, infrastructure spending rather than giving out stimulus checks indiscriminately like may have happened in other
Mr.
countries.
Sanal, would it be...
So that is why we were very controlled about it.
Of course. Would it be fair to say that currently the need of the hour and the focus is about, protecting India from global turmoil? This is where we are bang at the center of it. And while what India has done in terms of stabilizing her economy, etc., has been well discovered, well reported on, but protecting us in the middle of what is happening from the US, wars breaking out, etc., has become the key challenge right now?
I would say not, because the investment we put in the last decade into basically building the resilience of the economy in terms of cleaning up the banks, accumulating a huge amount of foreign exchange reserves now at some 700 billion worth, inflation well under control, and so on. That means that actually we have a fair amount of buffer towards all the shocks we are getting, including the US tariff issue. So while we are seeing a lot of turmoil abroad, if you see our current account, for example, it's very well behaved. Our external debt situation is in decent shape. We recently got a sovereign upgrade. So this is something that we are reaping the benefits of what we did over the last 10 years. So what we are doing now is somewhat different because we are now looking forward to the next 10 years. And that is something different. So what are we doing? We are investing heavily into infrastructure, which is what we really pumped up during the COVID recovery period, but we continue to do that. We are investing into certain areas like, for example, chips and other areas where we think we can scale up. We are investing into cleaning up many of the things like GST system is being cleaned up, but we are doing a large number of process reforms to basically make our government much more efficient, ease of doing business, ease of living. So this is the kinds of things we are now doing because we are really now thinking of going one step, from the stability stage, which we have achieved, to now beginning to grow much faster. What we want to now do in the next stage is to grow on a sustained basis at 7-8%. At some point, the global situation will be stable enough to be able to grow at, say, 8% on a sustained basis. Sure. We can't do it right now because of the external situation, but we can't turn up in that environment, the good environment, and then, say, oh, we need to build a stronger economy. So what we are doing now is beginning to invest into the productive capability of the economy to be able to compete abroad. And so that is really the focus right now.
So, Radhan, there you go. That was a slice of a very interesting conversation. Some good commentary coming out of that conversation. In fact, investments made in the last 10 years are going to be driving growth going forward. And Puneet, these have been some key investments. Couple of investments that he's highlighted, of course, have been on the lines of infra, boost of easing business. That's a lot that we're looking at.
Well, definitely, and I think one of the major pushes has also come on the financialization, essentially, of the economy that we've seen. The increase of demat accounts, what's it done for the capital market as a whole as well. So let's take that conversation forward as well. Dheeraj Relly, the MD and CEO of HDFC Securities, is now joining in. Dheeraj, very good afternoon to you. Thanks so much for joining in, and always a pleasure speaking to you at NDTV Profit. Let me first start off with a broader question on your views with reference to what we've seen in the reforms taken under the Modi era. GST 1.0 and 2.0, demonetization, IBC, Jan Dhan, Make in India, PLI, I can go on as well. What do you think that has had an impact on India Inc. of all these measures?
So last 10 and 11 years under Modi's leadership have been phenomenal for India as a country. We have moved from 2.04 trillion economy, which was standing at 10th rank in the world, to now 4.20 trillion economy, which is just fourth largest economy. And we are promising to be the third largest economy sooner than later. We have seen a slew of reforms and targeted initiatives from the government in last 10, 11 years. And also, some of the reforms were disruptive and some of them were targeted. Disruptive reforms like GST, you just mentioned, and also demonetization. These two reforms paved formalization and digitization for the country at large. And also, there were transformational reforms that were done in the form of Make in India, also in the form of Jan Dhan, Aadhaar, mobility, that created an infrastructure for the financialization of savings. I talk about my industry, financial services. We have moved significantly from cumbersome onboarding to an absolute 100% digital onboarding of customers, and that has led to a democratization of investing in India. And also we could able to reach the India as a country and every nook and cranny of India, and able to serve the underserved and underprivileged customers as well. So Jan Dhan proved to be a very big success for the government. Also on the manufacturing side, Make in India has really played a role. And in 1920 or so, we have seen many measures taken around the PLI initiatives and are continuing. And that has led to a significant momentum in the manufacturing in India. I think initiatives like liberalization of foreign direct investments, also privatization and strategic privatization, and also consolidation of public sector banks have really augured very well and created a robust infrastructure for growth. And last but not the least, I can go on and talk about more initiatives, but working on the infrastructure and ensuring that we have, through Gati Shakti scheme, working on the infrastructure and connecting the entire India through rail, road network, and also adding many more ports and airports, have really made India as a robust economy.
Dheeraj, you highlighted a lot of reforms that have happened over the last 11 years. How has India benefited from these government policies? Which sectors are the major beneficiaries according to you?
To specifically on banking and financial services space, I think I would attribute the success and democratization of banking and financial services to the Jan Dhan, Aadhaar, and mobility. We have leveraged Jan Dhan, Aadhaar, and mobility to its potential to reach out the every small and underserviced customer in India, and able to now serve them through banking and financial products. We have seen financialization of savings playing out significantly in last 10 years. Just to substantiate my point, 10 years ago in 2014, we were at 1200 odd crore SIP flows, and now it is to over 28,000 crores. Demat account used to be over 3 crore and now it's over 20 crore. These two number talks volume about the penetration and democratization of financial services. The good part is that in last 10, 11 years, retail investors have made money in the capital market space and able to do avail the banking services, loans, investments, savings, and that too without going to the branches and leveraging the digital infrastructure created through UPI and as well as through other methods. So I think our industry have been immensely benefited with the initiatives taken by the government in last 10, 11 years.
Dheeraj, we have seen multiple measures, and we've discussed that in the first two questions: the GST 2.0, income tax benefits, as well as the RBI rate cuts that have happened this year as well. Do you think that these are yet to show effect on the economy as well as markets as a whole?
I think to be specific to this particular financial year, from last 3 or 4 quarters, we have seen slowdown in the capital market space and also on the consumption side. And government has made a necessary intervention now through GST and also leaving more money in the hands of investors through direct access. So we are confident that this would work well for improving the consumption both in urban as well as in rural areas. With good monsoon also, it will. We have seen some green shoots in the consumption coming from the rural areas.
Looking at the next 5 years, Dheeraj, what are the specific reforms that you would like to see accelerate essentially the growth of India, at least in this particular time frame?
See, I think the unfinished agenda for Mr. Modi is to work on land and labor reforms. Also, if we can take more initiative to promote inbound tourism, that will create more employment in India and it would have a more granular growth in India. So these are the 3 areas I want government to focus on. I know it's very difficult to focus on some of these areas and it may require large funds also. There I have a suggestion that government can monetize a lot of its assets and equity that they have and channelize these resources to promote inbound tourism and also do more reforms on the infrastructure side so that we can grow leaps and bounds.
My final question, Dheeraj, now, we've spoken about, the reforms that have happened over the last 11 years under Prime Minister Narendra Modi. Your wishes for Shri Narendra Modi as well at this particular point of time?
Mr. Narendra Modi has done, amazing job for India to put India on the global map. And now we are 4th largest economy and as well as, well respected. So we could able to get a differentiated positioning in the world under his leadership. I wish him absolutely pink of health and I want him to continue and charm us with his energy and his charisma. Thank you.
That's Dheeraj Reddy. Thanks so much for joining and giving us perspective on the reforms that we've done on Prime Minister Narendra Modi, as well as what could be his view, some of those to look at in the next 5 years as well. But that's largely, a sentiment that's been echoed. The multiple reforms that have done, also a lot more to follow going forward as well.
Well, absolutely, and completely agree on both of those counts because, we did have guests also talking about both of these things. That is something that we've got in terms of what we've managed to highlight. But let's keep it going with a deep dive into what PM Modi's reign then looked like for the economy as well as for the markets as well. In fact, we're joined by Amisha Vora, who's the chairperson, and MD Prabhudas Leeladhar. Thank you so much for taking time out and joining us this afternoon. First things first, I wanted to get a sense of what you feel about the policies under the Modi government in the last 10 years. What do you think has helped the Indian stock market?
I think first and foremost, I must say that thank you to give me this opportunity to wish our beloved Prime Minister and speak about his performance during his tenure on his milestone 75th birthday. I wish him many, many more years of equally strong leadership in India, in Asia, and globally. Coming to his era when he started, the time before in the markets, financial markets was called as policy paralysis. Our banks were in dire state with bulging non-performing assets. And we were looking for unblocking of the economy. I think our expectations was just around that. But what is actually delivered in this last 10 years is strong, tough decisions, detailed, minute work, and unparalleled execution. Just to give you a few examples, not only that our banking crisis was handled with a very strong principles of clearing and bringing to justice everything and everyone which was not happening right, and taking pain during that time when the economy gets little starved of the capital, but also after that, as you see, the slew of reforms or actions, be it in terms of defense, the sector was so dependent globally, very diligently, each and every key policies within defense were looked at in terms of pass-through, in terms of vendor accreditations, in terms of payment systems, and the defense has become one of the key turnaround industries for India, as what we can very clearly see from what has happened to defense stocks, their order books. Also, similarly, the touch of this policy reforms was on railway sector. I remember in the markets, for over a decade before this, every time we used to go to those players in the railways and all, and they would say they're expecting some orders, but no orders were materializing. You see, in last 10 years, railway has been completely revamped with the kind of changes for consumers, to nation, to, of course, industry. And these two have become major contributor. Beyond that, for being up in the curve, the way PLI is introduced is also unparalleled, giving rise to so many industries within India. And from the financial perspective, if you see the way COVID crisis India handled was outstanding. We never overspurred, we never deprived. At the same time, we kept as much possible our fiscal discipline, fiscal, you can say, path as strong as we can without much impacting banks and also taking care of borrowers. So the revival of India was much faster. So from all major economic policies and parameters, if you ask me, the team under Mr. Modi has delivered fantastic policy regime.
Well, absolutely, point taken there. But tell you what, according to you, which are the three sectors that you think have benefited the most as a result of these policies? Then take us through that entire list then.
I would also like to mention here that the game changer for industry and India is GST. We started with first round of GST, a little hiccup in implementation, a little hiccup on industry through the stocks and what to do, etc. But as you see, over the past few years, the GST revenues have started really galloping so well, bringing so many states of India on one table and making it work itself is a mind-boggling achievement. But now we are at the cusp of GST reforms. As you see, to revitalize Indian economy and give power to Indian consumers and Indian demand and in turn Indian businesses, we have reduced our GST rate substantially. And I'm extremely confident that, we call it in the markets that Trump tariffs are transitory, but GST reforms are permanent. And this is how this will lead to the next round of growth in India. And we will not be surprised that in 2 years, we can start touching GDP growth, which we have not witnessed till now in our history. Some of the sectors which I think from old economy or the existing listed plays and non-listed plays, which will continue to do, which will do very well and will see exponential growth, will be around to start with, I guess, EV segment. So whether it is EV buses, EV trucks, or EV cars, this segment, and below that, the ancillary or the BESS, the battery storage systems, or charging system, all this will continue to do very well. Similarly, solar has been doing very well, but I think that the growth has still many, many more legs, and data center is also one segment which is doing very well. From investments perspective, if you see, I think that the consumption demand will go up a lot, which will also mean that our steel and cement sectors will also do very well. And beyond that, as our per capita income keeps rising, the healthcare industry, be it hospitals or diagnostics or hotels, airline, some of these sectors will also continue to do very well.
Well, absolutely. Thank you so much for helping us out with that entire list of what really worked for the Modi government as well. But that's all the time that we have on the show. Thank you so much for tuning in. Don't go anywhere, because a very special conversation with the star team of Urban Company lined up on the other side of the very short break.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
माय बर्थडे गिफ्ट टू पापा, ये उनके पापा की पहली गाड़ी एक गराज में पड़ी थी दार्जिलिंग में, फिर 3 मैकेनिक, पेंटिंग, पॉलिशिंग, तब इसे फाइनली घर लाया ना, तब लगा लाइफ में ग्रो किया है।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो NDTV सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. best app to use is the NDTV app.
Welcome to this very special conversation. I think undoubtedly stock of the day, company of the day, and the management of the day that everyone wants to hear is Urban Company. What a rock star debut this listing has had. Nearly 60% up. Yeah, there you go. But 63% up on the stock price right now from the listing debut. Now, of course, a lot of questions that investors would have, those who have FOMO if they didn't get the allotment, and what the path ahead is. We have exclusively in our studios Team Urban Company. Abhiraj Bell is with us, CMD and CEO. Varun Khaitan, the ED and COO, and of course Raghav Chandra, ED and CTPO. All with us in the studios. Welcome, guys. Congratulations on a stellar debut. All of you much richer this afternoon than you were earlier this morning. I'm going to start by asking, what's the first big thing you're going to spend on?
Thank you. Pleasure to be here, Tamanna. I can't answer. Do you guys have something in mind?
A meal.
Yeah, I think we need a good meal. Yeah.
I was thinking the same.
We have
take the family out
right here, which will give you a 6-course meal.
That's excellent. No, I mean, I think it has been, a dream debut in that sense. But with the dream debut, the expectations also grow manifold now. You can expect a lot of scrutiny in all of your quarterly numbers, etc. So let me start with those basics as well. What is the vision here on now that this capital has been raised? Abhiraj, I'll start with you.
Tamanna, I think it's not lost on us that the success of this IPO and the way investors have showed faith is more a promise of the future rather than where the company is today. We recognize that we are still a very small company in the scheme of things, just about break even last year, less than 1% of the entire home services industry. And, the onus is on us now to work hard, organize this industry, bring standards and quality control for customers, and also help hundreds of thousands of service professionals lead dignified, respectful, middle-class lives, and do it all in a way that it is sustainable, profitable. So we have our work cut off. I think we'll take a bit of break today, but be back on the drawing board tomorrow, and the journey continues. It's a milestone in a long journey.
Yeah, and to add to this, the key from here on, to take it from where you left right now, is the journey continues. And I think that's what investors want to know. What is the path going to look like? Because after achieving break-even last year, the key is sustenance. And from sustenance, it comes to growth. And that's what any investor would look at from a company which is just newly listed. What is that strategy going to look like in terms of sustenance first and then growth?
I think for us, we have 3-4 segments of business. Our core services business in India, which is today at scale and profitable. Our goal will be to continue to grow it well at a healthy clip, continue to grow it profitably, and continue to invest behind the pillars of training, quality, technology. Then we have certain relatively newer businesses, I would call them, starting with Native, InstaHelp, and also our international footprint. Those are today not profitable, but again, our goal will be to keep investing in them and set them up for a successful future. I think one of the things that we take very seriously is making sure that we disclose to investors very, very transparently and clearly how we are building this company and what is the picture as is. And I think that's something that we will continue to do. Bad news will always travel first to investors. Good news can wait, but bad news will always travel first. And we will try to be as thorough in our disclosures as possible so that investors can make judicious decisions going forward.
Okay. Let's talk a bit about the numbers. Varun, I'll come to you on this. You're, of course, EBITDA break even. Do you see that pathway sustainable is the first question. And then what is the margin picture looking like going forward?
As Abhiraj mentioned, the 4 different parts of our business are at different stages of maturity. And we are going to continue to invest in the right pillars for each of these businesses: India Services, Native, InstaHelp, and International. And in the subsequent quarters to come, every time we will attempt to give clear disclosures on where we think the profitability and margins are heading.
No, but is this current profitability sustainable is the question. Do you think that next quarter we see that as well?
I think for the core business in India, we do believe it's already operating at a healthy margin. So if you see the whole of last year, we did about 3% odd as a percentage of net transaction value. And in the first quarter, we did about 4%. And in that quarter, we had not segregated InstaHelp away from the core business, but we did disclose in our RHP that had it not been for InstaHelp, it would have operated at about 5.2% adjusted EBITDA as a percentage of NTV. So it has been seeing a very healthy trend. It was loss-making 2-3 years back. As it has scaled, that operating leverage has transferred into profitability. And I think for the core business in India, given where it is, our goal will be to continue to operate it profitably. I think the other segments, whether it's Native or InstaHelp or even International, it's honestly a bit early for us to talk about profitability.
What is the revenue split? You mentioned the 4 segments. If you can just get an idea. You're a new company. I think there is a process of discovery also for investors. So in terms of the 4 verticals, what is the revenue contribution?
So FY25, InstaHelp was just started towards the end, so it continues to be very, very small. But FY25, about 77% of the revenue came from India core services, 13% from international, and about 10% from Native.
So when you talk about the 13 and the 10, which is 23% of your revenues are loss-making, let's put it that way, right? If you have to look at both of these breaking even from here on, what is the kind of timeline that you're looking at? And when do all engines actually steam up and start firing, according to you? And what would that growth then look like?
Yeah. So if we look at international and native both, particularly international has seen a trajectory of improving revenues and reducing losses. And they've been sustainably coming down. And even in the first quarter, we reported a material reduction in losses as revenues continue to go up. Our international footprint has a very similar, I would say, adjusted EBITDA margin profile and contribution profile as India. Probably a little behind India in terms of maturity, but it will sort of eventually get there. Native is still early. It's yet to complete its second birthday as a sub-brand. I think we will want to invest further. What we are looking to do is, in the first or the second earnings call itself, come out with very clear guidance. We understand that 23% of the business today is unprofitable. Investors will want to know how long will you continue to invest behind them and what is the capital that you will want to deploy before these break even and start generating cash. I think in the first or latest the second earnings call, most likely we'll try to get there in the first. We'll come out with that disclosure.
And I think to that, I think it's going to be Raghav who's going to be asking you to make all the spends as well, right? So Raghav, coming to you on that front, if you're talking about India business which is matured, I'm sure there is not too much of development that goes in from a cost perspective. You're talking about native and international where the markets are pretty much at a nascent stage from a business perspective. A lot of development that will have to happen there. Are you seeing that aspect happen from a product and technology perspective as well? Or is it just going to be an operations angle to it? Because then it'll come back to Varun then.
Absolutely. So how we work has a lot to do with how our tech engines are configured. That's what allows us to scale. we're in a place where launching new cities or new categories, once the playbook is cracked, we don't need to keep rewiring. So, internally teams are kept into focusing for advancing versus just running operations. So yes, international, native, or even India bets, all of this kind of require tech at its core to codify insights, allow them to scale. And that's basically how we work internally.
Just give us a sense of what is the consumer behavior you're seeing in terms of repeat customers, stickiness of the business, average spends, and what is the trajectory there? Anyone who wants to take that one?
We've disclosed over the years, even though the new users on the platform are growing, even then the share of business that we get from our older repeat users, the percentage share, has also been growing. And that is because once users get familiar with the idea of Urban Company app and the fact that it serves a variety of their needs and use cases, we see that users keep trying newer categories on the platform, and thus their spends on the platform every year on average keeps going up. And that going up along with the addition of more new users creates this growth engine that we've been seeing compounding returns from.
Any
even as we
numbers you can
do
share
new
in
things,
terms of percentage of users which come
absolutely.
back?
So I think in FY25, 82% of our net transaction value came from repeat users, users who were acquired prior. First quarter of FY26, that number was north of 85%. And historically, it's been coming up. I think it was early 70s in FY22-23, went to mid 70s in 24, shot up to above 80. And one of the things that Varun pointed out, which we've also disclosed in the RHP, is if you see in the first year, the average user is only trying about 1.5 super categories. I think 1.3 on average. So Urban Company, when they start out, it represents an app from where I get a haircut or an app from where I get a plumbing done, repair done. It represents one thing. Over time, that trust compounds. Then they'll try a second service and they'll realize, okay, it's not just for haircuts, I can use it for this as well. The third category becomes easier than the second, the fourth becomes easier than the third. That trust starts to compound, and before you know it, the user starts to think of Urban Company as an end-to-end home services platform for them rather than just one or two use cases. This trust compounding journey takes some time. It takes a few years for them to try 4-5 different services over time. But once it does, it really creates a powerful, sticky, repeat base and a strong network effect for our platform.
So what is the average customer acquisition cost right now? Are you seeing a particular trend that is emerging where it's now starting to inch lower, or does it continue to remain sticky and high?
Yeah, I think without getting into the specific numbers, what I can share is that it has been steadily dropping for us while the new user count has been going up. And part of the reason is that we operate, people think that we operate in cities, which is true, but we actually break cities into micro markets, smaller units. And in each micro market, as we densify, our service professionals get utilized better. Last year, the average professional was only utilized for about 83 hours in a month. That was the average. But we've seen in dense micro markets that number go up to 125, 140, even 150 hours, which represents taking the utilization from about 40-45% to about 70-75%. Now, utilization is the fundamental cost to serve in our business. It's the systemic cost, which as it comes down, service professionals earn more. They are spending less time traveling between jobs or waiting for jobs. They're spending more time inside consumer homes, so they can earn more. And consequently, as the cost to serve comes down, customers can get better pricing. And with that, our CACs also reduce.
What about your average transaction value? What is the average spend that customers have? Or is that a difficult metric for you because the services are so different versus other platform companies?
No, it's a very broad segment, right? Something like an Insta Help today, which we are fast accelerating, could be for as little as a couple of ₹100, all the way to, now we have painting and wall paneling services, which are running in the tens of thousands. Most of the medium services, whether it's a beauty treatment, haircut, a simple plumbing, electrical job or cleaning, are, I would say anywhere from 500 rupees all the way to about 2,000 rupees or so. That's the spread.
But are you seeing that spend go up, or the propensity of that to go up?
The spend is, in terms of the total number of transactions that users are doing, it's definitely increasing. In terms of the spend per service, our endeavor with increasing densification is actually not to take the pricing up, but actually offer better pricing to consumers.
I think you have a business model where you do have two aspects, where you have, I think, premium and luxury, if I'm not mistaken, right? What is the margin profile of each, and do you see that shift from premium to luxury happening quickly when you're taking, when a user is taking services? That's number one. And number two, the retention of the service providers also becomes key, right? Because your business model is dependent on the service providers. How do you make sure that they are sticking around with an urban company and not going to anyone else?
You want to take the question on premium?
We've actually been always positively surprised by the uptake of the top luxury tier segment whenever we've launched it. Today we've launched it across beauty services for women, grooming services for men, and our massage and spa categories. And every time we launch it, the fast adoption of users surprises us. These start off with users who have been using the platform for some time, who experiment, realize that there is a real upgrade in the products that are getting used, in the service levels that are being offered, and then they feel like they made the right choice to upgrade and continue to repeat in that luxury tier. And while we do not just this, but also what Abhiraj spoke, which is for the same service, we want to keep our prices same or reduce it with density. We do this always while holding true to the value of win-win on our platform, which is we need to take our service professionals along in this journey, and their incomes need to keep gradually going up every year.
So what's the commission
and that's
model
largely,
for them?
I'll come to that. That's largely driven by their utilization increasing with every year, both because there is higher density of demand, and professionals realize that it's a very meritocratic platform. Their earnings depend on the hours that they give, and we keep guiding them on how to spend their time best and keep increasing their earnings.
Yeah, and coming to the commission model, how does that pan out?
So the commission model is quite simple. I mean, while commission rates vary category to category, I think a rule of thumb you can say is that a fourth is kept by us, and 3/4 goes to the professionals. And so the more they work, the more money they make, the better they get utilized. And beyond the money, the monetary aspect, there are some non-monetary aspects also that we offer. So every professional on our platform, regardless of how many orders they do, get access to a free life, accidental and health insurance cover. Some of our best professionals also get access to free family health insurance that covers their spouse and 2 kids. They get access to formal credit at subsidized rates. There's free training for everybody and certification program. We're helping our women partners now with a project called Project Udan, where we want all of them to have a mobility two-wheeler solution. We've realized that a two-wheeler owned by a woman partner increases their sense of confidence, their sense of safety, and their earnings go up by about 15 to 20%. We did this study with UC Berkeley. So I think we're quite committed to the goodwill of professionals. And as you rightly said, it's not out of charity that we're doing this. It makes complete business sense for us. Happy partners for us leads to happy consumers, and that's why we have to continue to invest behind their happiness so that we can retain them, and they in turn can make our customers happy.
Okay. Absolutely. Very interesting company, very interesting business model, and what a stellar debut. Also very nice to see, young entrepreneurs there making that leap. That's something that we talk about when we talk about a growing India and a new India. Thank you so much, and congratulations, Team Urban Company. Thank you for coming into the NDTV Profit Studios.
Thank you. Thank you so much.
I'm looking forward to using Urban Company and seeing what it has to offer.
And speaking to you at the next quarterly results, when the numbers come out. All right, we'll take a very short break on this special program, but we're coming right back with all the latest on markets and tell you about the stocks that are buzzing. Stay tuned.
That's huge. That is a biggie. It's out of there.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जब मुंबई से वापस कोल्हापुर शिफ्ट हुआ तो सबने कहा कि ड्रीम सिटी को छोड़ रहा है। ड्रीम सिटी, तो मैंने कहा ड्रीम में तो यही गलियां आती हैं। तो जब ये रियलाइज हुआ कि कुछ बड़ा करने के लिए बड़े शहर में रहने की जरूरत नहीं है, तब लगा कि लाइफ में ग्रो किया। कशी ताई, ऐसे बॉय मिलते मुंबई में? चांस ही नहीं।
SIP करो, इन्वेस्ट करो, लाइफ में ग्रो करो। प्रतिभूति बाजार में निवेश बाजार जोखिमों के अधीन है। निवेश करने से पहले सभी संबंधित दस्तावेजों को ध्यान से पढ़ें।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं। उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. The best app to use is the NDTV app.
Hello and welcome to Profit Buzzers on NDTV Profit. Now moving on to an NDTV Profit exclusive. The government may set up special export entities tied to e-commerce platforms. Rishabh joins us with more details. Rishabh, what are you picking up? Because this is a great push when you talk about, the tariff concerns. And this is a story which you got to us earlier as well, that the e-commerce platforms are in conversation with the government as well. This is the next update. What do you have for us?
Right, in a major push for e-commerce exports, the government is planning something. The government has something in store, and very fast-paced meetings are taking place with regards to this particular one. The government is planning a big push for e-commerce exports, and this is going to be tied to special export entities that will be set up, and these export entities will be tied to e-commerce companies like Flipkart and Amazon and DHL, etc. Now, what will happen is that these particular export entities, they will handle the compliance part, the customs, and all the boring stuff, while you'll have the MSMEs, who will be the product suppliers to these export entities, they will be focusing purely on branding, product, and quality. Now, what we'll see is that this will be a pilot project. There will be a few small export entities being set up first before there will be a larger rollout. What we're also seeing is the fact that their talks are on with the likes of Amazon, Flipkart, FedEx, DHL, Peter Groups, as well as the RBI's foreign exchange department. They are also very much involved in these discussions. What we're seeing is that the government is also mulling whether to give these export entities certain GST benefits, certain benefits on par with what other exporters get, such as ROTTEP schemes, certain duty remissions that also come in if you're an exporter, if you're a large enough exporter. What we're also seeing is that there is a plan going ahead to link these export entities with the government's e-commerce export hubs. Those are a part of a separate scheme that was started by the DPIIT. So we're seeing a lot of fast-moving progress take place with respect to the government's plan to push for more e-commerce exports coming out of India and in turn provide boost for MSMEs.
Thank you, Rishabh, so much for that. And this is going to be a great push coming in there for all of these e-commerce players as well. But let me get in Gaurang Shah and Gaurav Sharma as well to talk to us more in terms of what's happening in terms of the markets. Gaurang, first let me come to you. A very good afternoon. We were just talking to the management of Urban Company right now. A stellar listing is what we've seen. What would you advise investors to do? Someone who's already been allotted in terms of the IPO, would you advise to book profits? And two, someone who's not been allotted probably is feeling that I've missed the boat. Would you think this is still the right time to look at an entry point, or would you wait for some correction?
Thank you, Hiral, for having me on this show. Good afternoon to all the viewers of NDTV Profit and to you and to Gaurav as well. A small disclosure before we go any further. All recommendations are going to be a part of our research team recommendations. Our company, Geojit or I, we do not have any personal investments, no financial interest, no conflict of interest. But we give advice to our clients on similar lines. They might have their investment interest. Now, talking about Urban Company, well, we didn't cover the IPO, nor do we have any standalone report. But I was listening into the conversations that you were having with the management and how they are going to use the proceeds that they have received for the IPO for their business. From the past history, what we can recollect and we remember, Hiral, is that some of these tech/stroke e-commerce companies tend to outperform in the beginning and then they fizzle out. Reasons could be one or one too many, rising competition, unable to sustain the margins, unviable operational strategies, or unable to garner further clients or market. So I would say that, whether to book profit or not to book profit, Hiral, it's all the, perception that an investor gets invested, whether long term or short term or medium term. But, this listing was stellar, of course, from the level at which the IPO was issued and the way the share got listed and the level at which it is trading. So I would only say use your wisdom and fine sense of judgment.
Okay. Did you feel that you missed the boat?
Well, I am never ever in that boat wherein I feel that I miss the opportunity. In stock market, Hiral, opportunities are plenty. It's not on one stop.
Absolutely. Opportunities are plenty as well. In fact, Gaurav, welcome to the show. Let's just quickly look at markets as well. We are trading higher right now. Good interest coming in from the PSU bank index side as well, because all your PSU banks are firing on all engines right now. Bank of Maharashtra, Canara Bank, you name majority of the banking spaces, good gains coming in there. Would you be a buyer, Gaurav, in terms of the PSU banking space right now, taking into consideration the kind of up move that's coming in?
Hi, Hiral. Good afternoon, Gaurang, and to the viewers. So I think it won't be wrong to say that today the PSU banking pack has completely, steals the show here. From SBI to Bank India to PNB, Canara Bank, you name it, and they are just flying higher. at these levels also they look attractive as they are I think still in the middle of the recent run up that we are seeing. It's going on from a previous week, and I expect another 4 to 5 odd percent of move respectively in these stocks. Canara Bank looks pretty good, level close to 118 what we are eyeing at. SBI has just started its recent up move, and a level close to 880, 900 can be expected in the next, say, a week or so. When we talk about PNB, it is also doing pretty well, and a level close to 115 can be seen. So, another what at large I can see is 4 to 5% of up move is still there.
5% up move in the PSU banking space probably does come in there. That's the word coming in. Now let's pull up our MCX, a strong up move that we saw in terms of today's session. If you pull up that chart on the screens and you'll see the kind of gains, 4.5%. Now a proposal to consult on allowing FPIs to trade non-agricultural and non-cash settled commodity derivatives is currently under consultation, and that's the word coming in from Tuhin Kanda Pandey from SEBI, that's the SEBI chairperson. Let's quickly listen into what else he had to say about this, as well as about bringing commodity-specific brokers on a common reporting mechanism for compliance.
A proposal to allow FPIs to trade in non-cash settled, non-agricultural commodity derivative contracts is also currently under examination. We will also engage with the government to consider banks, insurance companies, and pension funds to trade in these markets. By December 2025 end, we will include commodity-specific brokers in the Samohik Prativedan Manch, a common reporting mechanism for compliance reports. This will ease their compliance requirements.
Right, so that's going to be interesting. Gaurang, what do you make of this commentary that's coming in from SEBI chairperson with regards to where commodity derivatives go? The kind of surge that we are seeing in terms of MCX, what would you advise in terms of impact, and what should an investor do?
I think bringing in compliance, accountability, transparency, clarity, bringing in more participants. Fact here is that the commodity market in India is much more less penetrated compared to the equity market. That could be for one too many reasons again. Knowledge is one of the most important things when it comes to commodity market. So without going into specifics of buy, sell and hold, I believe one thing, Hiral, that Indian commodity market and Indian equity markets, both are likely to perform quite well as we go into the future, maybe for the next 3 to 5 years. Efforts made by the regulator to bring in more participants, bring them under compliance gambit, and increase the trading activity will result into higher volumes and higher fees for the exchanges which are associated with the respective market, whether it is commodity or whether it is equity market. So without going into specific of buy, sell and hold, well, MCX happens to be one of the strongest platforms in the commodity market compared to its peers. Of course, with the Indian capital market or Indian equity market also, we've seen how things have changed at ground level and how clarity has come in and more compliance has come in. So if you are of a believer that the Indian equity market and commodity market is going to do well for the next 3 years, 5 years, or maybe more, you should definitely look at this sector with a positive view.
In fact, thanks for that, Gaurang. Gaurav, let me come to you. If you have to talk about MCX, from a high of around 9,100 or little over that, the stock has cooled off. We're somewhere in that range of 7,988. With the fundamental commentary that we're hearing in, are the charts also supporting the up move from here on from a MCX, or do you think this will cool off from here on?
Well, absolutely. MCX is in a sweet place. When we talk about the capital market related stock, I think BSE and MCX are the the better ones to even talk about. Now, when the technical chart formations are also favorable, as we have seen good amount of profit taking from the higher levels, I think this stock is available at a sweet spot now, and 80 to 8400 is the immediate upside that we are eyeing at. And I think it will be a little injustice to the other capital market stocks like CAMS and CDSL if we don't talk about these stocks today, as they have also inched up and they have now a brighter room of performance coming in. So I think a good room in the immediate near term is left in these stocks also.
Okay, so BSC and you're talking about MCX. In fact, CDSL is another play which is seeing some good momentum in terms of today's session as well. There you go, 1.5% kind of up move coming in on a CDSL as well. But moving on, if you talk about consumption as a pack, there has been weakness, pretty sidewards momentum over the last couple of trading sessions. But one stock that is in action from the consumption pack for other reasons is Marico, which is nearly trading at the day's lowest levels. And this is because Mumbai income tax wing has made surveys at Marico offices. In fact, Charu joins us with the ground report. Charu, what are your sources telling you? You are at the Marico premise in Andheri. What are you picking up so far?
Yes, so we are currently in a Marico office in Andheri. The office is right here, and we have come to know from several sources that the Mumbai income tax wing officials had visited the facility early in the morning at around 10:30 a.m. and there were about 4 to 5 of them. The surveys are still continuing inside the facility, and the phone devices and other devices of the staff members have already been taken. In another lighter anecdote, a few of the people outside the offices told NDTV Profit that some staff members had come out for a while to make calls from the phones of other people who are running shops or are usually near the premises of the office. NDTV Profit had also previously reported earlier in the morning that IT wing is conducting surveys on multiple locations related to Marico, including their manufacturing units, major dealers and offices. This is in relation to certain foreign fund transactions related to the company. We'll come back to you with more details when we have them.
Right. Charu, just a quick follow-up. Anything that you're picking up in terms of what is the reason for these searches and, what's happening right now in terms of the surveys?
So as far as we know, these are in relation to some foreign fund transactions. However, we are not aware of the specific nature of these transactions or their quantum for now. But as soon as we get these updates, we'll come back to you.
Got it. Thank you so much for that, Charu, for getting us the details. Gaurang, any commentary in terms of Marico? I know this is more on the regulatory and the legal aspect in terms of what's happening. But what would you advise investors to do from a business perspective with Marico, and anything that fits your bill from the consumption pack right now?
Well, how do I say it? It's a developing story, right? We don't know the nature of this trade and the nature of the foreign exchange transactions that your colleague was also referring to. Minus that, the FMCG space looks quite attractive, Hiral. Right from the time the Honorable Prime Minister made his statements on 15th of August from Red Fort about the new avatar of GST 2.0, the entire FMCG pack has been buzzing. No surprises that it has taken a step back, a little bit of profit booking. But long term, Geojit remains extremely positive on the sector. We have coverage on Marico, we have coverage on Dabur, Tata Consumer, Godrej Consumer, HUL, ITC, Nestle, Britannia. And our sense is that from 22nd of September, that is next week, Monday, the consumption boost is likely to give it a push, and a large part of a positive tailwind will be visible from October, November, December onwards. So minus whatever news flow on Marico, we have an accumulate stance on Marico.
Interesting, an accumulate stance on Marico right now. Gaurav, very quickly, I want to touch base on two stocks. Varun Beverages, because that has seen a reversal after the kind of pressure in the last couple of trading sessions, and a Tata Consumer is your top nifty gainer. What are charts indicating for these ones as well? Still buying interest, or would you advise investors to book profits?
Let's talk about Varun Beverages. It's still not out of the woods yet. As far as charts are concerned, there are multiple resistances placed nearby. Stock is trading about 474, 490, 500, 510, 515. Again, multiple resistances around those levels. So I think this stock will take some more time. But when we talk about Tata Consumer, it's completely opposite. This is flying high, and a room towards 1175, 1200 still remains. I think one can still consider this stock from trading as well as for a long-term perspective.
Okay, so that's with regards to Tata Consumers, a long bet coming in there. But moving on, as we celebrate Honorable Prime Minister Narendra Modi's 75th birthday, on the eve of his birthday, we take a look at how primary market has performed over the last decade under his leadership. Somit brings us all the details. Somit, over to you.
Well, yes, IPOs have actually boomed in this period, that is from September 2014 till now. If you look at the number of companies that have come out with IPOs, a total of 445 companies have listed around this period. 2014 was a lull period, just 3 companies since September, but 2015, 21, 2016, 26 companies, 2017 we have seen 36 companies getting listed, and these companies have raised anywhere between 13,600 to 67,100 crore. But wait, much better picture is going to come here, because in 2021, if you see, nearly 63 companies have raised money from the primary market, raising close to 1.2 lakh crore rupees. And in 2024, if you see, this was one of the best year for IPOs. 91 companies have raised funds, a total of close to 1.6 lakh crore. And in 2025, so far, around 53 companies have raised close to 74,500 crore rupees. So a good month, around 445, a good number of years that we have seen for the IPO market. Close to 445 companies is what have totally raised funds so far, and the amount raised is close to 6.4 lakh crore rupees. 2024 was the best year. As I mentioned, 91 companies raised close to 1.6 lakh crore rupees. And if you look at some of the big IPOs that have come in, most of them are PSU companies. Firstly, LIC, 20,100 crore. Hyundai, which is not a PSU company, but that was the company that raised the most amount of funds, around 28,000 crore rupees. Paytm, 18,300. HDB Financial, 12,500 crore rupees. Swiggy, around 11,300. General Insurance Corp, again a PSU company, which managed to raise close to 11,300. SBI Cards managed to raise close to 10,300 crore rupees, and NTPC raised close to 10,000 crore rupees. So companies that have raised more than 10,000 crore, most of them are PSU companies that have managed to raise this funds in his tenure.
Right, so that's with regards to where, the way IPO markets have performed as well in this entire Modi era. But moving on, in fact, let me also, understand what GM Financial had to say as well in terms of the wishes for Prime Minister Narendra Modi. In fact, joining us, we have Mr. Venkatesh Balasubramaniam, MD and Head of Research at JM Financial. Thank you so much, Venkat, for joining us on the show. My first question coming to you is, how do you feel that the policies under the Modi government in the last 10 years have helped the Indian stock market?
See, Mr. Modi became the Prime Minister in May 2014. So post 2014, I think it's been almost 11 plus kind of years. So in this 11 plus years, there have been certain significant reform and reform-based decisions which have been taken. If I could name a few which have had a significant impact on the market on the positive side, the one which comes to my mind immediately is basically the GST which was implemented. So that was a significant event for the market, perhaps the most significant piece of tax reforms in the last decade or so, or maybe ever in India. Secondly, the implementation of the Insolvency and Bankruptcy Code, I think another very significant event in India, which has changed the behavior of promoters in India and cleaned up the banking system in India. Jan Dhan, again, very significant event. I think this was one of the first events or first reform measure which the government took immediately post coming to power. If I remember it correctly, I think they came to power in May 2014 and Mr. Modi took the decision to implement this from July 2014. So immediately, the primary goal was financial inclusion, and that has been implemented very well across the country and has had significant effect. Post that, I think immediately post that in 2014 itself, I think the Modi government again then implemented the Make in India reform process. Now, again, Make India did not have as much impact initially, but once the PLI cover was put on top of Make India, basically the production linked incentives, a lot of successes have come over the last 3 to 4 years. So again, I believe a significant bit of event which reform process which has played out. Last but not the least, the implementation of UPI has been one of the biggest events according to me. So these are like 6 measures which comes to my mind immediately, which the Modi government has implemented in the last 11 plus years.
Okay, so which are the 3 sectors that have benefited the most as a result of these policies?
So if you're talking about the recently implemented GST 2, where multiple tax slabs have been reduced to 5%, 18% and 40%, I think the biggest beneficiary is going to be basically consumer discretionary sector. So something like auto should benefit in a very big way over the next 4 to 5 years because of these new GST rates. So both two-wheelers and four-wheelers should benefit in a very big way because of this. Secondly, I think consumer staples. So there will be a big benefit of consumer GST rates reducing in lots of, both on the consumer staple side and on the food item side. We see things like biscuits, soaps, regular daily use items, those kind of products are getting a very big fillip because of the GST cut. Last but not the least, you could also see a second level impact on a lot of internet companies which are more consumer focused. The likes of, let's say, an Eternal or a Nykaa, they could benefit from increased consumption. We also believe that GST will also have a significant boost to the cement sector because GST rates have been cut even in the cement sector. So these are the 4 sectors which come to my mind.
Interesting names that you've given out as well. But thank you so much for joining us on the show and sharing the views. In fact, let's also look at how the PSUs have performed under the leadership of Prime Minister Narendra Modi. Somit joins us with the analysis.
Well, as PSUs have seen a big re-rating, and most part of this re-rating happened since August 2023 when Prime Minister openly asked investors to bet and invest on PSUs. So the key sectoral outperformance in the PSU space have been defense, railways and telecom equipment companies. Defense and railways have been the major outperformer. Now if you look at the companies that have seen the highest increase in the market capitalization and growth, firstly it's Hindustan Aeronautics. At one point of time the company was unable to pay dues to its employees, but right now the company's market capitalization stands at close to 3.2 lakh crore rupees, and it has increased at a CAGR of nearly 32% over 2018 till now. For Bharat Electronics, the market capitalization is 2.9 lakh, growth of close to 32% CAGR. Mazgaon Dock 1.2 lakh crore market capitalization, a growth of nearly 103%, and that too on a CAGR basis. When it comes to RVNL, Bharat Dynamics and IRCTC, these companies have seen their market capitalization increase at a CAGR of anywhere between 32 to 53% since their listing. For Cochin Shipyard, ITI, which is a telecom equipment company, Ircon and Railtel, their market capitalization is anywhere between 13,000 crore to 48,000 crore rupees, and it has increased at a CAGR of nearly 22 to 37% for some of them since 2015 and for some of them since 2017. Apart from that, if you look at the financial performance as well, it has been quite strong for all the PSU companies. For Mazgaon Dock, the revenue, EBITDA and net profit has increased at a CAGR of anywhere between 12 to 25% since listing till now. For RVNL and IRCTC, we have seen their financials, that is revenue, EBITDA and PAT, grow at a CAGR of anywhere between 16 to 26%. Apart from that, other companies like Railtel, for which we are seeing a 9-year CAGR growth, it has been around 18%. Revenue and PAT growth has been 26%. For Bharat Electronics and Hindustan Aeronautics, both the companies in the defense space, they have seen their financials, that is revenue, EBITDA and PAT, grow at a CAGR of anywhere between 7 to 19% over 2014 till now. Apart from that, there are companies like Bharat Dynamics, Cochin Shipyard, ITI and Ircon, and those two have seen at least a double-digit growth. Bharat Dynamics here has seen a slower growth, but that is also because of the fact that their business is cyclical, but other companies have seen a double-digit growth in their financials over 2014 till now.
Right. Thank you, Somit, so much for getting us all the details. Gaurang, anything that you feel could see a potential uptick from here on as well, because PSU profit makers, good names coming in there. In fact, I was just looking at the defense pack. Fourth consecutive session of gains coming in yet again as well, from a Garden Reach to a Cochin Shipyard to a BEL. Would you be a buyer? Are fundamentals really supporting the uptick?
So, Hiral, we have coverage on diversified sectors wherein government has its investment interest or has its holding. Just day before yesterday, the Ministry of Defense and Defense Minister Raksha Mantri Shriman Rajnath Singh ji announced a Defense Procurement Manual, a DPM, easing the ease of doing business further and elaborating the Make in India, Made in India transformation that the Honorable Prime Minister had put in place a couple of years ago. So we believe defense sector, cap goods engineering, energy sector. Energy would include both power generating companies and oil and gas companies. We believe public sector banks, strong banks, names like SBI, Indian Bank, Canara Bank, Bank of Baroda, Bank of India, PNB are likely to do further better. A company like Engineers India Limited, on fallback of the new policy that the government initiated a couple of time backs, that is green hydrogen. I think these are some of the areas where we feel sector-wise government PSU companies are likely to do better in the future.
Okay, so that's the view coming in from Gaurang. Gaurav, what would you advise to do with any of the PSU bets, specifically the defense pack, which is buzzing in trade right now?
I think Gaurang has covered the entire universe. I find difficulty in finding out stocks now, what to say. Now, specifically when we talk about PSU and the defense space, Mazagon Dock remains one of our favorite bets, along with HAL. And other than that, BDL is also available at a sweet spot now. So these are the three stocks in that order we prefer.
Okay, so that's the pecking order that you're looking at. The other segment that is buzzing in trade is the textile space, where PM Narendra Modi lays the foundation stone of Mitra Park in Madhya Pradesh. In fact, textile stocks will remain in focus on the back of this, because a lot of companies will be participating in this event as well. Strong moves coming in there, and plus you're talking about tariff negotiations between India and US, which seem to be going on a positive footing. So two tailwinds coming in for textile companies. Gaurang, would you be a buyer?
Honestly, Hiral, I think we don't have to jump the gun when it comes to tariff-related matters. I think we have to leave it to the government and government's wisdom as to in what form, shape, size, and when this particular tariff agreement is signed. We have made it very clear that there are certain red lines drawn, Lakshman Rekha drawn, which we will not tolerate anybody crossing it over. Having said that, minus what happens to the textile-related tariff that the Trump administration put in, we have coverage on Wellspun Living and Raymond's. These are the two stocks which are under our coverage as far as the textile universe is concerned. But I'll make it again clear, this recommendation is not anything to do with the tariff related matters on the Indian textile sector.
All right, so that's with regards to textiles overall, but completely out of time. Thank you, Gaurang. Thank you, Gaurav, so much for joining us on the show and sharing your views. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द NDTV ऐप। The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द NDTV ऐप।
Hello and welcome to NDTV Profit. You're watching Small Cap Buzzers. I'm Hiral Dadia and with me is Somit Sarkar. An interesting day of trade. 0.4% higher. We're trying to be towards the day's highest levels. What's interesting is the 25,300 mark that you're seeing. We've maintained above those levels, and that is what is important because a sustained closure about 25,250 is going to see some buying interest, and that's what analysts are pointing out towards. Let's quickly look at Bank Nifty because over there, the PSU Bank Index is very interesting. 0.5% up move in terms of Bank Nifty. So some bit of outperformance coming in from the banking players. But it's the PSU Bank Index, a 2% up move. If you talk about the contributors as well, majority of your PSU banking space up in that range of almost 2 to 4%. Bank of Maharashtra leading the charts with the PNB, Canara Bank and the SBI, which is seeing some smart gains over there. Let's quickly look at the heat map in terms of Nifty 50 as well to tell you what is gaining. Tata Consumers, 3.5% up move, BEL, SBI, Kotak and Maruti. HDFC Life, Bajaj Finserv, ITC, and the SBI Life. So your life insurance players are slightly under pressure. If you look at the broader markets as well, let's pull up the mid cap and the small cap index to understand where the moves are coming in. If you talk about mid cap 150, 0.2% higher, and you have the small cap 250 as well, 0.5%. So again, your small cap index is outperforming in terms of your broader markets as well. BSE 500, if we can have those contributors. KNR Construction, 8% up move, data patterns. Affle, AB Fashion on the back of a new launch. RVNL, I think it's an order win. Wellspun Living. In fact, all your textile players from the small cap or the mid cap space are buzzing in trade on the back of tariff talks, which have reinitiated. And you're talking about the textile park in Indore that Prime Minister Narendra Modi is inaugurating, and that is what is giving that a boost. What's trading under pressure? Godfrey Phillips has started to see selling pressure after that surge that we had seen. Britannia, Godrej Industries and Home First, which are down in trade. So a lot of movers and shakers, Somit, in trade today, but it's individual stocks which are firing and no particular trend. Defense, textiles and PSUs are the limelight today.
Yes, thank you, Hiral, for that extensive market check. With that, let's welcome in our first management on the show, Rushil Thakkar, the Managing Director of Rushil Deco. So firstly, to start off with, cheaper imports were an issue for the industry earlier, but with post the BIS implementation, have imports fallen? What has been the industry dynamics when it comes to the supply side, given the fact that demand is yet to meaningfully pick up currently?
So first of all, after the implementation of BIS standards, the imports are now zero, and we see a good market coming up with a quality product with a stronger consumer focus in the market. So we see a good price hike over there as well, where we were struggling for several years to compete with imports. So this was a good initiative taken by the government to protect the MDF and the panel board industry.
Right, sir. But given the fact that demand is yet to pick up in a big way, so are you still saying that despite that the industry was able to take price hikes? And if yes, and what was the range of those price hikes? Any idea on that front?
So we are comfortably taking currently about 5% of the price hike in the MDF sector. And talking about the demand supply, yes, there was higher demand, and also there was a higher supply because of the unorganized market getting bigger in this industry. But now, as we see a BIS standards coming in, it is very comfortably for everyone to get this price hike, and the demand and supply ratios can be maintained accordingly.
Right. So this 5% price hike that you're talking about, does that fully offset the increase in raw material costs that we have seen?
So currently, yes, we see a 2 to 3% approximately hike in the raw material pricing, but that is also just not the way to look at it. We also have to make sure that our overheads are also into the control. So this price hike, what we are taking is very sensibly taken, and very clearly it has been flown to the market as well.
Right. So given that you have taken a price hike and that is completely offsetting your raw material cost, can we expect an uptick in margins?
Yeah, margins can be up by 2 to 3%, but additional margins into the business come when you increase the value-added product selling into the market, as well as the utilization of the capacities what have been installed. So we are seeing a positive growth of, despite of having the Q1 fire in our plant, we are still expecting a good capacity utilization of 85% plus in our MDF industry.
How are you looking at your EBITDA margins for the full financial year FY26? Where can we expect that to be?
So Rushil Decor as a company, we are expecting the EBITDA margins somewhere around 12 to 14%. Because of the fire which affected it in our plant in Q1, the margins are still kept to be a bit low, but the additional margins will be covered by our new plant set up at Gandhinagar for jumbo laminate. So that is where the majority of the margins will be coming from.
Right. As you were speaking about the different type of laminate, that is jumbo laminate, I believe that this is a very high margin product compared to what the core laminates give you. So if you could give us a breakup of how much margins you generate from a jumbo laminate versus a core laminate.
So core laminate, roughly, if you see the composition, the net, the EBITDA margins stand somewhere around 10 to 12%. Where we go to the jumbo laminates, the EBITDA margins go around 14 to 16%. The product is slightly bit more technical because the markets where these products of jumbo laminates are used are very well developed, and the certifications required for this export markets are really very tough to get. So we have secured the certificates successfully in quarter, and we have started the sales for jumbo laminates by this quarter.
Right. So with increasing push for this product going forward, how much does jumbo laminate contribute to your volumes currently, and say by the end of this financial year, how much will this single product contribute to your overall volumes and top line?
So currently, as we see, there are first 2 quarters were just for getting the certification, and few of the machines set up. The few machines were getting set up. So from Q3 and Q4, we are expecting the sales of roughly around 50 to 80 crores for the jumbo laminates, and the capacity of phase 2 will be, which we have already will be starting in the October month, will be also added to this capacity. So overall, our capacity for HPL or laminate sector will be increased by 2.8 million sheets. So revenues will be accordingly upticked.
Okay, right. So 12 to 14% is the margin that you're expecting for FY26. For FY27, so can we comfortably say that margins could expand further given the fact that more sales from jumbo products will come in?
Yes, so expected turnover from jumbo laminates for the whole year is expected to be around 150 to 180 crores for next year. So accordingly, once the product mix goes up, the margins, the EBITDA margins also go up. So yes, it is positively expected to cater a good margin for next year.
Now coming about the top line, 890 crore is what you did in FY25. What is your target for FY26 and 27?
So for FY26, we are targeting somewhere around close to 1,000 crores plus revenues in the top line. And for coming to the the adjoining financial year, we'll be targeting around 1,200 crores revenue for financial year 27.
Right. And any new product launches that you have planned?
As of now, our complete focus is on the jumbo laminate sales and jumbo laminate setup. So currently for upcoming this financial year, we are not focusing or targeting any new product as of now.
Okay. And any planned capacity expansion either from your side or any other players in the industry which could disrupt the demand supply dynamics?
In MDF, yes, few capacities are getting added, but it will take roughly around 18 months to start the capacity for them. So by the time, I think the current capacities may absorb in the market. And we see a positive uptick because MDF as a category has a growth of 20% CAGR. So yes, we see a good growth for that industry as well.
Right. Well, thank you, sir. Thank you for joining us and explaining the way forward for Rushil Decor from here on. Well, with that, let's also welcome in our guest for the show today, G. Chokhalingam, founder and MD of Economics Research. Mr. Chokhalingam, starting with Rushil Decor, you have heard the management, very strong growth prospects. They are expecting margins to increase. What is your view when it comes to this counter?
Yeah, this kind of business, there are too many in the stock market as well as in the business. There are a lot of organized and unorganized players. So the competition is going to be intense unless this kind of company really evolve into a very big company. There will not be a great attraction. But however, to be fair to the company, yes, they have done reasonably well in FY25. The sales have grown 6%. PAT has grown double of that, around 12%. And the only concern is that last 12 quarters, the quarterly revenue, there is no growth. It is oscillating between 211 to 229 crore. Even the margin from 2022 at the rate of 23%, it has come down to 10%. But however, as I mentioned, two factors are there. One, FY25, there's some improvement. And second, the management is talking about a lot of expansion. And also the valuation also just around 20 PE, not exorbitant. So considering these three facts, things have improved in FY25 and a lot of capacity expansion is happening and the valuation is also reasonable. I would give a hold call and once investors get about 10%, then one can book profits.
Well, another counter that remains in focus is Dreamfolks. The company has said that they will discontinue a domestic lounge service which contributes nearly 90% to the top line. Let's get in Mahima with more details on the same.
Right, so Soumit, as you rightly mentioned, Dreamfolks has announced that they are discontinuing their domestic lounge services, and this actually questions their entire existence because, as you rightly mentioned, around 93% of the revenue comes from lounge services. That, of course, includes both national as well as international lounge. The company claims that the impact will be material. However, other domestic services and global lounge business will continue going forward. They've said that contacts with client will remain active, and they are in discussion with clients on alternative customer value propositions that are in progress right now. But in terms of the airport lounge mix, 77 is to 23 is the ratio of domestic is to international. And as I mentioned, 93% of their total revenue comes from lounge services. That includes both international and domestic. And around 7% comes from non-lounge services. Now, recently management gave its commentary in Q1 as well, saying that they were targeting 240 lounges by 2040, but that is under question right now, considering they are shutting the entire domestic side of business. Services other than airport lounges has increased from 5.8 in FY24 to 6.7 in FY25. We'll have to know as to how the trajectory goes on from here on, because lounge services being the core business in the domestic market is being shut. As per the management, services other than India airport lounge will contribute major portion of their top line going forward. So they were kind of anticipating this as well. Lastly, in terms of recent updates, of course, TFS also terminated their agreement with Dreamfolks in terms of lounge services. And in July, they closed certain programs with Axis Bank as well as ICICI Bank as well. So all of this, combined together, the question rises whether the existence is under threat or what is something that we would want to know from the management as well.
Right. Mr. Chokhalingam, any views on discounted Dreamfolks? The business viability is now in the question, right?
Yeah. So what we are reading now through media is really very worrisome. And stock is already down 75%. This is a major problem in small cap companies where, the customer focus is highly concentrated. So all growth, credibility of last 3 years and market cap build-up, all this got shattered now. So it all depends on how soon they rebuild the business. As of now, the stock trades at around 10 PE on FY25, but it is subject to the condition that they maintain that kind of performance, which is now doubtful after hearing what's all happening. So I would not, buy the stock. In fact, if at all I'm holding the stock, I would, take a bet and hold it and see whether any management capability is there to regain at least some portion of the lost business. But otherwise, stay away from the stock.
Right. Another counter that remains in focus is Venus Vibe. Ambit has given a strong outlook on this counter with a buy rating and a target price of more than 2,400 rupees. Let's get in Puneet with more details on the same.
Well, Venus Pipes is in focus after brokerage from Ambit has come out with a positive note on the company. They have maintained a buy target price of 2,432 rupees per share. And there's a key question that Ambit seems to be asking here. They are asking if we are close to the bottom on this particular stock. Let's also look at what the other things they're saying. They're saying revenues have largely remained stagnant over the last 4 to 5 quarters. But stagnant revenues has been despite the positive momentum that we've seen in the export market for Ambit. They've also said that the overall order book has grown almost 2 times on a YOY basis to over 560 crores and highlighted that it gives enough visibility for growth to return over the next few quarters. They've highlighted that the bullish on upcoming capacities which will come in, as well as new product interventions that Venus Pipes will do, and hence maintaining the positive view. Revenue growth recovery as well as market share gains should follow as well. And it's coming at a very important time because just post Q1, Venus Pipe had actually increased their revenue growth guidance for FY26 to 25%. Versus 20% earlier. They also mentioned that the margins should range between 16 to 18% for EBITDA in FY26 as well as FY27. They've said that export remains healthy while the US mix is lower, so you're seeing a lower impact on tariffs, and that's the key positive for Venus Pipes. In terms of finally just highlighting what's happening on demand, they mentioned that domestic should ideally pick up from here, especially in the power sector. That's what the company had mentioned in the Q1 conference call and highlighted that they're expecting good demand for India's stainless steel players. So watch out for this one going forward as well.
Mr. Chokalingam, any view on Venus Pipe? The growth prospects seems to be quite promising. Around 25% growth is what the management is guiding for FY26.
Yeah, so to be very fair to the company, it's a phenomenal achievement in the last 7-8 years. Pre-COVID time to FY25, the revenues have gone up 9 times. Even the profits have multiplied many times, but that was all in price. The market went ahead of what the company would deserve, and that's why the stock has corrected 41%. Now, after 41% correction, it is reasonably valued at 30 PE. But the retail investors should bear in mind that at some point in time, the base effect starts playing out. When you have less than 100 crore revenue and grow to 1,000 crore, that kind of 9-fold increase in 6-7 years cannot continue at all. It's very difficult. That is a very rare event in the corporate world. So I believe that yes, because share price has corrected and the company has given strong growth outlook and order book, maybe 10-15% return is possible. But otherwise, I would not have strong, robust outlook of earning 40-50% return from the stock in the next 1-2 years. So modest return is possible.
Shifting focus to the small cap space, small cap 282% return that we have seen since 2014 underscores the small cap boom under PM Modi's reforms. Top stocks like Olectra and Tanla highlight the growth that we have seen in EV and the digital sector. Let's get in Jasmeet with the stocks that have been the top gainers since 2014 till now.
Well, right. Yes, thank you for that. Let's quickly understand the broader market horizon. Now, when we talk about the small caps, let's understand over the last 11 years, starting from September 2014 up until today, how much return have the small caps given, small cap 250 arena. So we see that the return by small cap 250 stands at 282%. When you look at the compounded growth, that's the annual growth rate, it stands at 14.8% overall. Let's quickly understand the top 10 players who have gained the most when it comes to the small cap Nifty 250 funds. While the best performing, the first one stands at Olectra Greentech with a return of 14,737%. When you look at the compounded return annualized, it's at 56%. While the next one is Tanla platform, then we have JB Motors, then you all have Caplin Point as well. Well, if we look at the Olectra, the revenue 10 years back stands at 80 odd crores, while the revenue for the current year up until FY25 stands at 1800 crore. While the margins they have been maintaining at the same range of 14 to 15%. On the other hand, if you look at the other next 5 stocks which would come under the range of this particular cap of top 10 Nifty 250 funds, we have Newland Lab, we have PCBL, we have HBL Engineering as well as Navin Fluorine. Now talking about the HBL, the revenue has stayed in the range of 1300 odd crores to 1900 odd crores from 2014 up until 25, but they have improved the margins. The margin for particularly HBL stood at 7% back in 2014 and right now they're trading at a margin of 20 odd %. So these are the top 10 stocks performance under Nifty 250 under given the Modi era from 2014 up until 2025.
Well, let's also focus on another stock, Platinum Industries, that has been buzzing in trade. The stock's up more than 10% in trade. Let's get in Vansh with more details on what could be the potential reason. But okay, but before that, Mr. Chokalingam, coming to you, there are multiple stocks that were highlighted by my team member here. Have you looked into counters like Olectra, HBL Engineering in the small cap segment?
No, certainly yes. But, the retail investors should understand that, they should chase what is a potential multi-bagger rather than chasing what has already become a multi-bagger. So these two companies have already delivered a phenomenal return and they have become already a solid multi-bagger. So are we going to make, further substantial alpha, which I doubt. So one should reward those entrepreneurs, no doubt. They have done a phenomenal. But for retail investors, I think they should look for some other segments where the opportunities could be plenty rather than continuously chasing, the today's multi-bagger. They should look for tomorrow's multi-baggers. That's my personal view.
Right. Another counter, as I was talking about, is Platinum Industries. That stock's been buzzing in trade. It's up more than 10%. Let's get in Vansh with more details on the same.
Well, yes, let's start with the business of the company. Now, the company manufactures PVC stabilizers. Now, the stabilizer is a chemical additive that are used to protect PVC. They also manufacture additives and lubricants as well. The company products find applications in PVC pipes, PVC fittings and electrical wires also. Now, if I talk about the developments of the company, now the company is transitioning from the lead-based to lead-free PVC stabilizers. Now, there has been a focus from the Indian government regulations mandating the phasing out of the lead-based PVC stabilizers, and the company has been investing rapidly in the non-lead-based capacity for the PVC stabilizer as well. Let's also talk about the greenfield expansion for the company. Now, the company through its arm is planning to start its manufacturing of PVC stabilizer in Egypt. Now, it's important to know that Egypt does not manufacture its stabilizer, and it meets its demand through imports from India, Turkey, Saudi Arabia and Iran as well. Now, the company is investing about 67 odd crores for PVC stabilizer in Egypt for a capacity of about 30,000 million tons per annum. This facility is also in close proximity to the Suez Canal, which will further provide easy and cost-effective logistics for the company as well. Lastly, if I talk about the financials, the 3-year revenue CAGR for the company stands at 28%. And if I talk about the PAT CAGR, the 3-year PAT CAGR stands at about 40%. So this is clearly a positive for the company. Lastly, if I talk about the street cred, now however, the performance of the company has been good in the recent past, but if I look at the 1-year performance, the stock has been down 15%. So this is what the overall picture is looking like for a Platinum Industries as well.
Right. IRM Energy is another stock that has hit an upper circuit of 20% after HDFC Securities reiterated its buy rating on the counter. Let's get in Varsha with more details on the same.
Well, thank you so much for that. So yes, the target price has been set at rupees 440. Now let's understand what this company does and why this is buzzing. They sell and distribute natural gas, and if I were to talk about FY26 outlook and what are their targets, so they're expecting a huge volume growth when it comes to their CNG business. So they're going to add 50 new CNG stations when it comes to FY26, while the volume growth for PNG is expected to be soft. Now they're aiming for an EBITDA per unit of rupees 5.25 to 5.50 per standard cubic meter for FY26. And now onto the volume, wherein I was telling you about the volume growth which is expected in FY26. So from FY25 to Q1 FY26, if you see, the volume which used to contribute almost 53% has increased to almost 56%, while for PNG volume it has decreased and it is expected to be soft going forward also. But overall, if I were to talk about the strategic initiatives and data, so agreement with the Red Taxi will boost CNG sales when it comes to IRM Energy.
Right. Mr. Chokhalingam, quickly your view on IRM Energy and Platinum Industries. Should investors consider buying this counter at current levels?
I would not suggest buying Platinum. It's still trading at around 36p after 34% fall in the stock, and it's not rewarding investors in terms of good dividend. IRM Energy, yes, one can hold. That also corrected a lot, and P is slightly lower at 30, and also the being part of Cadillac Group gives some comfort. So therefore, I would give a hold on IRM and sell on Platinum if it further rises 5 to 10%.
Right. Thank you, Mr. Chokhalingam. Thank you for joining us and giving us your perspectives on the stock that we discussed today in the show. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app. best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी सब विदेश जाते हैं। The best app to use is the NDTV app.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
buy time to invest in
CDSL
Apple?
for the long term? Buy, sell or hold?
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to NDTV Profit. You're watching India Market Close. A good day of trade, Nifty above that 25,300 mark. And that is what is very supportive right now from a trend perspective, because analysts are of the opinion that till the time Nifty sustains on a closing basis above 25,250, that positive momentum could continue as well. We have receded slightly from the day's highest levels, but it's still not that bad as well. 0.3% higher. Let's quickly pull up Bank Nifty on the screens and then we'll see the advanced decline ratio as well. 0.5% up move coming in terms of Bank Nifty at the day's highest levels, and the gains are coming in from the PSU banking space. If you look at the PSU banking index as well, you'll see the kind of gains that we are seeing on that front. Almost 2% is the kind of upside there. From a Bank of Maharashtra, PNB, Canara, SBI, Central Bank of India, all of them actually buzzing in trade. Let's quickly look at the heat map in terms of Nifty 50 to understand which are the top gainers. You have a Tata Consumer Products, which continues to be the top gainer today. Gains of nearly 4% coming in there. SBI, BEL, in fact, the defense pack, 4 consecutive session of gains coming in with defense majors. Maruti, Kotak Mahindra Bank, Trent, Hero Moto. Again, it's more of consumption, which is on the uptick, and it can be from the auto pack or FMCG. Tata Steel is under pressure, HDFC Life, SBI Life, and Bajaj Finserv. So something to do with insurance and financials is slightly down. Hindalco again 0.9% lower. ITC also seeing a very different trend as compared to the other players. If you talk about India VIX as well, that's pretty much at 10, receded by almost 0.9%. So that number of around 10 is pretty encouraging. There you go. A very steady chart in terms of the way India VIX has panned out during the day. Let's quickly look at the advanced decline ratio as well. From morning to now, if you see the chart, pretty much steady. The advances were somewhere close to that 1800, 1900. It's come down slightly, and you've moved towards that 1400, 1500 kind of advances. And from a declines perspective, that has actually increased. You started off the day at around 300. That's nearly become 3 times now. So that chart is also slightly narrowing right now. So that's the trend that you're looking at. But what's encouraging is the outperformance that's coming in from the small cap index, Mahima. And it's a lot of stock specific action that you've been witnessing. No clear trends, but textiles, defense, your PSU pack, all of them firing.
Right, but Hiral, what you were mentioning about the advanced decline ratio, I think that is telling us a picture as to how mid cap 150 is not performing very well, and that narrowing of chart is indicating as to the kind of downtick that we're seeing in the mid cap 150. It's up around 0.09% as we speak, 0.08% as we speak. But yes, as Hiral mentioned, small cap 250 is outperforming, seeing gains of about 0.5% and very stock specific. There's counters like Red Tape, India Pesticides, DCM, Shriram, Wellspun Entertainment, Enterprises, Garden Reach, KNR Industries, KNR Construction, Lux Industries, etc. doing very well in trade today. On the flip side, counters like Dreamfolks, on account of the closure of their domestic lounge services, locked in the lower circuit, down by about 5%. FIAM Industries, Westlife Food is seeing profit booking today 2.5% down in trade. CSB Bank, Godfrey Phillips also seeing profit booking today down by about 2%. Sirma SGS, Time Technoplast, NLC India, etc. On the flip side are seeing the downtick in trade today. So that's about very stock specific market, of course, and with regards to how the broader end of the spectrum is looking like. But with that, well, let's also welcome in our guest for the day, Kush Bora, founder of kushbora.com, joining us now. Kush, hi, good afternoon to you. Hiral was mentioning that analysts are suggesting that if we close about that 25-50 levels, the momentum will sustain. Do you think that's possible today as well?
Sure. Hi, Mahima. First, a very good afternoon to you and to all the viewers. Well, if Hiral said it, how can I deny it, right? No, that's on a lighter note. But yes, she's right on the fact that 25-250 was a key resistance zone on the Nifty. In fact, I did mention that yesterday, a couple of sessions ago as well. Right now, a couple of heartening signs. Let's start with the positives first. Good uptrend. If you see out of the last 11 odd sessions, we've ended higher on about 10 of them. Today also included, assuming we close in the green. So that's on a very strong footing. 22-250 resistance that is being taken out. PCR, despite the kind of moves that we've seen in the recent past, up moves, it still sits at a comfortable 1.23, close to overheated, but not there yet. And the most heartening fact is that the put base keeps shifting higher practically every day. And now the heaviest put base is at 25,300. Which is suggesting some sort of comfort that the bulls have in terms of writing put options at very near-term levels as well. So those are the positives. Mild caution, if I could put it out there, is the smaller time frame charts which are now actually seeing overheated territories. So if you see Nifty and Bank Nifty as well, for that matter, on the hourly charts, they've actually gone into overheated territories, suggesting some profit booking could be par for the course. Lots of positives, minor caution. So I would suggest if you have a position, not a bad idea to continue to hold. But if you wanted to initiate a fresh one, it will be a good idea to buy it on declines. So maybe closer to 25,200 or thereabouts, a 150 point dip perhaps from here would be a good entry point on the Nifty. I think the star of the show remains Bank Nifty, 11th consecutive session of gains today, assuming, of course, we close in the positive, but, going great guns. Now coming up to the resistance of the 55,500 zone, the 50 DMA. So maybe some profit booking here also advisable. Buy on dips is the strategy. 54,800, 55,000. If you do get it around those levels, that would be a good entry point on Bank Nifty as well.
Okay, that's interesting in terms of the gains that we've seen. Buy on dips should be the strategy. Kush, a quick view in terms of your top picks. And in addition to that, if you can just highlight what one should do with the PSU banking space, because that is what is also firing today.
Oh, absolutely, Hiral. If you'll recall, this is exactly the discussion that I had. In fact, I think Mahima will also recall that, on Ask Profit, when we were asked about a couple of banking names, my suggestion was rather than buying likes of Kotak and Axis, you're better off buying PSU banks like SBI, PNB, which had started to, see short covering bouts about 10 sessions ago and could gain momentum. And we are seeing a continuation of that. And, and a perfect example of that today as well. Now they're coming close to slightly overheated territories, although the volumes that have happened yesterday and today on some of these names are encouraging. But I would suggest that if you did buy them at lower levels, book partially, continue to hold the rest, don't let go, because the rally could just well be starting. So that's the view on PSU banks. As far as picks go, both of them on the long side. Incidentally, one of them is from the banking space. That is the Indian bank stock that I'm referring to. Just 5 sessions ago, on the 12th of this month, we discussed Indian Bank as a buy call with targets of 712 and 730. The first target has been hit today. The stock's actually at all-time high levels and gaining ground. Volumes also very healthy today. So if you have a position, continue to hold up the targets to 730 and 745 now. And the initiation price of 695 becomes your stop loss. And if you did buy it, it becomes a trailing stop loss. The other one is GVTND, GE Vernova TND. About to have a rounding bottom formation breakout, but with the kind of moves that it's made over the last 3 days on the back of good volumes, taking support of the 20-day moving average. This one also is a buy. Near-term targets 3,000, 3,075, 2850 is where you place that stop loss.
Okay, so that's with regards to where the PSU pack goes and the topics coming in from Kush. But let's quickly pull up Vedanta on the screens and see what a Vedanta is doing in trade, because the stock has nosedived as we speak, and this is on the back of the hearing that was in the Mumbai High Court, which has been deferred right now. And this is the demerger hearing, not having much details on the same yet, but the stock is at the day's lowest levels with cuts of 2.5% coming in there. It's interesting to see what's happening on this one, because the demerger talks, Mahima, have been ongoing for quite some time. And overall, if you talk about the timelines as well, the last update was that the NCLT had actually deferred this hearing to the 17th of September. This was done at the end of August 2025. Okay. And now the hearing is again deferred to the 8th of October. And that's the latest update that we're picking up so far. The pressure continues in terms of where the stock goes. Kush, a quick one. What would you advise investors to do with a Vedanta?
Stay out for now. Off late, the stock has actually seen far higher degree of volatility. Although, if I were to cut some slack, for the stock, most of the metal names today, you look at the likes of Hindalco, Tata Steel, JSW Steel. After a good run, a lot of them are already seeing pressures and cuts of about 1.5%. This one, on the back of the news that you said, slightly deeper. So my suggestion would be avoid this. If you still want to stick to the metal pack, JSW Steel and Tata Steel are the preferred ones. So stick to those names. Right now, the profit booking is underway. So maybe at slightly lower levels, you could consider JSW Steel and Tata Steel. Avoid Vedanta for now.
We also have Parag Thakkar of Fort Capital joining us now. Parag bhai, very good afternoon to you. Hira was just mentioning as to the timelines of this Vedanta demerger, and this is the third time that the hearing is deferred. The last update that we had was on, the NCLT saying that NCLT ordered rejecting the demerger of TSPL and post cases for the hearing on 4th of August. But since then, we are hearing only deferment of the cases. Your view with regards to how investors should react right now to this?
Sorry, I think I will not be able to give you a view on Vedanta because we don't hold it in our portfolio.
No worries. Parag bhai, your view on PSU banks. We've seen a stunning rally in all of these counters. Your preferred pick there?
So basically, as we have discussed earlier, SBI, PNB and BOB are the PSU banks which we hold in the portfolio. We remain constructive. In fact, our channel check suggests that this quarter, PSU banks might surprise with a very, very minimal NIM compression. Decent growth, and as usual, asset quality will hold on very strong. So although there is a good rally which has happened last 5-6 days and it is continuing today, so we are not chasing it today, to be very frank, but we would like to hold on because we see a long-term structural rally in PSU banks. And just to add to that, even in as I had highlighted in my last interview, that up till now, after the GST cut, only auto sector and auto component sector had seen a massive run. And now the market it was high time that market should shift to second order thinking, which is financials. And within financials, I also remain extremely positive structurally from long-term perspective on HDFC Bank, which is our very large holding, because of the fact that now that CD ratio is below 96%, market is flushed with liquidity with CRR cuts. HDFC Bank is best positioned to gain after the GST cut led demand surge, which will happen after 22nd September. HDFC Bank is present in every nook and corner of the country. They have a huge number of branches in tier 2, tier 3 towns and rural areas also, and in all auto dealerships. So I would say that HDFC Bank is all set to grow at industry rate in FY26 and above industry rate in FY27. Stock is just trading at 15 PE on FY27. And only 2 times price to book, which is historical low. And now all the problems of CD ratio being high, liquidity being too tight in the system, deposits not coming to the bank, to all the banks, I would say, all those problems are behind, and now the big positive turnaround is in the making.
So Parag bhai, would you say HDFC Bank would be your top pick in terms of where the private banks go?
Absolutely. HDFC Bank is
we'll revisit the banks again, but it's time for a quick segment where we have the stock of the day, which is MCX. In fact, the commodity exchange, if you see the stock chart, has made some smart moves after SEBI Chief Tuin Kanta Pandey hinted at allowing banks, FPI in commodity trade. Varsha is here with more on that. Varsha, over to you.
Well, thank you so much for that. So yes, SEBI is actually widening the participation when it comes to commodities market, and that's the reason, SEBI chairman said that they are considering to allow banks, FPIs and pension funds to trade commodities. Now this will lead to a good higher liquidity and higher volumes, and MCX would be the will actually support this MCX long term growth. Now talking about what does existing regulations say, banks and pension funds are not allowed as of now to participate in commodities market. When it comes to FPIs, they are restricted to cash settled non-agriculture derivatives only. When it comes to mutual fund, they are allowed, but they do have limitations when it comes to their specific investment, and now these are the current existing rules that we have. Now what does the new regulation mean for banks? They'll be able to hedge their commodity loan portfolios. When it comes to pension funds, they can actually diversify for risk management, and this opens a new asset class for them. When it comes to FPIs, they'll be allowed to trade in physical settled contracts, and now considering how this will benefit exchanges as a whole, as I said, there will be more volumes, there will be more transactions and good liquidity, and more volumes will actually attract new products. There will be new product launches as well, and this will actually improve liquidity, and so there is a vicious cycle when it comes to these transactions. Lastly, how MCX will benefit? So the current contribution from these segments is negligible, as I said, because they are not allowed. But overall, if you see, FPIs contribute almost 7% to the overall turnover when it comes to MCX. But MCX will benefit because considering the 90% market share that the MCX has, and so this is the reason, because of SEBI's considering the widening participation when it comes to commodities market, MCX is actually gaining when it comes to trade today.
Thanks, Varsha, for that. In fact, with the MCX, Mahima from a CDSL, BSE, all of them are seeing a good run, and the capital market play probably is the one which is gaining traction over the last couple of trading sessions as well.
And probably that is on the expectations that markets from here on will just see momentum and low downfall, and hopefully that is what we see going forward as well. But Kush, quickly your view on the charts for MCX?
Not so encouraging. MCX has been on my short call, short candidate list for some time now. We did initiate a call. The stock has underperformed for some time now. If the team could just pull up a 3-month chart of MCX, you'll very clearly see that the peaks actually make, there you go, fabulous. You can very clearly, without even a proper technical indicator, you could see a falling trend line resistance. The 8,000 mark is proving to be a bit of a stiff resistance. The high today also around the 8,035 mark, and then profit booking from there suggests that near-term pressures could prevail. Call option right up also at that 8,000 level. If, however, in the coming days, if it is able to close above that 8,000 mark, I won't be surprised to see a spring up to another 3 to 5% move. So 8,250, 8,450 could be on the cards. But don't preempt that. There has been some selling pressure on MCX. Wait for a convincing close above the 8,000 level, and then perhaps you could initiate a trade. Not now.
Okay, that's regards to MCX. Parag bhai, how are you looking at the capital market play and the commentary that we've been hearing from SEBI chairperson with regards to expanding, the pool when it comes to investments in commodities, and to increasing the compliance as well? Would you be a buyer?
No, basically, I will not chase the momentum at this moment. Of course, if the banks are allowed to trade in commodities through this MCX and other exchanges, it is a big positive because that will increase the volumes. And it's a great business to be in, but the stock has also rallied a lot. And as Kush said, that this is not a right time to chase the momentum. And of course, all capital market stocks will do well definitely when market outlook is good, right? And market outlook has improved after the communication between US and India has improved. And of course, which should have improved significantly after GST cut, which it has. So I would say that I am not a big believer of capital market stocks anyways. So I'll not chase the momentum.
Parag, you were talking about HDFC Bank, and there was a Jefferies note also that had come in today with a target price of 1,200. They're also saying the same thing, right? Asset quality is stable, it's improving, loan growth guidance also stays. To take your point ahead further, what makes you constructive or bullish on that particular counter, HDFC Bank?
See, I'll tell you one good thing about HDFC Bank is that they've always maintained top class asset quality across the cycle. If you see 2007-8 cycle of where many other banks and financials lended to power plants without coal and lended to many other real estate players, and all actually became NPAs. So across the cycle, they have kept away themselves from any euphoria, and they have not chased high-yielding loans at the cost of asset quality. That is the DNA of the bank, which I love the most. The bank had I would say last 2 years of a little bit of tough time, because when they wanted deposits, there was a tightening, and there was a liquidity deficit in the system. Now all those things have faded away. Now they have a deposit CD ratio which is under control, which is below 96%. And banking system is flush with funds due to CRR cuts, which are rightly done by the RBI. So I would say the stage is set. And I'm not saying from Q2 perspective, please be aware. And I would like to say to all your viewers also, this is a long-term structural high quality bet at a very, very reasonable valuation. And stock has not done anything great in the last 3-4 years because of these issues, which were actually not created by them. Actually, when the merger was done, they had to bring down CD ratio from 110%, so they are not growing. And liquidity was also absolutely tight. So now that CD ratio is in favor, liquidity is good, GST has been cut. So from Q3 onwards, I see them firing on all cylinders with top class asset quality. And valuations are very, very compelling. Where do you see PEG of 1 in the market? HDFC Bank right now, next year EPS is around 57 rupees.
Correct.
And if you reduce the subsidiary value, it's trading at exact 15 times. It can grow at 13-14% from next year.
Understood.
So PEG of 1.
So I think a compelling bet coming in for a HDFC Bank. Very quickly, how are you seeing a SBI if you have to pick a HDFC versus a SBI?
So I have both. I like both. From near-term perspective, definitely there are more triggers in SBI. See, today they got this 8,800 crore from Yes Bank stake sale. They have already raised 25,000 crore from QIP. Their margins will be more resilient this time. Their growth will be more. They have got huge value in their subsidiaries. So it's a large weight for us. And I would say that it continues to be. But after such a massive rally, as you know, I am not a buyer in this kind of momentum. While HDFC Bank has not shown any momentum. And I am seeing, because the Q2 might be the last quarter of slow growth plus some margin contraction. So people are staying away from it. So that is where I will buy today.
Right.
And from Q3, I feel HDFC Bank will start performing in a big way.
Okay. All right. The other pack of stocks that is in focus is the textile companies. Now, PM Narendra Modi lays foundation stone of Mitra Park in Madhya Pradesh. Textile companies have remained focused on the back of that, and we're seeing gains in a lot of these counters that will be participating in the event. And Jasmeet is joining us to give us all those details as to why is this important for textile companies. Jasmeet, what are you picking up?
Well, right, yes, thank you for that. Now, as you rightly said, this PM Mitra Park is a proposal of 23,000 crores and spread across 91 odd companies. Initially, we had 114 companies, but now we have 91 companies contributing towards it. We also have a couple of major listed players of textile who have contributed the land and the money for this particular project. Now, if you see Vardhaman Textile, they have invested 2,000 crores for a land worth 190 acres. And on the other hand, we have Trident, which has invested 4,800 crores for a land worth 180 acres. Now, what is this park and how will this benefit textile industry in large? While this park would help textile industry to go and modernize their techniques and reach global level, given the recent tariff impact, they would want to invest and push textile to reach major countries so that the entire risk is diluted. Now, well, this will also help them create major jobs. So the initial direct jobs are 1 lakh per park, while if you look at indirect jobs, they will give employment to 2 lakh plus people going forward. Now, if you look at the other set of news and which would help you understand why the textile stocks are in focus, well, this comes in after the India-US have started their negotiations negotiation for trade tariff again. Now, initially after the 50% tariff, that impacted majorly textile stocks, given that major textile players import a lot of the items to US. And 50% tariff, they would again get strangled by the competition and would not be able to proceed as prior. So that's the reason why the stocks are buzzing, given the negotiation talks are in progress. So it's something to watch out for how the negotiation turns out and how these stocks get focused in again.
Lots of news and lots of buzz around textile companies as well from here on. In fact, Kush, any charts that tell you where you would see further momentum from here on and which could be buy recommendations?
So two stocks stand out. A lot of them have done well in the last 15 odd sessions, but two stocks that stand out even today. One of them is Wellspun Living. Good moves on this one, very healthy volumes, key resistance levels of the past 5 sessions taken out. I think further upsides to about 135 and about 143 cannot be ruled out. Supports near 122 to 120 zone. So risk reward ratio still fairly favorable. And the second one is GoKex, Gokul Das Exports. Here too, very similar structure. Near-term resistance is taken out, 50-day moving average being cleared on the back of very strong volumes today. There is a gap on the upside near the 890 mark that could perhaps come into play for with the kind of run that the stock is seeing currently. So that will be your target. And on the downside, you can keep a stop loss near the 790 mark. So here too, fairly favorable risk-reward ratio. So Gokul Das Exports and Wellspun Living, these two stand out. A couple of other names also, but they're seeing resistances, so we perhaps skip that discussion for now.
Parag bhai, anything that you are liking in this space? Because on one side, UK FTA was positive. There is EU FTA also under negotiations, but US tariff still remains as an overhang. But India has high aims when it comes to textile exports. $100 billion is something that they're expecting by 2030. Anything in the space that you're liking?
So basically, see, I'll tell you, the communication between India and US has definitely improved. And I am also hoping that this tariff is reduced as soon as possible, because that will prevent many job losses also in jewelry and textile segment. But I would say that I don't want to take such a bold call right now after a rally that, it is going to happen in a very short term. So I would like for correction. But of course, the stocks which Kush mentioned, of course, those are in my radar also, whether it is Wellspun Living or Gokul Das Exports or Vardhman Textiles or Lakshmi Machine. These are the stocks which are under my radar and which I would like to buy on dips. But definitely after such a market nowadays moves on narratives, right? So market has taken a narrative that tariff is going to be reduced for sure. But I would like to see more clarity on it. And just to be on the safer side, right now, I would like to buy financials. Like, for example, City Union Bank is a bank which is perceived to be a textile lender or MSME lender. But our channel check suggests that there is very, very limited exposure. They are doing extremely well, 15% growth, 1.5% ROA, PE is just 10x. So I would like to bet on such names which are perceived to be, having problem, while actually there is no problem. So I would say that something like those names are, or for example, in a capital goods, as we mentioned last time, a stock like LG Equipment, which has 25% exports to US, and that stock has corrected 25-30%. Excellent quality promoter, debt-free balance sheet, high ROC business, and across the cycle delivered fantastic ROCs. And so I would like to say that I would like to buy City Union Bank or LG Equipments of the world, even if this tariff is about to reduce.
Right.
Yeah.
Right. So that's with regards to banks. But thank you, Parag bhai, so much for joining us on the show and getting your views with regards to what's happening with the banks as well. Kush, stay with us. As we slip into a short break, let's look at some key questions. What will drive the next leg of growth in India's story, and how should retail investors, plan their strategy from here on? Let's listen to the cupboard coming in from Christopher Wood, Global Head of Equity Research Strategy at Jefferies.
Are in place. The RBI has already eased a lot. I don't think the RBI needs to slash interest rates dramatically more, because they've already eased policy a lot, and you don't want to undermine the currency. So I think basically the policies are in place.
You know, Chris, we're also speaking on the occasion of Prime Minister Modi's 75th birthday. And some of the programming that we're doing today is to look at his government's policies and the impact they've had. You've been vocal about what this government has been doing and the impact of its policies. Anything you'd want to add there?
Well, no, I mean, just there's obviously been dramatic progress in India under this government. That's just obvious. So if I had to say one obvious area is the huge pickup in government capex, which has created huge improvements in infrastructure and therefore, created a much better framework for the private sector to operate in.
You know, in terms,
I think another area to mention is the bankruptcy reform process, which appears, obviously it takes time, but that is a major change in India. Another major dramatic change has been the Real Estate Regulation Act, which I think creates a much more sustainable property cycle than we saw in the past. So those are three specific areas I'd mentioned. There are many more though. And obviously GST is another example.
Yeah, in fact, Chris, for a lot of people, GST 2.0 was arguably one of the biggest reforms. So one big bang reform done, RBI cutting rates as well. What else would you want, let's say over the next 12 months from the Indian policymakers?
Yeah, but when you talk to the policymakers in this third term of the Modi government, there's been a lot of talk about addressing what I've heard referred to as regulatory cholesterol, thereby improving the ease of doing business in India. So it's easy to talk like this, but clearly I think the government's extremely focused on this. And that I think is a very healthy focus. And that's something that's can't be done just by pressing a button. But everything I'm hearing makes me think this government's very much focused on this whole issue of ease of doing business, which can only really be implemented at the bottom-up level.
A decade of bold reforms, market-moving decisions, and global leadership. This 17th September, India's most transformative leader, Prime Minister Narendra Modi, turns 75. His decade of change shaped the economy, markets, and world's view of India. What do business leaders and millions of Indians say about the Modi era? Catch all about Modi at 75, India Rising. Only on NDTV Profit.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप। the best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term? Buy, sell or hold?
The answers you need straight from the experts.
Welcome back. You're watching India Market Close on NDTV Profit and celebrating Honorable Prime Minister Modi's 75th birth anniversary. Joining us to give his wishes and describe what this Modi era actually means for the government, for India Inc. Joining us is Dr. Arvind Panagaria, Chairman at 16th Finance Commission. Dr. Panagaria, welcome to the show and always a pleasure to speak to you. My first question coming to you is, we're talking about Honorable Prime Minister Narendra Modi's 75th birthday today, a Modi era which is in the making or already made so far, 11 years that we've already spoken about. How would you describe this entire phase and what would you have to say?
Thank you, Maima. Really pleasure to be here on the 75th
I'll just correct, this is Hiralia.
Okay. Hi. No, I think a great pleasure to be speaking with you on the 75th birthday of the Prime Minister. I think this is this has been quite a ride for 11 years. And India really stands very transformed. I like to describe Prime Minister Modi as a holistic Prime Minister. You know, he's not, a few major agendas for policy or for development and so forth, but he really is holistic. He looks at everything, and this is something I kind of learned from the very beginning when my interactions with him started around in 2012 or 2013. He worries about the infrastructure, he worries about policy reform, he worries about defense, he worries about foreign policy, internal security, Northeast development, sports, you name it, roads, ports, airports, railways, digital infrastructure. It has been a remarkable 11 years of transformation. And he really started, if you remember, in his initial years in the first term with this idea of Sabka Saath, Sabka Vikas. And, 11 years later, indeed, if you look at, as an economist, one of the things I look at is what has the government done for poverty reduction. And it's quite remarkable, the numbers that you get. Poverty 2011-12 was something of the order of about 22% nationwide, using the Tendulkar poverty line, which is what we normally use.
Right.
It's now down to 3%. And there has been a reduction in poverty all around. Whether it's Hindus or Muslims or Christians, Sikhs, Jains, or another way, scheduled caste, scheduled tribes, OBCs, all around, I've done all the numbers because this is a subject I study very closely. And there has been massive reduction, so for the Hindus, poverty fell from 22% in 11-12 to 3% in 23-24. For Muslims, it fell from 24% to just 2%. For scheduled castes, it fell from 30% to 3%. OBCs, 21% to 2%. So, there's been all around progress. And that is what a holistic prime minister really does.
And I 100% agree with you, Dr. Panagaria. Mahima also joining in. Just want to understand with regards to the recent reforms that everybody in India is talking about, that is GST 2.0, and not just that, the kind of reforms that have happened over the years under his reign. Your new IBC code, your Jan Dhan Yojana, there are PLI benefits that have come in, tax benefits, rate cuts, and so much more, right? That have had impact on India Inc. Your view with regards to all of these reforms. And a second part of that question would be, what more, is India planning at the whole level to achieve that Viksit Bharat mark by 2047?
Right. So for the reforms that have already happened, you rightly mentioned, the GST reform, the IBC, the bankruptcy code. We also had, by the way, a major reform of the corporate profit tax. The rates were brought down from close to about 30% to 24-25%. The second GST 2.0, of course, another major reform. Don't forget the personal income tax reform, where in the last budget the exemption limit was raised to about 12 lakh rupees. There's been all around, and the impact of it can be seen in both growth and, as I mentioned to you, different poverty reduction numbers. So all that has happened. On what is to come, I think the next big thing that I am expecting is what would happen as a result of the ongoing trade negotiations. Now India is very well poised. It's already underway, that it is going to be home to many of the multinationals in the way that China became in the 1990s and 2000s. The same process is underway in India currently. And so we need these free trade agreements, which are being negotiated currently, both with the United States and European Union. Some have already been done, the one with the UAE, Australia, these were done earlier. But the two big ones will be the one with the United States and the other with the European Union. Those are, I think, going to be two very big reforms, in my opinion. It'll really create a marketplace without any friction, which is incredibly large. You could move goods between the United States, European Union, and India once these agreements are in place without any friction. So that is going to be a big deal, and for any of the multinationals, that would actually make India an incredibly attractive location, because India already has a very large labor force, both skilled and unskilled. So we got that resource there, and it's an open economy. But what we need now, as in kind of next level, is the free trade agreements with these two entities.
Okay. That is interesting. And how are you assessing India's current position in global trade? Where are you seeing the opportunities? Because all this while we were talking about China +1 as a strategy. Bilateral talks with regards to China have also started. Tariff negotiations, pretty much we are seeing some positive commentary that's coming in from both the sides, US and India. Where do you then see India fitting in now?
So I think I'm very pleased to see that, there was some bit of derailment of the negotiations, but negotiations are back on track. I'm sort of very hopeful that the agreement with the US will be concluded. And if that happens, then I think, also the agreement with the European Union will become more likely. So those are the two, and that really places India incredibly favorably, pretty much in a situation in which China was around early 2000s, because we got the massive workforce, as I said, both skilled labor force as well as less skilled. So we can really cover whole spectrum of industries, labor intensive, starting from apparel and footwear all the way up to the most capital intensive industries, aircraft and and machinery and pharmaceuticals and whatnot. So I think the market will enlarge, and this is what will give us the big kind of jump, both in trade and in growth.
Okay. And my last question coming to you is the roadmap to 2047. What is the kind of growth that is needed to achieve that outcome that Prime Minister Modi has so far? And from here on, what is it that will lead to that 2047 kind of agenda?
Yeah. So, the reforms that we've been talking about, we also need perhaps some reforms in the labor markets and some reforms in the land markets. In India, land tends to be rather expensive, urban land in particular, which is where the industry locates itself. So I think the states are doing, some Andhra Pradesh, Uttar Pradesh, some of these large states, Telangana, Gujarat. So they've been doing, but we need a little bit more on land side so that land becomes a little less expensive for the business enterprises, and some labor market reforms as well. But I think if we do all that, and some bit of deregulation will be required, which is on the radar screen of the government. The government has appointed these committees which are looking into what can be done. So we'll be well on our way. The kind of growth we will need, we'll need about, in dollar terms, in real dollars, we'll need a growth rate of about somewhere between 7.5% and 8%. But this is something that we have done. If you look at our history from 2003-4 to 2017-18, we easily did more than 9% growth in real dollars during that period. So all we need to do really is the next 2 decades, if we repeat what we have done during this period of 2000, just until before COVID. COVID, we declined a little bit, but we still did about 7.5% in real dollars. So we are pretty close. We have done the kind of growth that is required over the next 2 decades. So it is most certainly well within our reach. It's not something, that we have not done in the past. We have done it in the last 2 decades.
Absolutely. Growth, something which is achievable, reforms on the radar as well. Thank you, Dr. Panagaria, for joining us on the show. And it was a pleasure to speak to you as well on NDTV Profit. But moving on, staying with one of the reforms, we are talking about GST 2.0 right now, where the policy or the mandate was the GST rate cuts are coming, and this has to be for the benefit of the consumers. The price cuts that were anticipated have started to come in yet. Heritage Foods is one of the companies that we're looking at, and I think they've taken price cuts already, and that is the news that we've picked up so far owing to GST reforms. We have Srideep Kesavan, CEO of Heritage Foods, on the phone line to talk to us about the same. Mr. Kesavan, welcome to the show, and always a pleasure to speak to you at NDTV Profit. My first question coming to you is, well within the timeline, 22nd of September is when GST 2.0 was expected to be rolled out. You've already started taking price cuts. If you could give us more in terms of what is the quantum that you've started and in which all products?
Thank you. Pleasure to be on your show. It's an immense opportunity for all of us in consumer goods, especially in the dairy segment. And I say this because dairy is one category which touches 100% of all Indian households. So while GST reforms impact so many various categories, but I guess dairy probably has the biggest impact because of how broad-based it is, and the frequency of purchase of dairy products are so high. We have already announced that we will be passing on the entire benefits of the GST rationalization to the consumer, and we have already started preparing to take productions so that on 22nd of September or a day before, we have these new prices on the shelves. As per the GST Council's decision, the products that are primarily benefited are, first of all, is paneer and UHT, which is long shelf life milk. It's not the fresh milk, it's a long shelf life milk. And paneer have moved from GST rate of 5% to 0%. With this, we at Heritage, we are expecting the paneer prices to drop by 24 rupees a kg, and the milk in Tetra Pak to drop by 3 rupees a litre. From 75 rupees, our prices will be 72 rupees going forward. Similarly, a very big win has been on ghee, butter and cheese. Across ghee, butter and cheese, the government has rationalized the GST prices from 12% to 5%, and such a festive cheer because it comes in such a timely manner just before the Dussehra festival, where people would be buying ghee and butter in quite large quantities. And the prices across ghee, butter and cheese, we expect to come down by 50 rupees a kg.
Oh, interesting, Srideep. Srideep, hi, Mahima also joining. Just want to understand, this is all your value-added products that you talked about where price cuts will be seen. But with regards to regular milk, there will be no price cuts is what I'm understanding. And this is something that consumers are generally very price sensitive also towards. Just wanted a sense there. And secondly, your any kind of impact because of this change on your business from a shorter term perspective?
Thank you, Mahima. So first of all, GST on regular fresh milk, what people buy on a daily basis, was already at 0%. It was already a beneficiary of nil GST, so there is no impact on that. The prices continue to be as before. The impact will be on long shelf life milk, which would be a game changer for us in the long term. Maybe the impact may not be immediate. You know that in the peri-urban and tier 2, tier 3 cities, many of the consumers actually depend on long shelf life milk where fresh milk may not be available. And we expect with this 5% GST cut on that, serious expansion can happen into those urban, newly coming up urban areas over many years to come. But other than that, you're right. The impact is basically on 3 buckets, which is long shelf life milk and paneer from 5 to 0. Ghee, butter and cheese moving from 12 to 5%. Like I said, it's about 50 rupees a litre would be the benefit consumers have. And we have ice creams, which have significantly moved from 18% to 5%. So we are actually expecting a significant cheer on ice creams as well, especially ice creams that people buy for home segment, for home consumption. Like, for example, we have close to 100 SKUs on ice creams. Right. If I could just talk about one of the SKUs, like, price could come down from 160 rupees to 140 rupees MRP.
Okay. Okay, interesting. All right, Srideep, thank you so much for coming to us at such a short notice, and of course taking up the time and speaking with us. Thank you so much for that. All right, viewers, it's now time for the Herd on the Street segment. As always, my colleague Soumit Sarkar is joining us with all the chatter from the dealing room. Soumit, what are you picking up today?
Well, firstly, it's on comments, and dealers are indicating that there are sell flows on institutional desk on expectations of weak export data that has come in for comments. So there are some sell flows on institutional desk at higher levels. For Genius Power, there are the buzz on the street is that there could be a potential block deal, and hence some sell flows have been seen on HNI desk. For Gujarat Fluoro, the block deal was today by the promoter side. The deal happened at the lower end of the price band. The demand was not that quite strong as what dealers are indicating. And among mutual funds, only Axis Mutual Fund and Mirai were among the prominent buyers for Gujarat Fluoro's this block deal. So keep an eye out for Gujarat Fluoro. The block deal data that will come out post-market will be important to track. For Bajaj Finance and ITC, dealers are indicating that there are sell flows on large HNI desk. Dealers indicate that some negative news flows is expected in both these counters in trade. So keep an eye out for Bajaj Finance and ITC. For Kalyan Jewellers, there are buy flows on DI desk. Mutual funds have been buyers in this counter in trade today. The dealers are also indicating that the company has given strong commentary in one of the non-deal roadshows that was held today in Singapore, and that's the reason we are seeing such kind of a move where it comes to Kalyan Jewellers. And lastly, when it comes to Samvardhana Motherson, smart investors have started adding positions in this counter at lower levels, and dealers are indicating that they're expecting a returns of close to around 25 to 30% over the next 3 months. So keep an eye out for Samvardhana Motherson as well.
Thank you, Soumit, for those names. Gujarat Fluoro is an interesting one as well on the back of the block deal that Soumit was indicating right now. The demand is not quite strong. That is what is coming out so far. And Kalyan Jewellers as well. Strong commentary and strong moves on that one. Kush, anything that actually you think could be a good opportunity, either a buy or a sell, from all the Herd on Street stocks that Soumit has got to us today?
Yeah, a little surprised on Cummins. Although yes, I mean it's had a good run, some profit booking par for the course, and that club with whatever Somit has put out could see some profit booking. But I would actually be a buyer in Cummins, closer to 4,039.50 odd level. So a buy on decline setup. Genus Power also very interesting setup here. The base formation around 325 was rather strong. Volumes haven't really been through the roof, but the price action club with fairly decent volumes suggests that further upside to 355 and about 370 cannot be ruled out. Stop near 335. So yeah, Cummins and Genus Power, good moves. Cummins on declines and Genus Power as a continuation of this move could be an interesting stock to watch out for.
That's with regards to Cummins India. In fact, also let me get in Vineet Bulinchkar from Ventura Securities. Vineet, good afternoon and welcome to the show, and always a pleasure to speak to you at NDTV Profit, and thank you for the patience and for waiting by. Overall, a good sentiment in terms of the markets right now. Bank Nifty, 10 or 11 consecutive sessions of up move that we are seeing. A good buying interest coming in the PSU banking space as well right now. We just spoke to Parag Thakkar some time back, and he's absolutely positive with regards to SBI and HDFC Bank. How are you looking at the banking and the financial names right now? And would you be a buyer? What would your top picks be?
So we are quite positive on the PSU banking space. We like Canara Bank, SBI. Obviously, you mentioned HDFC Bank, which is a perpetual buy for investors. So these are some of the stocks that we like, and the reason being, if you see SBI is among the large caps, which has really not fallen as much as the index has done. So we think that SBI could be a massive outperformer going ahead from here. And SBI will also benefit from the stake sale in Yes Bank and the impending monetization of its subsidiaries. I think that's going to be a very strong one on the cards. So that's a top pick in the banking sector. And the Canara Bank is also going to see two of its subsidiaries list. So we expect some sizable upside going there too.
All right. The counter that has been the star of markets today is going to be Urban Company. What a stellar listing it has had. The listing gains of around 60 odd percent, and currently also seeing gains of about that 66 odd percent. And on that occasion, I think we decided to do a bull versus bear on the segment, so that investors can consider both of the aspects and then make a choice. In terms of the listing gains that we saw today, of course 60% plus a 6-7% more gain we've seen in the markets today. But with regards to where valuation stands, extremely expensive with regards to where valuations are concerned for something like an Urban Company, currently trading at 16 times price to sales. Generally, on an average, a platform company has valuations of around 8 to 9 times for price to sales, but this is trading at 16 times, so almost double of what generally platform companies trade at. So valuations looking very expensive. Secondly, in terms of where the financials are concerned, the company has achieved break-even in FY25, but the question really is whether it is sustainable, and if this is a sustainable path to profitability or not. Of course, the management did come out and say that their core business is absolutely going to be running on profitable basis. The next one that we are talking about here is, we talked about the financials, but the next one is even in terms of revenue, it's grown over 38% YOY in FY25, but competition in this space is heating up. There are startups coming in which have got heavy funding, and that poses big competitive threat in terms of where Urban Company stands. Of course, right now, for this particular business, it's very much like where Eternal and Swiggy also started. So it's more or less like a duopoly, or maybe three players in the particular space. But of course, competition is heating up. In terms of the SWOT analysis, when we did here, the training skill development is a moat for Urban Company, and they always train their professional, their service providers or employees. But the idea here is that dependence on service professional is very high for them. So that is probably one of the threats, and because competition is also coming in, this could be one of the factors that they need to work on retention of their employees as well. Next, in terms of the cross-selling, this comes easy to them. This is what management said, that if a customer generally comes to Urban Company and takes one services, cross-selling for them becomes very easy and stickiness is very high for them. But on the other side, implementation of new offerings will be a key. They have recently launched Insta Help, and we'll have to see as to how quickly and how widely can they actually go ahead and implement this kind of service. In fact, we spoke to the management about all of these things, listening to what they had to say.
The success of this IPO and the way investors have showed faith is more a promise of the future rather than where the company is today. We recognize that we are still a very small company in the scheme of things, just about break even last year, less than 1% of the entire home services industry. And the onus is on us now to work hard, organize this industry, bring standards and quality control for customers, and also help hundreds of thousands of service professionals lead dignified, respectful, middle-class lives, and do it all in a way that it is sustainable, profitable.
After achieving break-even last year, the key is sustenance, and from sustenance it comes to growth. And that's what any investor would look at from a company which is just newly listed. What is that strategy going to look like in terms of sustenance first and then growth?
I think one of the things that we take very seriously is making sure that we disclose to investors very, very transparently and clearly how we are building this company and what is the picture as is. And I think that's something that we will continue to do. Bad news will always travel first to investors. Good news can wait, but bad news will always travel first. And we will try to be as thorough in our disclosures as possible so that investors can make judicious decisions going forward.
Okay, let's talk a bit about the numbers. Varun, I'll come to you on this. You're of course EBITDA break even. Do you see that pathway sustainable is the first question, and then what is the margin picture looking like going forward?
I think for the core business in India, we do believe it's already operating at a healthy margin. So if you see the whole of last year, we did about 3% odd as a percentage of net transaction value, and in the first quarter we did about 4%, and in that quarter we had not segregated Insta Help away from the core business, but we did disclose in our RHP that had it not been for Insta Help, it would have operated at about 5.2% adjusted EBITDA as a percentage of NTV. So it has been seeing a very healthy trend. It was loss-making 2-3 years back. As it has scaled, that operating leverage has transferred into profitability, and I think for the core business in India, given where it is, our goal will be to continue to operate it profitably. FY25, about 77% of the revenue came from India core services, 13% from international, and about 10% from native.
So that's with regards to Urban Company. Strong listing, 60% up move right now. Vineet, in spite of this initial listing day gains, would you still be a buyer, or would you wait for some bit of a correction? What is your view in terms of these new age tech companies, and where would you peg Urban Company as compared to peers? Because the valuations are slightly on the expensive side, and as Mahima was telling us, would you be with the bear case or the bull case at this point in time?
So, we were looking at about a 30% upside in the stock. The fact that it's gone up to 60% is not surprising because, it's a very unique proposition, and their ability to offer solutions and solve problems for, consumers at large, especially in the maintenance space. I think, they have got a very sticky business model, which is very difficult to replicate. So I think the market is giving it a premium on that.
Okay, so that's a interesting comment that's coming in as well, from Vineet in terms of where Urban Company goes. But Vineet, stay with us as we slip into a short break. Over the past decade, India's economy has undergone major changes, from tax reforms to digital payments and financial inclusion. As the country looks ahead, we take stock of the key moves, their impact, and the road still to travel under the leadership of Prime Minister Narendra Modi. Let's listen in.
मैं
नरेंद्र दामोदर दास मोदी ईश्वर की शपथ लेता हूं कि
When Narendra Modi became Prime Minister in 2014, he promised transformative changes. 10 years on, his government's reforms redrawn the India's financial maps from crackdown on the black money to digital payment revolution. Here's a look at his big, bold decision and unfinished agenda.
One of Prime Minister Modi's first moves, a special investigation team on black money. A Supreme Court directive the previous government never acted on. But the defining gamble came in 2016. Demonetization. Overnight, 86% of India's currency vanished. The aim? Crush black cash and counterfeits. The result? Chaos at banks, a short-term growth dip, but also a surge in digital payments, laying the foundation for today's cashless economy. In 2017, GST rewired India's messy indirect tax regime, collapsing 17 levies into one. Collections jumped from 45 lakh crore to 1.8 lakh crore in a decade. A GST 2.0 this year further simplified rates. Well, on direct tax front, corporate taxes were cut in 2019, making India more competitive but widening the fiscal gap. By 2025, the zero tax threshold rose to 12 lakh, easing compliance for millions. Banking cleanup was equally sweeping. The 2016 Insolvency Code forced bad loan resolutions, pulling NPAs down from 11.2% to 2.8%. Public banks recapitalized with 3 lakh crore, swung back to record profits. Financial inclusion scored. 56 crore Jan Dhan accounts opened and UPI exploded to 18.4 billion transactions a month, putting India on top of the global digital payments chart. The industry saw mixed results. The PLI scheme attracted 1.61 lakh crore in investment, but manufacturing share of GDP is still stuck at 17%. Asset monetization, leasing highways and infrastructure, all of this showed promise but lagged in execution. The pandemic tested the Prime Minister's fiscal caution. Relief packages and credit guarantees softened the blow, and by 2023, India was back as the world's fastest growing major economy.
In 11 years, Modi reforms has digitized, globalized and formalized Indian economies. But challenge remains on the dormant Jan Dhan accounts, tangled taxes and land labor bottlenecks. As the Prime Minister turns 75, the economic base is stronger than ever. However, the real test is now to deepen the gains and ensure sustained growth.
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द NDTV ऐप।
Welcome back. You're watching India Market Close on NDTV Profit. We still have Vineet Bulunchkar with us. Vineet, let's talk about few of the names which are buzzing from the large cap space. Tata Consumers, over 4% is the kind of up move that you're seeing in today's session. Would you still be a buyer? Because the gains are absolutely strong. The stock is at the day's highest levels right now. What, according to you, is working for it?
So, yeah, their new age verticals are growing very handsomely, and they're able to lift the overall rate of growth for the company. And, margin, maturity of the margin profile is also steepening. So I think that these are good prospects for the stock, and that's why it's going up.
Okay, would you be a buyer?
To be very honest, we have a sell call on this stock because it doesn't fit into our DCF modeling that we do, and we have a sell call with a target below 900 on this.
Sell call below, a target of 900 is what you're looking at on a Tata Consumer. In fact, let me get in Shivangi Sarda from Motilal Oswal as well. Shivangi, welcome to the show and a pleasure to speak to you as always. Few of the top movers in terms of today's session, if you have to look at the large cap space, Tata Consumers, little over 4%, SBI, BEL, Maruti, and a Kotak Mahindra Bank. Let's look at all the 5 names, the kind of green shoots that are emerging here, and the moves that you're seeing. Which would your top pick be?
Good afternoon, Hiral. Thank you for having me. So we've seen that while the indices have, witnessed a good comeback, and I think buying interest emerged quite well. The put-call ratio is, above 0.3 levels, which clearly indicates the comfort of the bulls, and Bank Nifty is trading above 55,500 marks. So overall, I think across board, buying can be seen, and the focus would be some of the banking, consumer, of course, has been seeing a good long build-up over here as well. But the major focus would also shift on some of the selective IT names.
Okay. So you're saying select IT names is where you would be positive on. What names would that be?
So talking about the IT names, there has been a good movement because of the dollar index movement. So of course there has been a clear direct, impact on that. So some of the names like Coforge have, witnessed good amount of short covering move over here. Of course, it's a little down from its day's high levels, but looking quite positive. And apart from this, the banking stocks, especially the smaller banking name stocks, are looking quite well. Focus would be on the PSU names.
Okay, so that's with regards to the PSU banking space as well. In fact, Shivangi, anything that you would like as a call from the PSU banking space, what would your top strategies be?
So from the PSU name, of course, I'm liking PNB, which has given a fresh breakout with volume. The kind of surge that we've seen has been seen after a really long period of time, with Bank Nifty outperforming and finally trading above 55,500 will be a good trigger for this one to move. Of course, it's also surpassed its previous hurdle zones of 108 and now acting as a crucial support levels. So recommending a buy here with a target of 115 and a stop of 110 levels.
Okay, so Shivangi, that's with regards to where PNB comes in, and that becomes one of your top picks as well as we speak right now. But moving on, Vedanta is another stock that I want to discuss about with Vineet. Vineet, how are you looking at Vedanta? Because the stock is under pressure today. The hearing has been deferred to the 8th of October. This is the third time where NCLT has deferred the hearing. What would you advise investors to do with the Vedanta?
I think, if you try to time the, competition commission's hearings, it will be very difficult to gauge when it will actually happen because, in the case of some other stocks, we have seen government judgments being postponed for no apparent reasons. So usually I do have patience on this stock. I think there is a lot of value to be gained after the, the demergers happen. And currently, with the interest rate cuts impending in the US, I think commodities are going to be on a tear going ahead.
Okay. So that's with regards to where Vedanta goes. But moving on, some of the top newsmakers of the day. Let me head across to Vansh to tell us what's happening with the Aditya Birla Fashion, Mahindra Lifespace, and One MobiKwik. All of three buzzing either on the upside or a downside. Vansh, what is working for these companies and something which is not?
Well, yes. So let me start off with Aditya Birla Fashion first. Now, the company has launched its own brand called Owned. Now, this is a new brand name, new identity, and new contemporary that the company has laid out. And in fact, the company aims to accelerate its play in the value fashion category as well. And the company plans to convert the existing Style Up stores into owned outlets as well. Also, the company plans to expand its footprint to 100 stores by end of this financial year. And also, in terms of the guidance post this demerger, the company is expecting to triple its revenue in the next 5 years, and they're expecting EBITDA margins to expand to about 7% from the current loss-making margins, and they are also targeting 18% ROCE by FY30 as well. And lastly, they are also looking to open 250 stores every year. And they are also looking out for a franchise-owned stores by 70% plus franchise-owned stores by FY30 and 100,000 stores in small town as well. Second, we have Mahindra Lifespace. Now the company has been chosen for two society redevelopment project in Chembur in Mumbai. Now it's also important to note that this company realizes the revenue once the project has been completed and has been handed over to the client. Now the gross order value for these projects stands at about 1700 odd crores, and the two projects span for a total of 4.4 acres as well. Third on my list is One MobiKwik. Now the company has reported an incident involving unauthorized transactions. Now they have some registered merchants and users that have colluded to claim illegal settlements. The activities were identified in limited locations with Haryana, and the FIR has been filed for 40 odd crores, and the company has already recovered 14 crores, and the current estimated net impact, the current net loss impact would be about 26 odd crores. So these are some of the stocks that remain in focus.
Thank you so much for that, Vansh, for getting us the quick updates. In fact, Vineet, let me come to you. Aditya Birla Fashion, Mahindra Lifespace, firing on all engines. MobiKwik as well has a good run, but starts to see some bit of selling pressure. What would your advice be on these three counters?
I think, the Indian retail is going to do extremely well, and most of the, retail companies during Q1 have announced growth plans, and they're expecting growth also to pick up. So confidence comes to us that these sectors should also perform, and ABFRL is making the right noises. We think that these stocks can be accumulated. As far as MobiKwik is concerned, it's more of a buy on dips, because we've seen some very large volumes, and the management has also guided to QOQ 30% growth with margins stabilizing around 35%. These are, good omens to hear from the management, and we think that the stock should do well going ahead.
That's One MobiKwik. The stock should do well going ahead. But let's quickly also address a few of the volume buzzers in trade today. I have my colleague Jasmeet who's standing by to tell us which are the stocks which are buzzing on volumes and good moves there. I think we don't have Jasmeet on that, but you have a KNR Construction. Strong moves in terms of today's session, 5% up move, volumes up almost 119 times its 30-day average. DCM Shriram is another one which is seeing good volumes. Sidhu Trade Link, Gujarat Fluoro, there was a block deal on that one as well as the Lux Industries, which is seeing good volumes. On the back of these volume buzzers, Shivangi, let me come to you. Would you recommend anything that comes to your radar from these names?
Of course, we've seen a good amount of volumes and price action here in today's trading session. But of course, these names have to sustain above these levels for a good sustainable up move. So I would recommend a little wait and watch here. These counters and some of the PSU names counter which are gaining attraction.
Okay, so those are the volume buzzers that you're looking at as well in terms of KNR Construction. That comes to Shivangi's timeline from here on. Apart from this, let me look at a few of the other names which are actually seeing some downtick. Bajaj, Finserv, ITC, both seeing cuts to the tune of little over 1%. Bajaj Finserv, SBI Life, HDFC Life also trading under pressure. So there is some bit of pressure in terms of life insurance companies. Vineet, your views on Bajaj Finserv and SBI Life and HDFC Life?
In my opinion, these blips are temporary. Once the GST rolls out, the 2.0, we will see some very strong demand for stocks from the insurance sector. And especially your health insurance should do well. I believe that, premiums might just increase and consumers might want to, pad up on the GST that they're saving up. So we will not only see good growth in terms of average premiums, but we'll also see number of policies also getting added. So growth factor should get a kick up here, and we remain buyers on declines.
As a part of our special coverage on PM Modi's 75th birthday, let's see how broader markets have performed during Prime Minister Narendra Modi's more than 11 years in office. Jasmeet brings us with all the insights on how broader markets have done.
Well, right, yes, thank you for that. Let's quickly understand how the Nifty mid-cap have done in this particular tenure of 11 years. Now, if you look at the mid-cap 150, the overall return they have given for the last 11 years is 333%. And if you analyze it over the annual return, the compounded growth, it's at 17.7%. Now, if you look at the top gainers in the stock who have performed really well, the starting off with Minda, which has given 18,000 odd % return over this tenure. But if you look at the compounded growth, it's at 60 odd %. While there are set of 5 companies, that's KEI, we have KPR, we also have APL and Solar Industry, which have given the compounded return in the range of 40 to 60 over the last 11 years. Let's quickly understand how have the small cap have performed altogether, the 250 small cap. If you look at the return from last 11 years, they are at 282% and compounded at annual level, they give a return of 14 odd %. And again, here the top gainer, that is Ola Electric, that's a green tech company. It has given a return of 14,000%. When you analyze it on yearly basis, it's at 56 odd %. If you look at the stocks, they have been ranging at from 44 up until 56% of annual return in the tenure of Shri Mr. Narendra Modi. So these are the stocks on broader market basis.
Okay, Darshmi, thank you so much for bringing us those details. Shivangi, quickly, your BTST ideas.
So, Mahima, my BTST idea would, of course, include a PSU named stock, which will be CNB. It has attracted a good amount of open interest, and we've seen that the stock has actually, had the tailwind of the Bank Nifty as well. 15 and the support of 109 levels.
Okay, all right. So that's with regards to where Shivangi's BTST is concerned. Shivangi, a lot of other names that have seen significant amount of gain from its day's low point. That includes something like DCM Shriram, India Pesticides, Red Tape, even Banco Products is seeing that kind of gains. Anything in particular that you're liking from this stack?
Of course, ECM Shriram has witnessed quite a lot of movement today, and we've seen a good amount of volumes adding up. The stock had been beaten down from the last many weeks, and we've seen a reversal here coming in and recouping half of its loss from the previous month. But of course, now it needs to hold above 1350 levels for the next leg of rally to continue in this one.
Okay, so that's with regards to DCM Shriram. But thank you, Shivangi, so much for joining us on the show and giving your views and your top trading bets as well. In fact, we also spoke to Samir Arora, founder and fund manager at Helios Capital, about his top sectoral bets. He remains bullish about financials, but remains worried about the IT sector. Let's quickly listen into what he had to say.
If you look at the 3 pools, one pool is financials. And the financials, which are dominated by the big banks, they have had a below 10% type of growth because of interest rate cut and NIM compression, which they themselves are saying, and everybody agrees that that is a matter of 1 or 2 quarters, that from next year, because this becomes stabilized and the interest rate cuts pass through to the deposits and all, that over time that NIM goes back. And generally the thumb rule is that the financial sector or the banking sector grows about 1.5% to 1.7% of GDP in nominal terms. So you will get back to that 14-15% growth. I'm only worried about the IT sector, but the IT sector today weight is about 10-15% because they are not going to grow 15% like or even higher than they used to grow in the past. Maybe they grow from 3% to 8%. So that compression will be there. But even the consumer sector now, whether it is one-off or it is catch-up or it is pent-up, but you're going to have a massive 1 or 2 months starting on whatever, 22nd.
Okay, so that's the view coming in with regards to where, Samir goes, and IT sector is what he's worried about. Vineet, what is your view with regards to IT?
I think you should get out of IT stocks the sooner the better. I think there is going to be a negative domino playing out in the US, and we expect that to, kind of have a very bad impact on the Indian IT service companies. So we are advising clients to book profits out here and get into domestic themes.
Advising clients to pay the domestic theme right now is Vineet's view. Vineet, thank you so much for taking out the time and giving us all those insights. Always a pleasure having you. All right, viewers, let's take a quick look as to how the markets are closing for the day. Well above 25,300, 30 points above that 25,300 levels for the Nifty 50, up 0.4%, almost 93 points of an uptick that we've seen in trade today. So well above that 25,250 mark that Hiral was talking about. So the momentum is expected to continue from here on. The Nifty Bank seeing gains of about 0.6%, outperforming the Nifty 50 as well, largely led by the PSU Bank. Let's also take a look at the Nifty 50 heat map, and that will tell us as to how stocks have performed. Tata Consumer leading the pack with 4% of gains, followed by something like an SBI, BEL, Maruti, Kotak Mahindra, Ultratech. So a lot of banking names combined with something like a Tata Consumer and some auto names doing well in trade today. Something like an Ultratech, Shriram Finance and Trent also seeing gains of about 1%. But something that's under pressure, Bajaj Finserv down 1%, Titan turned into red and down by about 1%. Hindalco down about 0.8%. ITC not riding that FMCG wave right now, down by about 0.8%, followed by HDFC Life, Eicher Motors and Tata Steel. Let's take a look at the advanced decline ratio, because that will tell us as to how broader markets have done throughout the day, and that entire chart has narrowed down. In terms of the advanced decline ratio, around 1400 odd advances versus that of 960 odd declines, which in fact started at 300. So declines, of course, have increased by the day, and the ratio is now almost 1.5:1, and that's where we are ending at. With regards to where the broader markets are concerned, the mid-cap 150, trading around 0.13% higher, so not as good as what the benchmarks have done. In terms of the small-cap 250, largely in line with how the Nifty 50 is done, up by about 0.5%. But some names in specific, BSE 500, let's try to pull that up and see what are the counters that have done really well. DCM Shriram, like we talked about, up 10%, LG Equipments up 6.7%, Kena Construction up 5%, Bank of Maharashtra with a gains of about 4%. Tata Consumer, a Nifty 50 name in that chart, quite an interesting one there as well. But something that's not done well today includes KIOCL down by about 5.5%, Aditya Birla Sun Life, Cohance Life, Borosil Renewables all down by about 2%. But most importantly, what to watch out for today post market hours, that will give you hints for tomorrow's markets. So the first thing and most important one, the FOMC interest rate decision, that will tell us whether the rate cut is coming in or not. In terms of corporate actions, these counters will be trading ex-dividend. That includes Jamna Auto, GMDC, Good Luck India and NLC India. In terms of some other names, Venus Pipe, Shakti Pumps, Quality Power Electricals, Hindustan Coppers are some names that will be trading ex-dividend. And in terms of stock split, there's Zydus Wellness that will see a stock split from 10 rupees to 2 rupees per share. So this is with regards to everything that you need to keep an eye on. But with that, we're completely out of time on this edition of India Market Close. But do stay tuned to NDTV Profit for more news and updates.
best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती है तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, द बेस्ट ऐप टू यूज इज द एनडीटीवी ऐप।
Thanks for tuning into this very special broadcast. And at the point of time when the India-US relationship seems to be thawing, if I can use that term, and people would want to know about what is it that some of the biggest global voices will be thinking about this, about the reforms, GST reforms and others, and the markets ahead, particularly in a year when the Indian markets, contrary to the past, have moved sideways. You can't think of a bigger and a better voice than Christopher Wood, Global Head of Equity Strategy, Jefferies, Tamanna.
Absolutely, and we're pleased to welcome him on the conversation with us today. Chris, great to have you with us here on NDTV. Thank you so much for your time. You know, I'm recalling your comments, and because we started the conversation in the context of the India-US relationship on your last note, where you talk about, and you call it out quite clearly, that perhaps what President Trump is not too happy about is not getting credit, what he sees as credit, for solving India-Pakistan or the ceasefire. Do you think we've moved some miles away from there?
Well, yes, the sort of vibes suggest we've moved a bit beyond that. So I think it's perfectly understandable why people's expectations that some kind of deal can be agreed have improved. And there's got to be, I would say, a 50% chance that something's agreed in the next few weeks, months.
Wow. Chris, in which case, you couldn't have chosen a better time for your conference, right? I mean, what's the mood now? The mood maybe 4 weeks ago would have been different. The mood currently would be palpably positive.
Yeah, but this whole tariff thing has not really hit the stock market that badly, right? So I think because in the first instance, no major listed companies are impacted. But if I'm wrong and we have 50% tariffs still in a year's time, then clearly there's going to be a macroeconomic negative ramifications from these 50% tariffs. And I certainly would never have expected at the start of this year that India would be facing 50% tariffs.
That's actually, you're right, Chris, that's something that took everyone by surprise, which is why, are you also seeing this thaw with a bit of a question mark? Let's see where this pans out. Or to your mind, 50% on tariffs on India is not something that's sustainable or feasible at all?
Well, to me, the base case is that it'll be relaxed by the year end. But if the demands from the US remain that India open up agriculture, then I don't believe there's going to be a deal. And if the demands remain that India stop buying Russian oil, then I don't think there's going to be a deal. But there is a potential for India to reduce buying of Russian oil simply because the price differential with world oil reduces. But that's a different thing from being ordered to stop buying Russian oil by the US.
Yeah, I think you hit the nail on the head. Ordered is the key word in that sentence. If I were to ask you very clearly and simply, what is worrying global investors right now when they look at India? Is it the 50% tariffs or is there something more?
No, it's not. I don't think it's the 50% tariffs. This is a year where clearly the FIIs have record low ownership in India. Our base case is that the Indian market is currently trading sideways. because we've got a situation where the market's supported by the incredibly impressive continuing domestic inflows into the mutual fund industry. And those inflows are helping to absorb the other feature of the Indian market right now, which is supply from the corporates, as corporates take advantage of the high valuations. So this supply is being absorbed by the mutual fund flows, and essentially India has been trading sideways. And I view this year as a year of healthy consolidation in the Indian stock market. And I'm hoping next year we see a pickup in earnings growth driven by a pickup in nominal GDP growth, which will allow the Indian market to do better. But we still have this question of relatively high valuations in the emerging market context, and we have the ongoing issue of equity supply.
So, Chris, maybe in the last 3 months, culminating into this conference, what is the most asked question to you from investors who read your notes or who've come to the conference to hear you?
Well, are you asking about foreign investors or from a foreign investor standpoint? Yeah, India is not being flavor of the month because one reason India's basically been trading sideways, but clearly India's been a big underperformer in the emerging market context, and that's simply because other markets have done well. So a year ago, China put in a major bottom, and definitely foreign investors. Fourth quarter last year, first quarter, I'm talking calendar year, first quarter this calendar year, foreign investors were selling India to fund increased investments in China. And that has made sense because China put in a major bottom a year ago at about 7-8 times earnings. More recently, the foreigners have been selling India to fund increased positions in Korea. Korea's done very well this year, and foreigners had to play catch up. And they've also been having to put money back into Taiwan. I'm talking about emerging market investors because Taiwan is the same trade as the US stock market running on the AI capex theme. So to me, the chances of returning to foreigners returning to India grow as we get near to the end of this calendar year, because hopefully we will start to see evidence of a pickup in growth caused by the various policy easing seen this year, be it RBI easing or be it the GST cuts. And clearly one positive spin-off of this US tariff situation is it accelerated the simplification of GST and the cuts in the GST rates. So in that sense, the US tariff thing will prove a medium-term positive.
Chris, for a lot of people, India is missing the AI theme, a couple of other big themes globally, but India has its own positives, right? So when people talk to you about that, oh, India doesn't have AI, so where is it that you can put big money to work? What is your message to them? Because I know you track India very closely for a number of years, right? Over the next 24, 36 months, what is top of mind for you when it comes to India? Investable